Welcome back to Worldwide Exchange. Time now for your morning call sheet. We start with Jefferies boosting its price target on Salesforce ahead of that company's earnings later this week, raising it to $3.50 per share. Jefferies citing a modest improvement in demand from partners for that bump. HSBC downgrading its rating on Moderna to reduce. It cites uncertainty around vaccination rates around its COVID and RSV shots. Also now, it's time for your global briefing. We're going to start with some M&A news. Alcoa making a $2.2 billion takeover offer for Australia's alumina. The companies operate a joint global mining venture. Alcoa made several offers for alumina before persuading its board to support a deal. Alcoa says the deal will make it less reliant on others to supply its refineries and better able to weather swings in commodity prices. South Korea announcing measures today to boost shareholder returns. The government seeking to replicate Japan's success in raising market valuations through corporate governance reforms. The Nikkei, it's at an all-time high. South Korea's new measures include tax incentives for companies that promise shareholder returns and a new Korea Value Up Index for firms that improve their corporate governance. And Taiwan Semiconductor opening its first factory in Japan this weekend. The world's largest contract chip maker is trying to diversify its supply chain while mitigating the risk from tensions between Taiwan and China. The factory is set to begin mass production of chips used in auto and industrial equipment in the fourth quarter. Taiwan Semi is expected to start construction on a second factory in Japan by the end of this year. All right, we got some big changes to the Dow and the Dow Transports at the opening bell today. Uber will be added to the Transportation Index and Amazon to the Blue Chip Index. It doesn't really change the fundamentals of those stocks, but it does change the importance of individual stocks within these price-weighted indexes. The higher the stock price, the more it moves the average, and the transports, Uber will have a 3% weighting, replacing JetBlue with a roughly 0.25% weighting, and the Dow Jones Industrial Average, Amazon will have a nearly 3% weighting, replacing Walgreens Boots Alliance. Important to note, due to a stock split, Walmart will see its weighting lowered to just under 1%. I've spoken to a number of investors and analysts about these changes to these closely watched indices. Donald Broughton tells me it only strengthens Dow theory.
It does reflect what's going on. Who amongst us hasn't spent a dime or a dollar with Amazon, forget, in the last week, in the last 24 hours? And I believe the reason it strengthens Dow theory is that the airlines are the weakest part of the Dow transport theory. In fact, if anything, they're counter to the Dow. The Dow transports would perform even better in predicting the overall economy if the airlines were not in it at all.
So, Broughton adds that rideshare, which is often driving people to work for the leisure activities, is just much more reflective of real-time consumer trends. Freight-focused stocks still dominate the Dow transports. Old Dominion Freight Lines has the biggest weighting at over 16%. It was also the last addition to the Dow Transports back in December of 2021. So since then, it's just far outperformed the rest of the index and even the market. However, it's really just the opposite for the Dow Industrials additions in August of 2020. Salesforce, which reports earnings later this week, Honeywell and Amgen all underperforming the Blue Chip Index and the market. Let's talk much more about Uber's addition to the Dow Transports and the sector as a whole. Jason Seidel is the air freight and surface transportation analyst at TD Cowen. Jason, good morning. It's great to see you.
Great to be here.
All right, so Jason, let's get to it. Adding rideshare to the Dow Transports, is that a meaningful addition? Does it change how investors and analysts and economists should look at this index?
Well, I think it makes the predictability of that model better, as Donald mentioned when we're posting the prior interview. But right now, we're really focused on the freight sector and what freight is going to tell us about the economy going forward.
Speaking of the freight sector, you actually downgraded your earnings estimates for pretty much the entire freight sector, for trucking and for rail. What led you to do that, and what are you seeing that would lead you to downgrade your estimates right now?
Yeah, so we really took estimates down for everything but the less than truckload sector. I think if you look at the expectations for demand for this year, it is very muted in the first half of the year, and everyone is sort of looking for that back half turnaround. And I should point out, that's not only the public companies that have reported that, but when you look at the proprietary surveys that we put out in the rail sector and the trucking sector, the private companies are also looking for a back half turnaround. So I think everyone sort of pushed their expectations out a bit.
All right, so when we're looking at the freight market, I think the thing that really kind of reflects it in real time, and most of it, I think trucking is about 75% of the market, are trucking rates. And I've been looking at the trucking rates. So the spot rates, they're down 8% year over year. The contract rates, contract really reflects what companies like a Walmart or a Target do. They contract a lot of their freight movement. That's down 11% year over year. What does that tell you about economic activity? What does that tell you about retail?
Well, first of all, contracts have been sort of catching up to an exceptionally soft spot market out there. I think you shouldn't read too much into that, because I think what we have on the truckload side of things is still an overcapacity. A lot of trucking companies started up and came into the market when we had the supply chain crisis, because rates were through the roof. These truckers built up what I would call a war chest, if you will, from those great freight rates as well as money from the government. And it's just taken a little bit longer for the capacity to correct itself. I think as we move throughout the year, you're going to see that happen. I think spot rates are going to be much stronger, especially as we start getting in through the spring shipping season.
All right, Jason, we got to leave the conversation there. It is always great to see you. Thank you very much. Glad to have you on to talk about Uber entering the Dow Transports today. All right, coming up here on Worldwide Exchange, we have the one word that every investor needs to know, plus markets. They're gearing up for their next big test with the Fed's preferred inflation gauge, with a hotter than expected PCE reading, what it could mean for the rally's next moves. And during February, CNBC is celebrating Black Heritage. As we had the break, here's FedEx Custom Critical CEO and President Ramona Hood.
It's truly an homage to reflect on the stories of those that have broken barriers and inspire the next generation. It was representation like Ursula Burns that allowed me to see the possibilities of becoming a president and CEO of FedEx Custom Critical. I humbly understand my assignment and responsibility to have a positive impact through my contributions and paving the way for our community.
Morgan Stanley.
All right, welcome back to Worldwide Exchange. Time now for your WEX wrap-up. We start with Berkshire Hathaway's operating earnings soaring 28% in the final quarter of 2024 to just over $8.4 billion. Its cash pile also growing to a record of nearly $168 billion. The results come as Buffett has been riding Japan's historic win streak with stakes in 5 key Japanese financial institutions, all of which are up double digits since April. The National Association of Business Economists, or NABE, raising their growth forecast for the year to 2.2%, 1 percentage above its previous estimate. And AT&T says it will offer a $5 billing credit to eligible customers affected by last week's network outage. In a letter to employees, CEO John Stankey, he apologized for the disruption and said the credit will appear within 2 billing cycles. Easy come, easy go. Shares of Intuitive Machines, they are sinking ahead of the open. You can see they're down almost 36%. The company said its Odysseus moonlander has fallen on its side while landing near the moon's south pole. While some communications have been limited, the lander is still functional and communicating with flight controllers. Hong Kong listed shares of Chinese EV maker NIO. They are sinking after JP Morgan downgraded the stock and gave it a massive price target cut. The bank now rating the company at a sell with a $5 price target from a previous $8.50 price target. All right, here's what to watch on the trading day ahead. Several pieces of economic data out, including durable good orders, new home sales, pending home sales, and consumer confidence. A busy week of earnings with results from HPE, HP, Best Buy, TJX, Paramount, Salesforce, eBay, Lowe's, Norwegian, Zoom, and Macy's. And the big event of this week, it is January PCE, given the latest clues on the Fed's inflation fight. We'll be watching that one very closely. All right, ahead of all this, let's see how the new trading week is shaping up. The Dow and the S&P 500, both of them coming off fresh all-time highs in Friday's sessions. Futures right now, we're saying it's a bit mixed. The NASDAQ in the green as the Dow and the S&P down in the red. For more, let's bring in Victoria Green, founding partner and chief investment officer at G Squared Private Wealth. She is also a CNBC contributor. Vicki, good morning. It's great to see you.
Good morning, Frank.
All right, so what do you make of what we're seeing in the pre-market right now? Got to remember the Dow and the S&P, they finished at highs last week. And interesting enough, the NASDAQ actually, it hit a high and then closed lower. So what do you make of what we're seeing in the pre-market right now?
I mean, I think the second half of February is historically weak, and you could see a little bit of pullback here just because everything has been so hot recently and just like nothing could lose last week, especially on the heels of NVIDIA. But this week you're having a few more earnings in the hardware side. You may see some pressure there, as well as PCs expected to come in really hot. So generally speaking, this rally is great. It's still intact. Historically speaking, back half of February is a lighter period in the market. So we could see a little bit of a pullback this week if we don't see the earnings numbers kind of justify. Obviously, Salesforce is huge, Dell, some of the other technology names reporting this week.
Yeah, we certainly do have some big names, even after the Magnificent Seven that we were all watching so closely. So I want to look ahead to this day ahead and just also the environment we're in right now. Give us your WEX word of the day. How are you seeing the markets?
I actually had to make up a word to fit this market, and I call it nirvana. It's nirvana, the state of like enlightenment and bliss, and NVIDIA combined together, because NVIDIA has brought enlightenment and nirvana to this market. And so when I look forward, I think this state could continue, even if we get a little rocky on the short term. It's definitely NVIDIA brought bliss to the market, and everybody should be feeling pretty good about that.
All right, so Vicki, this is the second time. You said there could be some short-term disruptions, but in your mind, the momentum trade is going to keep going. So I do want to ask you, aside from the short-term disruptions, which are just natural in the markets, is there anything that can stop the momentum of an NVIDIA? Is there anything that can stop the momentum of these markets that you're looking at? Is PCE the thing that we all need to watch out for?
I think PCE is going to come in hot, but it's expected to come in hot. We know it came in hot because of PPI and CPI coming in there, so it's not necessarily fully known, but it is known that it should be pretty hot this week. I think one data point isn't bad. It's expected. The problem is going to be, is this going to be sticky? So I think we can forgive PCE being a little bit hot. It's going to be, okay, what happens if February is sticky and the market continues to reprice? But recently, this market has been driven more by earnings than Fed expectations. You saw the 10-year was pretty stable last week, even though we had some pretty hawkish rhetoric. We had the meeting minutes come out. You had some activities that weren't necessarily super dovish, and the 10-year was able to stay steady. So if earnings come in, you could see that continue to counterbalance as the Fed backs off. We've been saying all year we never expected March. We always thought June or July was a much more reasonable time for cuts to begin. But PCE, it's going to be, is this a blip in the road, or is this a trend? And we can take one bad month, but 2 to 3 sticky months, then people really have to start repricing in this Fed trajectory. All
right, so Vicki Green, you're saying that the PCE, it could be the pothole in this road higher for the markets, for NVIDIA, for a lot of things right now. Something else I want to touch on with you. Speaking of earnings, Berkshire Hathaway hitting a 52-week high following earnings. We have a great CNBC Pro story that talked about the earnings, but also the fact that this stock, if you look at RSI, it's overbought. Is that something that you're looking at in this market? NVIDIA also overbought, Berkshire Hathaway overbought. Is that something that concerns you when we're talking about individual stocks?
Absolutely. Short term, RSI is a great trading indicator, and it just means it's moved a little bit too far, too fast. But they've also been overbought since like January. This isn't a new reading. And when you have a fast upward market like this and you have a trending bull market like this, it is likely to stay in overbought a little bit longer. So I'm not necessarily too concerned. I think this just means that some of these leading names are hitting territories, they're hitting new highs, they're hitting all-time highs on some of these stocks. And you just have to be a little bit careful. I tend to like to trim in these areas. I keep my core position. Okay. I keep what I put in there. I might take a little bit of earnings off because they've moved up. I mean, you're going to talk if it opens today where it looks like it's up 20% on the year for a value stock like Berkshire. That's huge.
All right, I want to get to your pick very quickly. It's Dell. Earnings are coming up later this week. You said you're seeing a re-acceleration in the PC market. However, Dell shipments were actually down 8% year over year last read. The rest of the market overall was flat. Also, valuation about 25 times forward earnings. Give us the elevator pitch. Why put money into Dell right now?
Look, I do think the PC market is bottom, and they also have a good exposure to the services on the database side, on the enterprise side, not the hyperscaler side. So I see IT spending eventually getting better this year. It's all going to be about the guidance like any other technology stock. Yes, the PC market has been super slow, but I expect that to continue to bottom out. I expect we see more IT spend and an upbeat guidance from them. Okay. And I am looking for a little bit better numbers going forward.
Got to leave it there. Great to see you. That's going to do it for us. Squawk Box coming up next.
Good morning. Stock futures a little changed after the Dow and the S&P both at record highs on Friday. We'll show you what's moving right now. Warren Buffett's cash pile soaring to a new record. The Berkshire CEO said that deal options that could move the needle had been endlessly picked over already. And AT&T's CEO apologizing for last week's network outage and offering some customers a $5 credit. Figure out where you're going to spend that. It's Monday, February 26th, 2024. Squawk Box begins right now.
Good morning and welcome to Squawk Box right here on CNBC. We are live at the NASDAQ market site in Times Square. I'm Andrew Ross Sorkin along with Joe Kernan. And Becky is off today, so it's just the boys once again. But as we keep saying, lots going on, and there really is a lot going on. U.S. equity futures right now, a lot going on there. 36 points down if we opened up right about now. NASDAQ looking open slightly higher, about 6 points higher, and the S&P 500 off about 2 points. We'll call it 1.5 right now. Treasury yields, the 10-year note, you're staring at it and looking at it. It's 4.244. The 2-year is sitting just at about 4.688. And we've been watching shares of Amazon and Uber. Amazon is going to be joining the Dow Jones Industrial Average, and Uber is joining the Dow Transports today. Amazon at 175.41 and Uber at 78.70. And you were talking about how Amazon had.
Who knew?
Who knew?
No, we have Mark Mahaney coming on. It's his favorite.
Yep.
I think he's raising his target now to 220. We can't, Kramer knows every stock in the universe and what it's been and what it's done. When I took a closer look at Amazon, it was at 175 already a couple of years ago.
It had been.
And then at the beginning of 2023, it's all the way down to like $85.
Right. We had sort of the pandemic bump, and then we came
down, all the way
down,
back down, now
all
all the way back up with the 220 target. That's not going to show it there. But if we do a little bit longer term chart, we'll take a look. So we'll see what Mark has to say. He said that in the latest report, everything there's so much there for bulls,
right,
to like in terms of margin expansion and revenue growth and everything else. It's got a decent market cap. It's no NVIDIA, but it's almost $2 trillion, almost, not quite. The national NABE, the National Association of Business Economists, raising its growth forecast for the year to 2.2%. Not only is that 1 percentage point above its previous estimate, which would have been down at like 1%, 1.2, but it also is a positive number. So that in and of itself for 2024 shows you how far we've come from the idea that we were going to have a recession this year. In addition, 3/4 of respondents predict a soft landing. That will, in fact, be the case for the economy, with just 3 rate cuts now predicted this year. The first rate cut they see not until June.
Meantime, let's walk you through this week's Squawk Planner. A bunch of things going on, several data points of note on tap. Today, we're going to get January new home sales. That comes out at 10 a.m. Eastern Time. Durable goods and the Case-Shiller home prices. That's also on tap. Wednesday, GDP revisions. And then on Thursday, we get jobless claims and the Fed's favorite inflation gauge, core PCs. So a lot of folks in the market going to be watching that. And then on the earnings front, a number of big companies coming in with their numbers. Lowe's, Macy's, and eBay report tomorrow. On Wednesday, we hear from Salesforce, HP, and Paramount Global. A lot of focus on that company. And then on Thursday, AB InBev, Best Buy, HP Enterprises, as well as Dell.
Look at this chart here. Shares of Denmark's Zealand Pharma soaring after the company reported. So it's up, Andrew, 33%. Why? Strong results from a trial of a liver. Are you listening?
Yeah, I am.
It's a liver disease treatment.
Uh-huh.
Do you think it's a liver disease treatment or perhaps something else?
Weight loss.
Weight loss.
Yes.
Weight loss. Don't worry about your liver. That's fine. That's good. Might work. Might help there. But you don't get 33% unless you're treating fat people. It's unbelievable. It's taking over the world of pharmaceutical. It's the only thing anyone's interested in. Wouldn't it be nice to treat liver inflammation? That seems like a really good drug. But the reason it's up, it's been touted as a potential competitor in the booming weight loss drug market. The phase 2 trial showed 83% of adults saw positive results for a form of liver inflammation caused by excess fat cells. However, the company says that the results demonstrate that the highest dosage of the drug being tested is safe, and it, since the fat cells are involved in the liver inflammation, that's the logical idea is you could use it for obesity. The drug currently is undergoing 5 phase 3 trials in a clinical program for people who are overweight or obese. And that's the real, I think that's the real impetus there that you can see. And you think we're going to all be microdosing? That'll be a pill we take in the morning of something.
Well, it's going to, because it's not just going to be, see, it's not just going to be about obesity. It's going to be like a longevity situation.
Because that's a
Because-
problem for.
Well, people live longer if they're not
There's
just
more
not
to it than
obese,
that. There's more
but it's
to it
going to
than that,
control the fats and the glucose in their body. If you believe glucose is like, rusting the insides of your body. I'm just saying, this is,
Who believes that?
oh, there, I think
People
there's
think glucose is rusting the insides of your body?
yes.
Rusting the insides
That's
of your body.
one way to think about it in terms of the cancers that people get. I mean, you can start
You
to
think glucose, you've got definitive.
I don't have definitive
You know you
proof on
love
this.
science.
I'm saying there's a
You
lot.
only rely on the science in all of your conversations. This is science you're giving me now?
I'm not giving you
Glucose
science.
rusts the inside of your body and causes cancer?
There's a lot of there's a lot of literature that seems to suggest that glucose is a prime mover in a lot of the problems that we have in our bodies.
You've been saying that for a while, but I can tell you the things that cause cancer if you like.
Okay.
Well, carcinogens, radiation.
Yes.
There's
All of those things are
genetic damage caused by carcinogens, but glucose, not one of them.
Do you think glucose has nothing to do with it?
I don't think there's any definitive evidence that
Okay.
glucose causes genetic damage which results in cancer. Tobacco smoke does.
Do you think it exacerbates it?
I've got no reason to think that. It may cause, I think it causes obesity, which, and down the road, maybe that leads to things. But I don't know, just,
let's talk.
I don't think it's fair to glucose.
Okay, let's talk about a guy who's done very well drinking a lot of Coca-Cola.
Exactly.
Warren Buffett, over the weekend, in case you missed it, Berkshire Hathaway reporting a 28% jump in the operating earnings in the fourth quarter, helped by an increase in insurance underwriting earnings and investment income. Berkshire's cash hoard grew to $167.6 billion. It passed a record level from the prior quarter. In his annual letter, Warren Buffett saying, there remains only a handful of companies in this country capable of truly moving the needle at Berkshire, and they have been endlessly picked over by us and others. He said there were basically no companies outside of the country that could move the needle. This was the first earnings season report since the death of Charlie Munger, and Buffett devoted much of his annual letter at the beginning of it praising Munger's role in creating the firm, calling him the architect of the company, called himself the general contractor. Buffett said at this year's annual meeting he would take the stage this time with Ajit Jain, who runs their insurance business, and Greg Abel. He also made some interesting comments about the electric business, the regulations around the electric business, and also the train business, and just how capital intensive that business was. You very rarely hear him talk about regulations. I thought, Joe, you'd be interested in knowing that he was calling out some of the regulatory problems that he thought were impacting those businesses, as well as talking about some of the highlights in the business. But it was a fascinating letter, and of course, the first page, which was devoted to Charlie Munger and his relationship, were really quite poignant.
I mean, Charlie liked regulation much, either.
Charlie didn't like regulation much, but it was just interesting to see he's now bought two businesses that are highly regulated businesses.
Yeah.
Most of the other businesses, if you go back and think about them, were not highly regulated businesses.
So check it out. Sugar, glucose,
Oh goodness, yeah.
is not a carcinogen. However, overconsumption of sugar can contribute to obesity, which is an important risk factor for cancer. So it's exactly what we sort of came to that.
So exacerbating cancer.
No, it can be obesity would be a risk factor to result in cancer.
Okay.
But definitely not I love sugar.
I know you do.
And I'm not sure, there's times when I'm more worried about the substitute than it's like, I'm just gonna go with the sugar instead of, I mean, how many times we gotta find one of those sugar substitutes that is a carcinogen?
Glucose you think is not a problem?
No, I don't, not in moderation. I don't think so. You don't look like you have a glucose problem at all. I don't know, do you got?
No, there's a lot of people trying to
cavities
control, there's a lot of people trying to control their glucose.
Yeah, well, I mean,
For diabetes and other things, but even people who are not diabetic are trying to control their glucose.
you remember,
Ketones, you want to get into ketosis to lose weight, for example, you would need to actually
You know how many-
rid your body of glucose.
you know how many crazy things in the last 50 years we've believed that,
Yeah.
that turned out not to be true about red meat or about this, that, and the other thing.
Glucose is not it.
And
Okay.
fats, and there's a lot of fats. Well, I don't know, do you like saccharin? Feel good with that?
Not
You know,
necessarily.
sugar substitutes
Yeah,
are carcinogens. Some of them have been in mice, but once again, you know, it's bad for mice, but I feel bad for them if they get cancer. Coming up, we're going to talk about last week's tech-led rally and Amazon joining the Dow with Mark Mahaney. Now, Mark Mahaney's not joining the Dow, but we're going to talk about Amazon with him. Sounded like they were both joining the Dow. Then later, the latest buzz from Washington on the deadline to avert a shutdown. Talk about the South Carolina primary and a lot more with Punch Bowl's Jake Sherman. He's going to join us at 6:30. Squawk Box will be right back. Amazon joining the Dow 30 this morning, replacing Walgreens being booted. Join us now on that and the recent rally in big tech stocks, Mark Mahaney, head of internet research at Evercore ISI. Just looking at your latest note, what are you're going to 220 for a price target? Where were you prior to that? And you said that just a lot of metrics are really good in the most recent report. Can you talk about them? There's 5 or 6 that you said would make the bulls very optimistic.
Yeah, so I think we took our price target up from 180. This was all on the earnings report a few weeks ago. Amazon's currently our top pick in large cap internet. If you step back, the reason it was added to, I assume, the index was that it's one of the broadest representations of the economy, and you've got a pretty consistent financial track record. The company's also at something of an inflection point. I think this year you're going to get record high free cash flow margins, record high retail operating margins, and you're going to get this acceleration in the AWS cloud revenue growth. Amazon's always presented as this company that gives you the kind of leadership in online retail globally with almost $1 trillion in sales. And then now we're at $50 billion in ad revenue. So it's the 3rd largest ad platform in the world, and then it's the largest cloud platform in the world. So this is kind of one of the broadest reads in the health of the consumer, the health of enterprises. It's one of the reasons we like Amazon, but it's kind of a leader in these really large TAMs, or total addressable markets. It's one of the reasons it's our top pick.
Okay. You need a new, we need some kind of new system. We barely, I'm trying to hear everything, Mark, but it breaks up a little bit, and I'm not sure. It's much better when you're in studio. A couple of years ago, when we were at 175 before the stock, we were talking about how it basically got cut in half. What was the valuation back then? Is this 175 a lot more reasonable than when it was there a couple of years ago?
I think so. We're looking at an asset now that trades at around 20 times free cash flow. So, yeah, valuation's a lot more reasonable. What happened to Amazon is they went into a major investment cycle as they aggressively invested in next day, same day, several hour delivery. And that really trashed its free cash flow margins. They actually went 2 years of negative free cash flow. But you're out of that cycle. That made valuing the company several years ago very challenging, where you had to go out several years in order to value it. You don't need to do that now. Cash flow is abundant at the company. Free cash flow multiple is very realistic.
It's your favorite among, what do you call it now? How many are left? Is it the Fabulous Four? What do we decide? But this is your top pick. What else you like?
Well, we like Meta still, and then we have a couple of contrarian picks in there, which is we like Expedia, and as an online travel play, and we like DoorDash. We feel like it's kind of turning the corner and it's about to start giving you Uber-like value catalysts. So it's going to start turning and consistently generating positive cash flow. And I bet you that I think that DoorDash will enter the S&P 500 inclusion debate in the next year or two.
When you have when you don't want to own a stock, what rating do you give it? You give it a market performer, or how nasty do you get?
No, that's market perform would be one. So historically, Joe, if you and I have gone through this before, Amazon and eBay have been 2 of the leading plays on online retail. And it's the valuation discrepancies between the 2 are massive, but for a good reason. Right now, eBay trades at a very kind of reasonable 12 times earnings multiple, 13 times earnings multiple. But the market has decided long ago, both consumers and sellers, that the better marketplace is Amazon. So that's a market example of a market perform for us. eBay, where market outperform for us is Amazon.
Right. You would never have a sell, but if you, out of the biggest names, what would you have, the least propensity to buy right now? Which ones? What about, just go through the 7.
7? Well, and I would have to sell the one that we've probably been most cautious on in large cap internet probably has been eBay. And at times Expedia too. Expedia was a major change in opinion for us. And in exchange for upgrading Expedia, we downgraded Airbnb. Of the major names, we continue to like Google, Meta, and Amazon, but in our pecking order, much prefer Amazon in that list. Meta would be second, and frankly, Alphabet, Google would be a distant third. The one big missing piece from Google, frankly, is lack of really strong cost discipline. And that's what the financial markets want. They wanted for the last year and a half. Companies have responded to that. Well, investors have responded positively to them. Google hasn't been willing to do it.
Okay. Any Anything that we should really glean from going into Dow 30? What does this mean?
Well, I just think it's a representation. What a long trip we've gone through with Amazon. I've covered it now for like 27 years, not since its IPO, but pretty darn close to it. And the level of skepticism that stock company faced for its first 10, maybe 15 years as a public company. But the fact that it's expanded so much and it's such a broad play of consumer strength, off of advertising, off of enterprise, and now business to business logistics, potentially pharmacy, like, you know, Amazon just covers so many different areas, which means it also gets most economically impacted, or more economically impacted than most companies. So if there's hyperinflation, Amazon sees it all. But as inflation starts to wane down, Amazon benefits from it all too. So Amazon's really kind of one of your broadest, you know, reads into the economy. It's almost surprising that Amazon wasn't added, you know, maybe a few years ago.
Okay. All right, Mark Mahaney. Thank you.
Thanks, Joe.
All right, we'll see you next time in studio. You got to make the move. Got to make the trip in here. We get every bit of useful information and we can understand it clearly. Thank you.
Okay. In the meantime, when we come back, results from a new study on financial literacy in America. We're going to tell you some numbers. I don't know if it's going to make you happy or sad, but you don't want to miss it. Later today, also, an exclusive interview with JP Morgan CEO Jamie Dimon. That's today at noon. It's happening on the halftime report.
The opportunities that come from being a black man in the C-suite are enormous, and so are the responsibilities. I understand that I am an example for others to look to inspire, and I have a responsibility to make sure that I am lifting as I climb, providing opportunities for other people who are underrepresented in the C-suite.
Welcome back to Squawk Box. The Council for Economic Education is out with its latest survey of the states this morning. The nonprofit examines financial education and literacy across the country. Joining us right now with the findings, Ann Morrison is the president and CEO of the Council for Economic Education. Tell us how it is. Do kids, frankly, do adults, how literate are we when it comes to financial stuff?
Well, we definitely have some challenges, but at CE we have some good news. This year, our 2024 survey of the state says that 35 states now require students to take a class in personal finance to graduate from high school. That's up 12 states from just 2 years ago, which is terrific. And 3 more states now require economics. We're up to 28.
What is the goal, of course, is to get all the states to do it. What is the impediment to get there?
So I think that the impediments are dropping away. I think what we're seeing now is people understand equitable access is important. I think people are understanding that it takes a lot of people to come together, parents, teachers, legislators, to make the requirements happen. And the research is showing that this makes a difference. Higher credit scores, lower loan default rates, better college financing packages. So I think those impediments are melting away. We're seeing a lot of momentum toward getting more requirements passed.
Is it a high school class that you're focused on?
We teach K through 12.
Right, no, I know.
But we're focusing for the requirement on at least a 1-semester class in high school to graduate.
Have you thought about teaching these classes to folks in Congress?
You're not the first person that's asked that.
I think you guys could. Don't you think, Joe? They could run a class like a symposium of some sort.
You know, when there's testimony from a financial executive, you mean the questions that we see being asked by?
I just think it might be helpful.
I'd start it in the House. Although you know what? I think we need to be bipartisan or bi-legislature, and I think the Senate. When I hear, some of your people that Elizabeth Warren could use, maybe she should talk to Nan about a few things.
Well, the good thing is with the new financial standards that we have, they're available to everybody, and the concepts are pretty simple: budgeting, risk, investing. So hopefully everybody will be on board. Pretty much everybody thinks this is a good idea. It's pretty nonpartisan.
How excited are you about the prospect of AI teaching people financial literacy? Have you spent any time thinking about that?
So I've actually tootled in a little bit to see if it could come up with some lessons, and I think that's helpful. I think what would be really neat for me is if I could ask you a question about something, a problem, and if I were the AI machine, I could respond to what you said with another question or the next level down. That would be really cool.
One of the things that people sometimes say is, well, financial education or financial literacy should be embedded in all sorts of classes, meaning that it shouldn't be its own standalone situation. It should be part of history. It should be part of science. It should be part of, you could see how you could sort of leverage it in different ways. Is that the right path, or you think the path is you need to actually do it in a very directed way?
Well, I think any way you can get it is great. I like the idea of having a full semester class because you can go really deeply into each of the concepts. But as a math person, I'm also a big fan of having it integrated into math classes because a lot of kids say, ugh, math, but when you say, oh, well, but
it's about money.
Use it, it's about money, they'll be...
So not just in a classic econ class?
We actually think of econ and personal finance as 2 separate subjects, so teaching them as complementary subjects is great. One teaches the little picture of me, and econ gives you the context for how you're operating in the universe.
And tell everybody go ahead.
Well, would it kill you to make these kids get up a little early and watch Squawk Box? I mean, I'm not kidding. Why couldn't they get up? What time does school start?
I don't.
You know.
He's got teenagers.
Well, but you know that kids actually, the perfect time for school to start would actually be later rather than earlier. In a preferable world, they would be waking up later, missing Squawk and watching it on replay.
Or on replay. Or getting up early and not starting school till 9:30 or so, and watching it from 6:30 to 8.
Still too early. I would prefer.
Why is that too early?
You want the kids to sleep, and it's important for them to get their sleep.
They shouldn't be up late watching crap till 11:30. Watching those ridiculous
their
late night.
circadian rhythm is their rhythm is.
My circadian rhythm is fine. I go to bed at 8:30.
I'm not so sure about that.
The teachers are awake. And we could certainly
they ought to be watching too.
Infuse sort of the lesson of the day or the week into Squawk for all the teachers that are watching.
They could get a lot out of Squawk.
We love Nan. Nan, you have a big day ahead. today. What's going on?
I do. We're doing a launch event at the Visa offices later this morning. We have a great panel with some politicians that helped us to get this passed, Senator Gebhardt from Pennsylvania, and some folks from New York, and some educators and some students talking about how meaningful it's been.
We need to get all 57 states. Who was the person who said that? No, we need to get all the states.
One of your guys.
No, it wasn't.
Yes, it was. Yes, your favorite, in fact.
Who's my favorite?
One of your favorites.
57. Who was it? And then who said 52 states? Someone else, I think, maybe one of your friends said 52. We had 52.
I don't think my friends said that. I think they might have said 47 because they don't really honor some of the more recent. No, I don't. Coming up, today's and they're already assuming Texas is going to be gone soon. Today's top political news, including a potential shutdown at the end of this week, and the South Carolina primary results. Punchbowl's Jay Sherman is going to join us next.
Good morning and welcome back to Squawk Box live at the NASDAQ market site in Times Square. We've got some red on the screen on the Dow, about 26 points off. The NASDAQ, though, looking to power slightly higher, about 8 points higher, 8.5 points. The S&P 500, I'm going to call it off just marginally. Meantime, former President Donald Trump winning the South Carolina Republican presidential primary on Saturday. NBC News reporting that Trump won about 60% of the votes and Nikki Haley won about 40%. In a speech to supporters in Charleston, Haley said she would continue campaigning, saying there are a huge number of Republican voters who are saying they want an alternative to Trump, but Haley lost a powerful donor. A network backed by billionaire Charles Koch is pausing its financial contributions to Haley's campaign. Americans for Prosperity Action saying it still endorses Haley for president, but doesn't believe any outside group can make a material difference to widen her path to victory. There is some question about, when you look at those results, what that ultimately means for the rest of the country in a general election, given the number of people who came out effectively against Trump. I don't know if you think I'm looking at the glass half full or glass half empty.
The demos,
there's a whole-
are not positive. Look, here's one on the flip side. If you're a Democrat, you could vote for Nikki Haley in
Yes.
South Carolina, and I don't know how many. I would say at least 5 of the. I think he would have probably won by 25, if that, or even more, maybe. But then he's not getting suburban. A lot of the people necessary to win the general, including Nikki Haley supporters.
Right.
That's the journal piece today that Trump's going to need. People that are in. That's a pretty big number. Whether you include the Democrats that crossed over to vote for her or not, that's still a pretty big number. You'd need them in the general. Those Republicans that aren't voting for him, you'd need them to win, to beat Biden.
Right.
Yeah.
And so that's a question.
Oh, it's a mess. Andrew, it's a mess. It's a mess on both sides.
It is a mess.
It's a mess on both sides.
That I will not
It's a mess.
dispute.
It's a mess. We deserve better.
We have some other news this morning to tell you about. The RNC chair, Ronna McDaniel, is announcing that she will step down next month. That follows the former President Donald Trump's call for a new slate of leaders to direct the party. McDaniel saying the RNC has historically undergone change once we have a nominee, and it has always been my intention to honor that tradition. I wonder who will take that job.
They said it might be Laura Trump, but I don't know whether that's going to happen or not.
And then what?
I don't know. It's not going to be you. That's all I know.
Yeah. Are you thinking? You're thinking?
Not going to be me
up for
either.
it?
Not going to be me either.
You
no.
sure?
Positive. I can't.
I'll nominate you.
Huh?
I'll nominate you.
You do anything to get me out of here. I'm not leaving. I told you that. Joining us now on those stories and the potential for a partial government shutdown on Friday. Punch Bowl News co-founder Jake Sherman. He's an NBC News and an MSNBC contributor. Every time, I guess we'll talk about the shutdown, Jake. But first, I think the elephant in the room. We got to see what happens with Nikki Haley. There's some rumblings that even though she says I'm not going anywhere, that you're starting to see possibly signals that the end might be coming. It might be the beginning of her trying to get some kind of graceful exit.
I mean, listen, her whole play is she's a hedge against Donald Trump being convicted or whatever. But I think it's difficult to continue to make the case that she has a viable path when she hasn't won a single state. But your point, Joe, and her point that 40% is pretty damn high. I mean, it's not an insignificant number of voters that don't want Donald Trump to be the nominee. And I was talking to a group the other day, and someone raised their hand and said, well, where do voters like me go if we're Republicans and we don't want Donald Trump? And I said to this guy, I just think you're going to vote for Trump at the end of the day, because I think most voters will just say we don't want Joe Biden to be president. We want we don't, and we're going to fold and vote for Donald Trump. So I just think that it might be a little bit overstated that Republicans won't vote for Trump, but I do hear your point on independence. It's very scary for the Trump campaign.
It's a couple wild cards. Immigration is just. I mean, I don't know. There are people that would never vote for Trump. I think that because of what's happening at the border, might just say, I don't care, I'm doing it. Every time something like Georgia happens, Jake, I mean, that just inflames passion. And I'm talking about that unfortunate, really tragic incident that happened down in Athens to that young nursing student, and whenever that happens, it's like, you saw I'm sure you're on Twitter, you saw how many people said they're ascribing blame to the current administration for what's happening.
And they do deserve some blame, generally speaking, for the situation at the border. But I think, listen, and I'm not suggesting voters will take into account the nuance of the situation, but both parties have heavy loads of blame here.
I don't think it's even close, Jake. I mean, I hear that. I hear that, and I know that they walked away from a deal after they said they wanted a deal. But day one, he took all those executive orders, day one, and he could put them all back in right now. All the things that kept the border much more closed, and he hasn't. So he can look into the camera, and all of his people can look in and say, this is not my fault. No one, I don't think anyone's buying it. But I don't think that's enough. I could still see, after we saw it in 2020, you saw it in 2022. When it's all said and done, there are certain, there are certain wins that make it difficult for Trump to get over that 40% mark, 45% mark. And I could definitely see it happening again, even if it is Joe Biden and Kamala Harris.
Yeah, I think you're right. I do agree that Joe Biden took a big step on the border at the beginning of his term, and Democrats have said to me privately, "Listen, we didn't take this seriously enough. We should have said what Trump was doing on the border was not right, but we're going to secure the border in the way we believe it should be secured." They did not do that. They stepped around the fact that it is a crisis, and I think everybody realizes that. I mean, I was down there, and I covered this stuff, and I was shocked at just the openness of the border in the Eagle Pass sector. I was down there with Speaker Mike Johnson a couple months ago, and it is quite shocking, to be honest with you. But listen, Biden hopes that he can muddy the waters a little bit and say Republicans want this as a political issue. With Joe, I will say there is a lot of evidence that congressional Republicans do not, at least in the House, do not want to solve this with Joe Biden in office. And maybe that's a cynical point of view, but I think it's true.
No, I'm certain that's. I don't think we want to solve anything between now and November. Is Ukraine anything gonna happen there? It seems like the people that on the Republican Party that don't want to give more funding to Ukraine, it seems like that the chorus of cries from them are getting even louder at this point. Where's the money going? If we give you this money, are you telling us you're going to win? Obviously, that's not going to happen. We spent, what was Trump asking for? $5 billion to close the border, and in this bill, it's another. I mean, this is just another 60. That's just part of the down payment on how much more there would be over the next 2 or 3 years, right? This is just another 60, but we're talking 60 after that and 60 after that, probably.
Yeah. I mean, listen, it's an unfair comparison to compare with Trump because he was a uniquely ineffective legislative president.
Well, Mexico was going to pay anyway, so it didn't matter.
Right, exactly.
It wasn't going to be our $5 billion. But still, you know what I mean. That means $60 billion, and we don't know what really where. When Zelensky recently was on in interviews, he conceded some of it does go to pensions for soldiers. Some of it does go to taking care of families of people that are, 31,000 soldiers have lost their lives in Ukraine.
Yeah, but Joe, much of this is not just straight cash to the Ukrainians. A lot of it is manufacturing American weapons and sending it to Ukraine, or actually replacing U.S. weapons that we've already sent to Ukraine.
Mm-hmm.
The answer to your question is I do believe at some point this will get done. I think Speaker Mike Johnson has been very non-committal and very wobbly on how it will get done, whether it will get done through a so-called discharge petition, which is a complex legislative maneuver, which allows 218 people to bring a bill to the floor without the leadership. But I do think, and remember, Israel aid is tied up in this, and Taiwan aid is also tied up in this. And I think the supporters of Israel aid, which is a vast majority of members of Congress, are getting very frustrated.
Hey, Jake, I got one more question for you. There's obviously been lots of questions about the mental acuity of the president. Over the weekend, there was a number of headlines coming out, frankly, of the Drudge Report and others, taking on the mental acuity of the former President Trump, with some gaffes and comments that he made. Joe and I were talking about them during the commercial break.
I don't think it's close.
I think Joe was saying he didn't think it was close. What do you think's happening?
Let me put on my neurology cap for a second. Yeah. I don't know the answer to that. I think Republicans are not going to criticize Trump no matter what he does. He could get up there and completely freeze on stage, and he would have no one say anything about him. I think there's obviously a lot of Democrats who are extraordinarily worried about Joe Biden and his ability to win. I think that still the odds are 80%, 85%. Joe Biden is going to be the nominee when the convention comes around in just a couple of months. I don't think it's even close.
I've seen the town hall. He talks for an hour and a half. His answers are sometimes insane, but they're not off a cue card where the simplest 2-sentence policy answer is impossible because you just can't. It's not even in the same sport, much less the same ballpark in terms of, he sits there and takes questions for an hour and a half. When's the last time Biden took questions for an hour and a half totally unscripted, without Jake Sherman and Kirby and everybody else there propping him up. It's not even close.
Jake Sullivan, just to be clear, I don't prop him up. Jake Sullivan is, I think, who you're talking about.
Yeah, sorry. Jake Sullivan. Yeah. Jake Sherman.
No,
you're Jake Sherman.
That's happened before, I believe.
And you're Jonathan.
Nice to see you, Jake. Thank you.
Kirby, I got right.
We've got a lot more coming up on Squawk Box, an interesting insider trading case in which a husband allegedly traded on non-public information he overheard while working from home with his wife. We're going to bring you that story. Welcome back to Squawk Box. This is a fascinating story. The husband of a former BP M&A manager has now pleaded guilty to security fraud related to insider trading. Tyler Loudon, a Houston resident, earned $1.6 million from illicit trades based on non-public knowledge. Now, authorities say that Loudon learned of BP's confidential plans to acquire Travel Centers of America back in 2022 while working remotely in earshot of his wife. So risk of the pandemic era work from home policy, here it is. Over the next few months, Loudon sold all of his positions in his brokerage account and Roth IRA and accumulated 46,000 shares of Travel Centers without telling his wife. This according to U.S. Attorney's Office. Loudon due to be sentenced in May and faces a maximum possible sentence of 5 years in prison and a $250,000 fine. As part of his plea, he agreed to forfeit the $1.76 million in illegal profits. And you know, I was thinking about this story, Joe. Lawyers, bankers, other people who are in sort of regular contact with non-public information, it's one thing to have that information when you're in the context of an office. and you think maybe it's dangerous for that to be in an office. But the flip side is when you're doing it all from home, there's a lot of people sometimes in your house. You got kids who might be hearing you. You have spouses. I mean, I don't know about you, but sometimes there's news that I even hear about. I always have to keep it very close to make sure no one in my family knows what's going on. And lawyers and bankers and other people like that often have to do that. How much of this stuff leaks out in a work from home world rather than a work from the office universe?
Yeah. I don't think you need to worry probably yet, right? Get to 13. You don't think that they're hearing you and they're...
Oh, do I think my kid? No, hopefully not.
Calling Robin Hood.
No,
hey, listen,
no. But you look, when you live in a world of confidential information, you don't want other people to know it for obvious reasons. So even a spouse or children should not be in possession of this information, just out of fear that they would say it off, at a coffee shop to their friend or whatever it is.
Possible.
And so here you are in a universe where there's more of those sort of overheard conversations, perhaps, and here's a great example of it going off the rails.
Right. It would be it's a possibility, but I wouldn't lose any sleep thinking about it. Maybe you more than me, but there's been certain things that I've known that I wouldn't want getting at, and I keep my mouth, keep your mouth shut most of the time, right? Well, you know what they say about loose lips.
Sure, but if the office is the dining room,
right,
and that's how people are running their life, it becomes more complicated. Coming up on the other side of this, we're going to talk to the CEO of a company currently fighting with Apple over App Store fees. You do not want to miss this conversation. It is going to get spicy. Squawk Box, come right back.
Or download the app.
Welcome back to Squawk Box. In a LinkedIn post published last week, the CEO of meditation app Insight Timer blasting Apple over enforcement of its App Store rules, which require a 30% cut from tips made through live events. Company CEO Christopher Plowman writing, quote, "Either we comply with Apple's demands or Insight Timer will die. These are our two choices. Apple's guidelines haven't caught up with today's creator economy, and so our teachers find themselves caught in a definitional crack." An Apple spokesperson telling CNBC the guidelines are to provide a fair and level playing field for developers, and it will review all apps against the same rules. Joining us right now is Insight Timer co-founder and CEO Christopher Plowman. Good morning to you. You haven't died yet. At least that's the good news. It sounds like you're trying to comply, or at least that's been the latest effort. Where do things stand? And then let's get into it.
Well, I mean, we complied. We had no choice, as I said in my post. So we've complied. We have agreed to Apple's rules, and we are now currently back in the App Store. To clarify, we were never taken out of the App Store. We were just told that we would no longer be able to submit any updates to the platform. So we're back in, but as a consequence, the 20,000 teachers on our platform now are paying Apple 30% of their tip and donation income. And this is kind of a situation that, at this stage, I don't know how it addresses itself.
So, Christopher, let me ask: this is a philosophical and practical issue for you? How much of this is about your view that the App Store rules are not consistent versus an almost philosophical question about whether Apple should be considered at this point, or Google for that matter, a utility?
Good morning, retail traders. This is the Sneaky Snake trading strategy where I talk about chart patterns, moving averages, and being in the now. And the moving averages that I've been using lately have been the 200 SMA, and the EMAs have been the 63, the 21, and the 9. Also threw in the 50 SMA last week to see where we kind of come, where we meet up with on the other three other moving averages. So let's start over. Good morning, retail traders. This is a Sneaky Snake trading strategy where we talk about chart patterns, moving averages, and being in the now. Hope everybody had a great weekend, and we're going to come up with a morning watch list for this morning. This is my layout. Right now, we've got NVIDIA. Looks like things have broke out already. from the pullback we had here. Tesla's up. PLTR pulling back a little bit. Tiva popped this morning. SMCI. No, I'm feeling a little flat this morning. I'm in. Stop that recording too. Yeah, I feel we might pull back some. We'll see.
More closely with developers on building a sustainable creator economy. I understand that Apple wants to take commission on gaming credits and all these sorts of digital items, but we have moved into a digital world. Everyone interacts with their customers now online. Apple can't say that if something's digital content, they take it third. You can't build a creator economy. You can't build a marketplace where you have service providers selling their time.
You can't.
If Apple's taking 30%, they need to look at this tool and they need to help us redefine it, and we'll get back to business.
Okay. Christopher, it's good to see you. We appreciate your perspective on all this. I'm sure this debate is not
yeah, man, I knew it.
I wish you
Baidu bounced up
all the teachers on the platform.
from that alert.
Thank you.
Time, Andrew, appreciate it.
You bet.
I would tell them that I still have to put the right earplug on my eye, those little things in my left ear, and I have to put the left one in my right ear to get them to stay. So they're not designed with my ears. So Tim, if you're watching, it still doesn't work. I still have to switch right and left on my pods, whatever they're called.
I don't even know what you're talking about at this point.
You said Tim Cook watches.
Correct.
I can't wear, the right one falls out. If I use the right one and put it in my right ear, it falls out. I use the left and they fall out, and I lose them. They go down grates, walking around the city. I have to switch them so that they stick. So they're not made with my ears in mind. It's just after 7 a.m. So after 7:03
AirPod Pros. You need the.
I have the AirPod Pros with the different attachments, all those cushy things. No, I still have to switch them. Sorkin, my ears happen to fit, so the design. I'm not surprised. They fit your ears.
They fit my ears very well. Thank you, Tim.
Just it's on the East Coast, just after 7. You're watching Squawk Box live from the Nasdaq Market Site in Times Square. I'm Joe Kernan, along with Andrew Sorkin, who's. They fit perfecly. Figures.
I like Apple stuff. I do.
I do too. I'm in the ecosystem. All my music, everything comes from that. The U.S. equity futures closed at all-time highs on the Dow and the S&P on Friday, and not much happening today. A little bit of give back on Amazon Day. Amazon goes into the Dow 30 today, and Uber goes into the transports.
Big day. Meantime, National Association for Business Economists forecasters now raise their growth forecast for 2024. Steve Leisman joins us with that good news. Steve.
Yeah, this is interesting, Andrew. Forecasters at the NABE backing off their outlook for below potential growth this year, and they see higher growth, less inflation, and still low unemployment. Here are the numbers compared to December. 2.2 is the GDP. That's up almost a full percentage point, down just a bit from the 2.5% actual in 2023. PCE core coming in at 2.2. That's the forecast, down a point from the down 0.1 from the previous forecast, and below the 2023 number. Unemployment 3.9. That's 0.3 lower than they thought. So it seems that the average forecaster has abandoned what was the prevailing idea, and it was proven wrong in the past several years, that the economy needed to run below potential. Unemployment would have to rise sharply in order to bring down inflation. Inflation came down despite strong growth and low unemployment. If all that sounds like a soft landing, well, it's because it is. 3/4 of respondents see the economy headed for a soft landing. That compares to 16% who do not. The survey sees the Fed lowering the funds rate to 4.6 this year. That's in line with the Fed's own forecast and pretty much where the market is now, not where it was, but where it is now. Goes to 3.4 next year. That's a bit more aggressive than the Fed has dialed in. You can see those numbers there, 5.40, 4.6, and then down to 3.4%. This year will be another test for the idea that U.S. inflation can fall without below potential growth. The underlying story could be productivity. 41% of NABE forecasters say the big upside risk to the economy is strong productivity. The biggest downside risk, the Fed staying too tight. Andrew, I was looking back at their forecast a year ago. They got unemployment pretty close. They got inflation pretty close. They were just way off on GDP. A year ago, they forecast for 2023 0.8%. It came in, as you know, at 2.5% for the year.
Fascinating. Steve, so maybe, well, it's like maybe things are going to be not so bad. Joe, do you feel like, I know you like to, you don't think the economy's going so great, but this is a different story.
I don't know what to think. I mean, the economy, I don't know why. I don't know where it's coming from, whether it's still some residual, stimulus left. What I don't think makes people feel good is they still don't have the buying power they had. So that's not good. When people talk about the stock market, the stock market finally got back to where it was after some rough sledding for the first couple of years. So now we're trading news. I had a different question for you, Steve. There actually is no one named Wolf in the Wolf Brothers that Bobby Weir plays with. Have I got that right?
That is true. It's a thing that Bobby's had, trying to get a kind of, I don't know, dangerous kind of. He originally had a band called Scaring the Children that the people around Bob talked him out of actually using. He's
okay.
Maybe Bob has a dark streak, I guess is the best way.
I heard their tour. I think that they're still around, and I heard "Let It Grow," and it was a good version of "Let It." Bobby is amazing. He's I don't know. He's one of the 7 wonders of the world, is he not? His voice is still pretty good.
Do you ever see his workouts, Joe? He does workouts with a big medicine ball, and he does all kinds of stuff.
You told me we were going to hang out sometime, and you told me that you were going to get me a personal audience, and you never did that, Steve. We got to go though. You can work on that.
You don't want to talk about GDP or productivity, Joe, or one of the great things that are happening, but I can talk about Bob for as long as you like.
Great. Is the productivity going to be better with AI? That's all I want to know.
Well, that was one of the things I was hoping to talk about. I don't know at this point, Joe, if the economists are dialing in AI into their forecasts. It's something that I think that if you take the old Greenspan model, remember Greenspan in '96, he said, you know what? People are buying this tech stuff. So therefore, I think it's going to have some kind of effect. Who am I to say that all businesses are making bad decisions? I'm not talking about the price of NVIDIA's stock. I'm talking about the fact that they're buying these chips. If they're buying these chips, there's this prevailing idea that, hey, maybe there's some return to it, and that return is likely to be in productivity. I don't know if these are early days to dial it into the forecast, but it does create some, if you take that idea that Greenspan had back in the mid-90s, and you spin that to today, then there is some upside for productivity down the road. Now, I'll tell you, there's another idea, which is Robert Gordon. He's kind of like the pessimist when it comes to this stuff. He says it'll just deliver the 1 or 1.5% productivity that we normally have. So there's two sides to the coin here, but it's interesting. AI may be part of the productivity story in the years ahead.
Anything else, Steve? You had to get that off your chest. You like the inference chips or the training chips? Now I'm moved on.
I know. I read that this weekend. That's putting it to use. So it's interesting stuff. And Joe, I'll talk to Bob's people if they want to.
No, it's okay. No. It's too late.
I feel bad about that.
Too late because you said that. It's too late for Jerry. That's for sure. All right. See you, Steve.
Okay.
Coming up later this hour, the Supreme Court set to hear arguments in a case that could have a big impact on social media companies. Eamon Javers has that story straight ahead. You don't want to miss it. Welcome back to Squawk Box. Shares of Domino's Pizza rising after reporting quarterly results. Earnings coming in at $4.48 a share. 10 cents better than estimates. It's on revenue of $1.4 billion, and that's shy of expectations. You can take a look at the stock up about 6% on the back of this news. U.S. same-store sales up about 2.8%. That beat the street's 2.2% estimate. And Domino's also raising its quarterly
from the sidelines of NFL games
25% and increasing its share repurchase program by $1 billion. That may have something to do with this here. Programming note, Domino's CEO Russell Weiner is going to be on Power Lunch at 2:30 p.m. Eastern Time. I wonder if he brings pizza with him for that interview. That would be one way to sort of,
Looking at that chart,
get in early.
Been a great stock
with the anchors.
When they relaunched some of, tried to get the quality better, it's done well since that, but it really was. I'm looking at what a pandemic play. Have you looked at a long-term chart? Total pandemic play. Got all the way up there. God, it was above 500. Join us now to talk markets. Andrew Slimman is Senior Portfolio Manager at Morgan Stanley Investment Management. Just sentiment-wise, Andrew, 2023, most hated bull market in history, and it turned out to be a great year. Now people are kind of accepting things. Will we have a repeat of such a friendly market, or do you think it's an election year, normally that happens. How are you macro? Then we'll get into some of your individual names.
Look,
bull markets are born on pessimism. That was last year. Unfortunately, what happens in the first year off a bear market low is the market goes straight up, never gives anyone a chance to get in. Right? The second year, markets grow on skepticism. I think that's where we are. And people are succumbing to the fact that maybe we're not going to have a hard landing, and retail flows have flipped positive. And that's what usually happens in the second year. But unfortunately, you don't get a easy year like last year. I mean, I know it's one thing to say easy year, but if you stayed invested, the market went pretty much straight up last year. It stampeded the bears. It's not that easy. So I think it'll be a good year for equities, but it's going to come with more volatility, I suspect, later towards the summer.
I don't know how many times last year we talked about that the lows were not in because we had to revisit the lows and maybe set some new ones, and just about every single person we had on said that, and it never happened. We don't talk about them because they were all wrong, every one of them, except maybe 2 or 3. Well, which ones what stocks do you think we ought to be buying here, Andrew?
Well, I mean, you've had a big move in some of the tech names, but I think, as you just in your previous segment, look, there's a lot of fiscal spending coming, and that's going to help the infrastructure plays. So we like stock like CRH, which is a cement company. I think that's good. Although the chip companies, look what Applied Materials said the other day. As they build out all these chip plants, there's going to be a big demand for semiconductor equipment. So I think there are areas of the market. One of the things, Joe, when you talk about last year, the dichotomy about last year is, as a portfolio manager, I kept hearing companies say, business is good. Business is good. And then Wall Street said, no, it's going to get bad. It's going to get bad. It never did. And so what I see is that earnings are coming in. The earnings for this year next are higher today than they were at the beginning of the year. Earnings are stronger than what people expected. And I think that's really going to support the market.
That ain't what I heard.
Build a negative framework.
Well, I think we always heard it.
Okay. Here's another guy that says earnings were stronger than it, and that ain't what I felt.
It's definitely going to impact things, and if it's going to slow things down. I'm not sure anymore. We normalize rates, and for years we saw businesses flourish at 6, 7, 8% rates. And so why did we think it wasn't going to be possible this time? It was because of the change from being so low for so long. But companies are doing fine.
That's right. And then you layer in the fact that companies are being very stingy with their cash. They're buying back stock. They're not making a lot of frivolous acquisitions. And that's, very accretive. Stock buybacks have worked very well the last year and a half. So I think it's a good environment. I just worry a little bit. It's been awfully easy to make money in stocks. We're up 23% off the low in October. Somewhere along the way, there's going to be a bump. And, maybe it's that now that every economist thinks we're going to have a soft landing, maybe we'll get some print that will scare that. I don't know, but I just know there's more volatility.
Well, like you said, you keep saying it was easy, but then you point out that if you listen to the people that were on this network all through 2023, it wasn't easy because none of them wanted you to be in the stock market. Huh?
I was on number times saying the market's going up.
All right. You were one of the few, Andrew. All right. See you later, Andrew Slimin. Now Andrew Sorkin. Ross Sorkin.
Meantime, coming up, U.S. and U.K. carrying out fresh strikes against the Houthis in Yemen. We're going to have more on the geopolitical tension and the White House response after the break and how much all this is costing. And then later, a big week for retail earnings ahead, a preview of names you should be watching. We are coming right back.
humanly possible.
Welcome back to Squawk Box. The U.S. and U.K. hit Houthi targets in Yemen. That took place on Saturday in response to attacks by the Iranian-backed militants last week in the Red Sea and the Gulf of Aden. And for more on all this, I want to bring in Michelle Florian, former Undersecretary of Defense for Policy, who is now co-founder and managing partner of West Executive Advisors. Great to see you this morning, Michelle. Help us understand sort of where we are in all of this and what comes next, really.
Yeah. World War III.
Since early February, and they struck, missile storage sites, radar facilities, basically trying to diminish the Houthis' ability to continue these strikes in the Red Sea.
And what's this woman know?
The Houthis' response was very defiant. They clearly are going to continue their efforts until the Gaza war ends. And, short of invading Yemen, which is not in U.S. interests, I think this is going to be a continued campaign of using air and missile strikes to try to continue to degrade their capabilities. But I think this is going to go on for some time until we see a permanent ceasefire.
Is there something that we should, could the U.S. do more than it's doing?
Well, yeah. Get rid of Biden.
I think that we are doing, as much as we can given the intelligence we have. It's not like we have a lot of folks on the ground in Yemen. So I think as we find targets, the United States is striking them. I think the U.S. is also working hard to interdict missile and weapon supplies going to the Houthis from Iran. You remember a few weeks ago, we sadly lost a couple of Navy SEALs that they were involved in those operations. So, I think the U.S. and this coalition we've built, this is now a number of countries that have banded together trying to address this problem. But it's a difficult one because they have a lot of capacity to continue taking pot shots at shipping. And even if they're not terribly accurate or effective, they are forcing shippers to change their routes and to avoid the risk.
I want to pivot for a second. Anthony Blinken made some critical comments about Israel over the weekend, or maybe it was on Friday now, around some of the settlements in the West Bank and the like. To the extent that you talk to people behind the scenes, what do you think the relationship between the U.S. and Israel is looking like right now?
Look, I think there is a very bipartisan strong support for Israel's security, and that hasn't changed. But what is happening is there's growing frustration with President Netanyahu and his policies, because I think the administration has been trying to find a path through this crisis to, see the hostages freed, see some resolution of the conflict, and then use that as a pivot point to work towards more of a strategic realignment in the region. You have Saudi Arabia and others wanting to improve relationship with Israel and the U.S. and to ally against Iran. But finding a long-term solution for the Palestinians has to be part of that equation. And Netanyahu has just been completely unwilling to really talk about that or even to acknowledge that it needs to be part of the solution. So I think there's growing frustration with Netanyahu and the way he's prosecuting the war and his unwillingness to really consider what needs to come after the war is ended.
Michelle, that settlement's notwithstanding, and I understand that criticism, but Hamas knows exactly what they're doing. And I'm looking at a journal op-ed piece today, admittedly from a spokesman of the Israeli Defense Forces, but it is true that the Hamas is hiding behind citizens in Gaza right now. They know exactly what they're doing, and they co-opt American media like 60 Minutes last night. I watched a piece on 60 Minutes. It's exactly what the design of this whole strategy is, and it's really kind of nauseating to see it happen. And the poor Gazan people are in the middle of everything that's happening. But it's all orchestrated, and we're going to criticize Biden is under increasing pressure to criticize Netanyahu, and it just plays right into the hands of the savages that orchestrated the October 7th attack in the first place.
Well, I think, first of all, I agree with you. Hamas uses the civilian population and civilian infrastructure like schools and hospitals as human shields and they operate under those hospitals and in those schools and so forth. So they bear primary and first, responsibility for the horrible civilian casualties that have happened. And I think right now, it's less criticism of Netanyahu for the prosecution of the war, although there has been some of that. It's more, how his inability to think about beyond the war and some resolution to the larger Palestinian situation. And when you start to talk about building settlements, more settlements in the West Bank, or now even on the far right in Gaza, that's basically taking that potential longer-term resolution off the table. And so I think the primary criticism has not been about tactics, it's been about the strategic outlook and how his failure to think strategically.
Yeah, I think they want to just, once Hamas is gone, I guess they'll move to that next, if that ever were to happen, but it's not yet. So
well, my worry is Ramadan is coming, and Ramadan historically has been a time of flaring up of clashes. I worry about the West Bank exploding. So they've got to get to a hostage deal and some temporary ceasefire before then, and then, buy some time to sort out some of these larger issues.
Okay, Michelle, thank you for coming on this morning. We appreciate it.
Thank you.
You bet. When we come back, we'll talk about some of the pre-market movers. You got to see what's going on this morning. Plus, look at the Dow off about 25 points. We'll talk about that. NASDAQ up marginally. The S&P 500 off about 3 points, 2.5 points. We are coming right back after this.
Welcome back to Squawk Box. I'm Dominic Chu with your morning rovers. We're going to start with the big news from this past weekend, and that's Berkshire Hathaway's quarterly results and the always anticipated release of founder and CEO Warren Buffett's annual shareholder letter. Now, you can see now shares of the Class B stock, which are about $427 a share, just about pre-market, up 2.5%. They're the more liquidly traded version of this financial and industrial conglomerate shares. It owns companies like Geico Insurance, Burlington Northern Santa Fe Rail, and consumer brands like Duracell Batteries, See's Candy, and Brooks Running. It reported a 28% jump in operating profits to $8.48 billion. It also has a record cash balance of $167.6 billion. That was driven in part by better results in its insurance business, which helped offset a drop in rail operations. Now, Buffett did caution investors that the company may only do slightly better than the average company because of its sheer size. It means that there aren't that many acquisitions left to be had that can truly move the needle for returns, with virtually no candidates, by the way, for that outside the U.S. on the acquisition front. So those shares up 2.5%. Meanwhile, on the analyst front, shares of Moderna are down about 1.5%, just around 20,000 shares of volume, dragged down in part by analysts at HSBC, who've downgraded the company most known for its COVID vaccines to a reduce or sell equivalent rating, while we raised the target price up to $86 from $75. They're citing things like uncertainty over vaccination usage rates for its upcoming RSV vaccine launch, as well as its established COVID-19 vaccine franchise as well. Those shares down 1.5%. We'll end with a slate of positive commentary, target price upraises, everything along those lines for software, cloud computing giant Salesforce. The Dow component's getting a good amount of love from analyst teams at Jefferies, at Canaccord, Citigroup, and others ahead of its earnings report after Wednesday's closing bell. By the way, those shares up about 1% right now, helping the Dow bid pre-market. Keep it right here. We've got more Squawk Box, more news coming up next. We'll see you after this break.
This week's earnings calendar has a handful of retailers and consumer names due to report. Joining us now with more on some of those names and the state of the consumer, Dana Telsey, Telsey Advisory Group CEO and Chief Research Officer. Is this a week you look forward to more than when you get the big boxes? Because You still going to malls and looking and seeing who's
I
there?
still do that. You have to do that. You have to go to the store in order to see what's happening.
You used to tell me about Hot Topic, and you go to across the board. You go.
Yes, I still go
Still?
But you know what else I do? I also look at the web too. I do a weekly trend report that I put out every week that shows what the differences are this week versus last year. I've got 6 years worth of data. So I'm looking at what these promos were even over the past 4 or 5 years.
Are you on her list of?
I'm not. I need to get
Because you
on
were
it.
just talking about who's for you. You're having trouble. You don't know who's for you. Where to?
Who's for me anymore? I don't.
He needs to. Can you help
Yes,
him with?
yes, I can help you.
What are we going to see this week? What are you looking forward to that gives us an idea about sort of the overall consumer sentiment?
So I think a couple things. I think, look, we got a little bit of a hint a couple weeks ago when the retail real estate companies reported their earnings. And you've had David Simon on of Simon Properties, you had Steve Yaloff on of Tanger Outlet Centers, and we heard that business was good, leasing demand is high, all my research shows new store openings are working, and look what they talked about, new development. Now pivot here to what we're going to hear this week. We know that retail sales were bad in January. Are retail sales ever that good in January? No. But we know that the consumer overall is still spending. Maybe not as much on discretionary. They're spending on essentials. What I want to hear this week, I want to hear from Macy's exactly what that state of their consumer is. We know that their credit card debt has increased. We're going to hear from others this week, whether it's Urban Outfitters, whether we're going to hear from TJX. I expect TJX to continue to be strong. And when vendors like Steve Madden talk about the only channel of wholesale that's strong for them is off-price, the off-prices are going to win with traffic. That's what we're going to see, and that's what my research shows. That's what my channel checks show.
Interesting, because we love that retail. The retail sales number was weak, but the people that are worried about the Fed, et cetera, raising, that was one of the softer data points that it didn't scare us, like the employment numbers and it's a. But you're saying it's a one-off. It's because it's never.
I think it's exactly. And look what you have next. Easter's coming up. We have an earlier Easter this time. Retailers are starting to put out their Easter goods. We've got new trends. Andrew, if you want to wear wide bell-bottom jeans, the wider the better. That is the biggest trend.
Can we just talk about this? What is going on with pants? All the pants are getting wide now.
Yes, they are.
Right, men, women, the whole thing.
How do you know this?
Because I have eyes.
And
is he right?
Yeah, he's absolutely right.
The pants are getting my
wider.
pants have gotten much wider.
No. Pants are getting wider. And back. By the way, back
in
to
the waist.
Back to pleats.
In the waist.
Back to pleats. Can we talk about that too?
But you know what you need when you have new styles like that? You need new tops and you need new shoes.
Right.
So it
There you have it.
Drive a new apparel cycle.
There you have it, Andrew.
But how long is this going to last?
You're going to be on her list.
When you talk about new pants cycles, it can be 2 or 3 years that it lasts. And
then everyone's back to skinny jeans again.
Yes. Well, there's got to be a reason to create demand. That's the drivers.
True. What? You're looking at me like I don't know.
It's just I don't.
What are you talking about?
I haven't been thinking about what new tops I need to buy for my changing pants. No, I didn't.
Men.
No, I hear you.
I even look at like a well-dressed man, like a Brad Pitt. He's wearing wide pants now.
Yeah.
Come on.
Yes.
Yes. He's absolutely right.
100%.
How the hell do you know? Where do you see him in People Magazine?
I read this stuff. I'm trying to
He's
keep
in the
up.
know.
You know.
One word.
What's that? Metro what?
But look what this does.
Metro Man.
We need
Metro Man.
I'll take it. Loud and
retail
proud.
sales. It drives sales
Send him your stuff.
I will. You need sales increases.
Send him your stuff. He doesn't have anybody now. You're not sure who you are.
Well,
He knows who he is.
I know who I am. I just don't know what.
The Supreme Court will hear arguments in 2 cases that consider whether social media companies like Facebook or TikTok have the right to make editorial decisions about the content on their platforms. And Eamon Javers joins us now with the arguments and how the decision could impact the sector. Is this a Javers, what's it called again? The Javers...
Javers report. Files. No, this is just regular files.
Like the IPCRES files.
This is just regular, Joe.
This is regular, okay. All right, let us know.
This is what we call a setup piece, so it's not an exclusive. Because the Supreme Court, everybody knows about the Supreme Court.
Yeah,
right? So,
okay. All right, well, let me know next time it's going on.
Let's roll into the story. That's right, I'll give you a text. Look, today we've got huge stakes for these social media companies in the oral arguments at the Supreme Court today. Justices are going to weigh a set of laws in Florida and Texas that attempt to change how social media companies oversee the content that appears on their platforms. At issue here are laws passed in 2021 by conservative lawmakers in the 2 states who argue that sites like X, formerly Twitter, and Facebook are blocking conservative viewpoints from wider audiences. Now, the question before the court will be whether these laws are constitutional or not, and by extension, whether social media platforms can decide how much exposure differing sets of viewpoints get on their sites, or whether government can, in essence, force them to permit certain political speech. On the 2 sides will be the states themselves against attorneys for the social media trade groups, including a group called NetChoice. The states will say that the social media companies have become something of a new digital town hall, and therefore they must allow unfettered speech. The companies will push back, saying, no, the First Amendment gives us, the companies, the right to regulate speech on the sites, not the government. So the question here is, who has the free speech right? No decisions are coming today. These are just arguments, but we should get a good sense of where the justices are going to come down as they ask questions of the attorneys on both sides. So fascinating set of debates here, guys, for social media.
You think we'll get this all squared away before or after we get the AI liabilities all squared away? I mean, we should have done this first. I would have thought.
Yeah.
With that looming,
the court is unpredictable, and they kind of schedule these things when they schedule them. So not sure what the sequencing is going to be. But it's a fascinating debate today. You saw the Wall Street Journal editorial today coming down against the states, right? The states are arguing from a conservative point of view that you shouldn't suppress conservative politicians' speech. The Journal saying, hey, wait a second, this is interfering with the business's rights to free speech, and the free speech right should go to the business in this case. And the analogy is, are these things like a shopping mall where, it is a private business, but people have free speech rights within that private business? Or is this more like a newspaper where the government has to have hands off?
Right, exactly. All right, Eamon. Not the Javers files, but a good setup.
We'll bring you a good file soon. Don't worry.
All right, because I love all the branding behind you with Joe's World. All right.
It's pretty neat.
Yep.
Coming up when we come back, Reddit and Wall Street bets fueling a stock frenzy during the pandemic, if you remember, among retail investors. We're going to find out what the social media company's announcement for going public will mean for retail investors. We are coming right back with the Reddit Army after this. Welcome back to Squawk Box. Reddit finally go public last week. The company's S1, and it announced that some Reddit moderators and users are going to have the opportunity to participate in the listing through a directed share program. And Redditors' participation is listed among the company's risk factors at the same time, saying it could result in increased volatility in the market price. Joining us right now to discuss this is Tasty Live CEO Tom Sosnoff. He's a shareholder in Reddit, having invested through the secondary market last summer. Good morning to you. As you read through the S1, what do you think?
I kind of felt like Reddit is one of those companies that is going to do better as a public company. I think they've been private for a little too long, and I think as a public company, they're going to get kind of that, that kind of kick in the butt that they need to maybe turn the corner towards profitability. That's spoken like a shareholder.
Spoken like a shareholder. What do you think would be the inflection point? I mean, it is true. There's a company 19 years old. It's not a startup. It's a very mature company for 19. Right. I mean, it's 19 years old, still not profitable. So what does that say?
I don't think, they've obviously raised a lot of money. They're not profitable, but they've been able to survive and thrive. I mean, their user base is massive. And they have a really strong demographic, like a monetizable demographic. That's what I like about Reddit. I just think it's one of those companies that needs needs to go to the next level. And I think taking them public will almost force their hand to learn how to be profitable. I mean, they have enough users. They should be profitable.
What do you think about the correlation and connection and maybe risk factor at the same time to Google? They made a partnership with Google that's going to be training for AI purposes on their data, for example. That's just one example of it. But a good portion of their traffic, it seems, comes from Google. Now, a lot of folks' traffic comes from Google, but potentially disproportionately so in this case, or no?
Potentially, it's a little bit off from some of the, it's a little bit higher percentage. But I don't look at, just like you said, so many people rely on Google and so many companies rely on Google. I don't think that's going to be the issue with Reddit. I think Reddit's got to fight off kind of their own demons. And I mean, it's just that they have such a strong demographic, and you can monetize that demographic. It's kind of the perfect millennial. They have this certain trust factor with millennials that is incredibly strong. And in the world of finance too, they have a little bit of an edge, I feel like, over other social media sites or other social media companies in the same space. So I kind of like them, in that regard.
What do you think about the prospect of certain moderators and users buying in? There's 3 classes of shares. Let's talk about that. For some people, that's worked. I'm thinking of Airbnb and a couple of the other companies that have done similar kinds of things, but it hasn't always worked. You look at Robinhood, it's another example.
I mean, personally, I love it because I really you got to think about Reddit for a second. They rely on their moderators. They're a super important part of their ecosystem. And I think that allowing them to participate in the IPO and giving them skin in the game, if they want to be there, I think it's super important. I think it's a really brilliant idea by them.
When you think, though, of the history of these types of efforts, it hasn't, as I said, it's worked for some, it hasn't worked for others.
That's true. But I think in Reddit's case, we haven't seen a lot of IPOs, Andrew, where the whole their whole platform relies on those moderators, and they essentially do it for free, right? So you got to throw back something. I think it's more of a show of good faith in the case of Reddit than it is kind of a PR move like it might be.
Do you see, though, the other question, though, is does this become a meme stock? And how much of that is going to drive this? Also drive volatility? Are there people who are just going to buy this because they love Reddit?
We're seeing, so for online brokerages like Tasty and most people in our space, we're seeing a lot of, we don't really participate in the IPOs. So we participate, in the option marketplace as soon as they go IPO and things like that. We're seeing what I think will be, at least we're getting a lot of interest already in one of the options going to be listed and how long will it take. And I think this is going to be a really interesting stock to play because investors like relatively inexpensive social media stocks, and there's not too many out there right now. Other than Snapchat, I mean, what's cheap? Everything else is, fake. Meta's just too expensive, and so I think this fits into that kind of, very tradable, very investable price.
So, Tom, I'm going to play devil's advocate. I got a lot of feedback when I mentioned this the other day.
Okay, go ahead.
It seems like one of the great conundrums that a text-based social media platform faces, and I think this is true of Twitter as well, is that writing is hard. People find writing hard. Trying to come up with clever things to say, interesting things to say. It's unclear whether that scales or can scale at the same rate that video or that photos do. And so whether we should be putting these type of companies even in the same category as some of the other social media platforms that rely largely, as I said, on images and video.
Well, that's a great question. It also makes me a little sad when you say that, because on the one hand, we don't want to just become, a society of just short video clips. As much as I love TikTok,
I agree with you, Tom. I'm just saying it's harder to find people who want to sit there and type.
I agree, but you know what? We still, I think when you look at Twitter, what Elon has done to Twitter and what's happened to Twitter since he bought that out, I think what that's done is it's essentially normalized price. It's taken the market down to a level where I do think it's investable now at the current valuations. Like, for example, Reddit might have been way overpriced at $15 billion. But at $5 billion or $7 billion, wherever it's going to go public, it's probably fair. Twitter was crazy overvalued at $44 billion, but at 12 or 15 billion, it's probably fair. So I think that we have found kind of a resting area for what you want to consider to be a writing social media site, and I think that's okay. And I also think that we need sites like this. I think it's important from a trust factor.
Tom, appreciate it. Thank you for joining us this morning. See you soon.
Thank you.
All right, coming up, Wharton Professor Jeremy Siegel is going to talk markets, the Fed, inflation, and much more. We'll be right back. seconds. Good morning. It's another big week for the markets. Retail earnings are on deck, and we'll get some new inflation data, all with stocks near all-time highs. Amazon becoming part of the Dow, the first addition to the index since 2020. And countdown to the shutdown. Can the two parties bridge their differences to keep the federal government's lights on in Washington? We'll get into that and so much more as the final hour of Squawk Box begins right now.
Good morning and welcome back to Squawk Box right here on CNBC. We're live at the NASDAQ market site in Times Square, and I'm Andrew Ross Sorkin along with Joe Kernan. Becky is off today. U.S. equity futures at this hour. Got some red on the screen. The Dow looks like it would open down about 31.5 points right about now. NASDAQ still about an hour and a half to go, but would open off about 3.5 points. The S&P 500 off close to 4 points. We'll show you Treasury yields right about now. I don't know if you're in the mortgage market, but the 10-year note 4.244, the 2-year sitting at just about 4.694. And among today's top business stories, Warren Buffett's Berkshire Hathaway, if you didn't see it over the weekend, reporting a big rise in operating earnings in the fourth quarter. That's thanks to gains in the company's insurance operations. Berkshire's cash pile growing to a record $167 billion. What's he going to do with that firepower? Well, in his annual letter to shareholders, Buffett said his company's huge size left no possibility for what he called a, quote, eye-popping performance at this point, also suggesting that there weren't companies out there, at least in the U.S., well, none abroad, he said, but in the U.S., that there are very few companies that could actually move the needle for Berkshire Hathaway. So a little bit to chew on there. He gave a very poignant tribute to Charlie Munger in that letter. That's definitely worth reading. And also gets into regulation and some other issues that Warren has not historically talked about, or at least been as vocal about, I think, in previous letters.
Geico, yeah, I think the return of the Geico caveman is responsible for the very right-hand side of that chart.
I'm afraid to say
he's back on a lot of the ads.
I am afraid to say that Geico's performance
is the problem
relative to. I don't think it's the problem, but
it's a counterfactual. Could have been worse.
On a relative basis to what's happened to Progressive. I mean, I think most people who own Berkshire would actually look and say Geico has been a underperformer in the past several years. There's no question about that. And that Progressive, which had been the underperformer, has really just sort of, I don't want to say they're sweeping the league, but they're doing a lot better. A lot of the customers that were Geico customers have moved to become Progressive customers.
That's Flo. That's Flo, I think.
That's a real issue.
And
that is a real issue.
You know what I'm talking about? You know who Flo is?
I mean, I know Flo Rida. If you know Flo Rida,
I think Flo is Progressive, and her sister's been making some cameos
in those ads.
Yeah. But the Geico caveman is amazing, and he's back.
It's one of the great marketing.
Because the Gecko Lizard said he works so hard on insurance, and the latest ad is the Geico caveman then said, "Really?
Yeah.
If it's as easy that even a caveman can do it, then why are you working so hard?" And it just boom.
They should put Todd Combs in those ads. He's the one running that business right now.
Is he?
Meantime, Domino's Pizza, the big earnings mover of the day. The company beat profit estimates, but slightly missed on the top line. U.S. same-store sales coming in above target, and Domino's announced a nearly 25% increase to its quarterly dividend and a $1 billion bump in its share buyback plan. Don't miss an exclusive interview with the CEO of Domino's this afternoon on CNBC. It's at lunchtime. I'm already hungry for this. It's going to happen at 2:30 Eastern time. I hope they deliver Domino's at the same time.
It's tomorrow night for us.
Meantime, that's true too. Meantime, Amazon replacing Walgreens, Boots Alliance, and the Dow Jones Industrial Average. That's happening today. S&P Dow Jones indices saying the change was prompted by Walmart's 3-for-1 stock split, resulting in a lower index weight for Walmart. Also, Uber joining the Dow Jones Transportation Index today. All those have already gotten the bump. You don't usually get the bump on the day of, but we'll see. We'll see.
All right, let's get back to the broader markets, bringing our own senior markets commentator, Mike Santoli, for his senior moments for the day. Right. Hey, Mike.
Yeah, Joe. You know, I was away for a week, but a very similar story for the S&P 500, which is this incredibly persistent rally. We're on the verge of finishing up a very strong February, also strong January, and then November, December as well. When you have this kind of strength around the turn of the year, usually pretty good implications for forward returns, if not immediately, then over several months. Now, this goes back to September 30th of 2022, because that's the low right there of what was a relatively brief and not so punishing bear market in 2022. What I do find interesting continually is that we're riding, you know, the upper end of that entire trend from the low. So, yep, at some point, probably should take a break. We have a little bit of a buying panic in AI-related stocks and semis. Obviously, earnings are coming better than expected. The economy has some decent momentum. Question is how much is reflected. Now, look at the rest of the world. Kind of interesting that there's some focus on non-U.S. stocks starting to perform better. The All-Country World Index, excluding the U.S., that's its ETF, ACWX, has just nosed above what's been almost a two-year range. And it actually looks like a lot of domestic sectors as well. This is pretty much what the equal weight S&P looks like. It's pretty much what the financial sector looks like. It's somewhat similar to what small caps looks like. So the rest of the world starting to show some life, as you see, nosing above that ceiling of the prior range, but yet not really resembling the growth stock-led S&P 500 where you have all that momentum. You guys just talking about Berkshire Hathaway, its amazing performance. A lot of components there. Yep, the insurance business in general in the market has been very strong, but it's really an extension and reflection of the bid for quality stocks. Quality as a factor, which is strong balance sheets, defensible franchises, and high profit margins, things like that. You see Berkshire really tracking this quality factor ETF, and then you have Apple next to it, which of course is in most of those quality ETFs. It really not helping out. It's about half of Berkshire's equity portfolio. It's about a quarter of the market cap right now, but really has not been much of a contributor in the last several weeks. In particular here, you see this sort of X pattern there where it's starting to really outperform Apple. And of course, many people mentioning that Apple didn't really have much of a role in Warren Buffett's letter this time as well. Probably just no real change to his investment thesis there, Jeff.
Walmart's $58 now.
Yeah.
Right. 58.52. So.
Yeah, it feels like a decent excuse to just get Amazon. I mean, look, it's hard to ignore the economic heft of Amazon. The Dow historically has wanted to capture basically the U.S. economy as best possible, and so this seems to be a pretty good, kind of a cover story to get Amazon in there now that they have already been willing to have things like stocks that don't pay a dividend in there as well.
All right. Thank you.
Yeah.
Mike Santola.
Okay, for more on the markets and all the record highs we've been seeing, I want to bring in Jeremy Siegel, Professor Emeritus of Finance at the University of Pennsylvania's Wharton School of Business. You've been a long time bull, but the truth is there have been moments where you have pulled back or at least told folks to hesitate. Where are you now, Professor?
Well, I still think the momentum is there. Make the trend your friend, go with the flow. I mean, we're selling at 20 times forward earnings, which I think is quite reasonable. I mean, the tech stocks are 30 or plus. The rest of the market is, 16. So, there's a lot of stocks that are quite reasonable if you don't think the tech continue its movement upward. But, overall, the momentum is still positive, and I'm still positive on the market.
The Siegel family is doing what? Are you playing the Magnificent Seven? Have you moved down to the Fantastic or Fancy Four, as they're calling them?
No, we're much more broadly diversified. Even though certainly I wish I put everything in NVIDIA. I heard you say Warren Buffett said nothing much could move the needle. Well, if he had NVIDIA, he would have moved that needle. Certainly, the momentum in some of those stocks, might still be beginning. I mean, I look back at 99, 98, 99, 2000. The big stock then, if we remember, was Cisco, which was supposed to be the first $1 trillion stock. We know NVIDIA hit a $2 trillion stock. Cisco was selling at 120 times earnings in early 2000. Well, my goodness, if NVIDIA ever got to that valuation, it would be at $3,000 a share.
Yeah.
Now, I'm not making that prediction. I'm just telling you, how crazy things can go.
Yeah, or NVIDIA, which is NVIDIA. But
NVIDIA.
Yeah, but Professor, the bottom line is you were right that the market was going to keep going up. The thing you were wrong about was the economy, right? I mean, you were pretty sure that the Fed was way too tight, needed to cut. The economy was slowing much more drastically than anticipated. And a lot of people, I thought the same thing. That was not the case.
Well, and that was the case a year ago when SVB failed. I thought, oh my God, it's the beginning. But I pivoted in July, and I said, you know what? I was looking at the data. Hey, this economy is getting through these interest rates. And then I became, much more bullish on what the economy is going to do and backed off from any recession probability. Yeah, I was definitely that way a year ago, but I pivoted last summer, and I still see that strength despite the interest rates that the Fed has had. And see that strength into 2024.
In any rate cuts ever?
I think the market is almost saying, who's afraid of the big bad Fed? I think there will be rate cuts because I still think inflation is on a downward trend. I think we had somewhat of an anomaly in January. I think we're going to get better CPI numbers for the month of February. But the truth of the matter is that the economy is surviving these rates. As you said, NABE today raised almost doubled its GDP forecast to 2%, which I agree with. In fact, it could be 2.5% this year. So as long as the economy remains strong, there is no hurry for the Fed to lower those interest rates. I mean, I think that's the bottom line.
Does that mean you think we can go the whole year without anything? I mean, that's in a sort of Jamie Dimon-esque sort of posture. In fact, I think he had said there was even a possibility they could raise rates at one point.
I don't think they're going to raise rates because I think inflation going down that will convince them to be on hold. Is it possible that they won't lower rates this year? Yes, that is possible. It's not my baseline projection, but as I look at all the real data and all the real-time real data, I don't see any real slowdown yet. But I'll tell you why I don't see the inflation. Sensitive commodity indices are still going down in a downtrend or flat, and that is not an inflationary trend.
So we're walking into an election year here, and there is a view, and if you look at some of the charts historically, that it could be that once you hit summertime, and in fact, one of our guests last week made this point, you do get into a bit more of a volatile situation. In fact, there's some investors who think that once you hit the summer, things will get a lot more complicated quickly. Are you of that view?
Well, historically, the third year of presidential terms are the best. The fourth is usually fairly good. But Andrew, I think you'll agree with me. This is going to be a presidential year like none other. And to try to say what has happened in the last 20, 30 years is likely to repeat this year, I think is perhaps stretching it. I mean, there could be surprises on any side with any candidate. So I would.
But doesn't that just add to the uncertainty if that's true?
I mean, I think it adds to the uncertainty. The truth of the matter is, at the present time, I don't think that the market is all that concerned about who is going to be president between Biden and Trump, between those two candidates. Remember, 4 years ago, we had Bernie Sanders in the mix. The market was very concerned about that, being a socialist coming into the presidential race. But, both Biden, and Trump, and there's pluses and minuses, they both call themselves capitalists. In fact, they both call themselves pro-market people, which I have not seen for both sides of the aisle for a long time.
Professor, I want to thank you. It is always great to speak with you and get your perspective on where things are headed, and I'm sure we'll talk to you again very, very soon.
Thank you, Andrew.
Norfolk Southern is planning to nominate 2 new board candidates in a bid to fend off a shareholder activist group. That's according to the Wall Street Journal in a report that says the new nominees are former Amtrak CEO Richard Anderson, and former Anderson, he's Delta too, and former senator and friend of Squawk Box, Heidi Heitkamp. Earlier this month, the Journal reported that Ancora Holdings built a $1 billion stake in Norfolk Southern and planned to wage a campaign to shake up the board and replace CEO Alan Shaw. Andrew.
What's that? What are you doing?
There it is, the fly. We've been trying to get this fly for a while.
We have a fly
coming up.
In the ointment and in the show.
Coming up, a shut.
I've named him Joe.
Yeah, because he's so annoying. Coming up, shutdown deja vu. And why do you think he likes to fly and land on you so much? Tell you about time ticking down till government funding runs out. What's on lawmakers' to-do list before the weekend? And how will the markets take the latest congressional game of chicken? Next, though, what's going wrong and what needs to go right at Warner Brothers Discovery? Stocks in the 8s now. Media expert Tom Rogers is going to join us for that. Stay tuned. You're watching Squawk Box on CNBC. Warner Brothers Discovery coming off a nearly 10% drop on Friday. The media company reporting weak quarterly results, a decline in linear TV ad revenue, also failing to provide free cash flow guidance for 2024. Join us now on the company and the challenges facing CEO David Zaslav is Tom Rogers, Orbit Executive Chairman, former NBC Cable President, and a CNBC contributor. And we know David, we worked with David, you worked with him for years and years and years, Tom. He doesn't like when stocks don't go up, and he's not used to it, having been at Discovery and done so well there. But there are realities of this business that I'm not sure anyone knows exactly what to do and how to make stocks go up at this point.
Well, it's in a tough position, Joe, and
You're right, there's no clear playbook as to how traditional media companies can play this environment. Look, David's proved they know how to take out cost and got some help from the various strikes in terms of being able to take out costs more. They've proved they can de-lever using the cash flow that they're generating to pay down debt, although the timeline on how much they will de-lever by when has been stretched out some. The big question hanging over the company is, can it grow? And that's a big question. They got really hit on advertising revenue. The networks, particularly domestically, according to Brian Weiser, who's probably the best advertising analyst out there, looks like an 18% decline on domestic network ad revenues. That's very, very tough to make up, and it looks like it's going to continue along that vein. And then their direct-to-consumer streaming stuff is really obscure. They put traditional HBO, cable, satellite in their streaming numbers. So what their real streaming numbers are really aren't out there. There were some headlines saying this was the first traditional media company to hit profitability on their direct-to-consumer operations. But again, that's with traditional HBO in there. And even with that, they lost money in the fourth quarter on all that. So the question is, how do they prove they can grow? And that's what is very unclear.
They, in terms of that, I don't know what we're calling it, but you know, some people have suggested trifecta for that sports streaming entity. But out of the three entities involved, does Warner Brothers need to do it more? Warner Brothers Discovery need to do it more than the other two players?
Well, what they really need is to get the NBA renewed. If TNT, Warner Discovery, doesn't get the NBA contract, I'm not sure that JV comes together because that's an essential ingredient, I think, to having them part of that club. And it's unclear to me that they necessarily win this. I think Comcast, NBC has some interest there. NBC obviously has a broadcast network, and I think the reach for professional sports leagues of a broadcast network continues to have major appeal. So I'm not sure if they don't win that the JV actually materializes. And if they don't get the NBA, the hit they take to ad revenue, the hit they take to affiliate revenue is going to hugely accelerate the decline. So that's a must situation for them. If it does come together, yeah, I think there's a better argument to be made.
When would Zaslav decide he has to do something, you know, really big, like get rid of something, or I mean, can he continue to pare down? What is it, $44 billion or something?
Well, also you're waiting on April. April's the big time. If they really want to sell the whole company, they can do it. Right. And because of the spinoff, they couldn't do it.
Or CNN, or they got a
tax perspective. But the taxes, I think, breaking up the company, Tom, the taxes are a real tough issue. No.
Yes, that's a tough scenario. Look, I think there are two players that have a lot of leverage over Warner Brothers Discovery. One, as I was just saying, is the NBA. I think it has enormous leverage in those discussions. And secondly is Comcast NBC. I think if there is going to be a mega merger of traditional media companies, that's far, far more likely than Warner and Paramount getting together. But I think Brian has most of the cards there in terms if and when that were to happen, and I can't see that it's necessarily in their interest to do anything soon. So it's really a question of growth, and I think the time may be coming that they have to own up to whether renaming the streaming service Max was the best idea here. They lost 2 million streaming subs year over year. They lost 500,000 domestic streaming subs in the fourth quarter. I think there's a lot of indication that in terms of pure engagement, despite all the Emmys that HBO wins, they're still down about 1% of engagement of television time, where they need to get much more above that. And so, was that the right move? Is HBO still synonymous with quality? And should they be moving back in a direction which lights that up for people who really want to look to it as the place to go for major streaming television?
It just, the numbers don't really add up. I guess maybe it's some of the Magnificent Seven that have, they have the market cap. I mean, you look at Comcast, that was 64. It's at 41. Warner Brothers Discovery, look where that's traded. Disney was 200. Disney's 107. Where's the market cap? Where'd it go? Netflix even was over 700, so it's not even there. Where is it, Tom? Media is a great business. Where the hell is where's the star?
Well, Netflix is the star, clearly. Yes, it's below its high, but it has been continuing to climb since it hit its low, and it's clearly separated itself from the rest of the pack, and it is highly profitable, generating massive cash flow, able to maintain major programming budgets on the streaming side, and it has an international game, another area where Warner has got its hands tied behind its back, because in the UK and Germany and Italy, it's tied up with arrangements which make it more difficult for it to really develop a global streaming service. So I would say Netflix is going to continue to shine in ways the others are going to continue to struggle.
I just don't really get it. Okay, so it's not, it's not a cable bundle, then it's streaming, and it's neither. So what is it, Tom?
Well, I do think bundling, Joe, is an answer here. Warner and Netflix are in a $10 bundle through Verizon. I'm not sure it's a critical, I should say Max and Netflix are in a $10 bundle through Verizon. And if I were Warner, I would look to bundle with everything I possibly can. Yes, the JV sports bundle probably works better for them in that regard than the others. But bundling to get price down, to get distribution up, this is all about getting major scale. It's very hard to do it on your own. If you can put together synthetic bundles with other services that make it attractive from a price point of view to really add that to your repertoire of what you have in the home, I think that is a major tool, and I would think that would be used far more than it is with today with a couple companies offering bundles. It should be much more widespread than that.
Yeah. That strike was bad because there's nothing to watch, Andrew. Have you seen this Capote thing? Tom, you watching that Capote feud thing? I'm trying to watch that.
On FX, you mean?
Yeah, on FX. On FX. Hulu. What you got anything, Tom? What am I watching? NCAA.
I'm just finishing up Beef, so I'm behind. I don't have anything. I don't have anything to do yet.
Kind of like the feud thing. A lot of stars. All right, Tom. Thank you.
Thanks.
Okay.
Good to see you.
What do you got anything? You got nothing.
Nothing at the moment.
You just got wide-legged pants or something.
In the fashion world.
Wide pants.
Coming up, why is a Chinese EV maker that's focused on mass-market cars putting out a nearly $250,000 wallet buster? Got pictures of the potential challenger to Ferrari and Lamborghini that you will want to see. We're going to show it to you right after this.
Asset.com.
Welcome back to Squawk Box. Berkshire Hathaway Energy saying that the Department of Justice has threatened to sue its Pacificor unit over its failure to pay $356 million in costs and damages associated with the 2020 Slater wildfire in southern Oregon and northern California. In a regulatory filing, the company said it received correspondence from the DOJ last month indicating an intent to litigate. Now, Pacificor is saying it is cooperating to resolve the alleged claims, including through alternative means. We'll see what those alternative means.
Right. Coming up, the potential pitfalls to Congress getting a deal done in time to avoid a government shutdown at the end of the week. We'll get you up to speed on the latest developments in Washington. And a programming note, as we head to break, don't miss an exclusive interview with JP Morgan CEO Jamie Dimon today at noon Eastern Time from the bank's annual Global High Yield and Leverage Finance Conference in Miami Beach. Stay tuned. You're watching Squawk Box on CNBC.
Asset.com.
The government just days away from a potential shutdown. Yes, could be, like I could have said this like 10 other times in the last year and a half or so, Emily, but this time it's for real. Joins us, Emily Wilkins joins us now at the state of negotiations in Washington. What's going to happen, Emily?
Morning, Joe. Well, yeah, Congress is once again heading toward a partial shutdown at midnight on Saturday, unless, of course, lawmakers find a way to pass those spending bills this week. And a reminder what's at stake, about 20% of government funding would be impacted. This could result in things like fewer air traffic controllers, reduced food inspections, and delays in grants for farmers. Now, what's different this time, lawmakers had hoped to finalize and release the detailed text of the funding bills this weekend, so they're close. But Senate Majority Leader Chuck Schumer said last night that Republicans are still debating what they need to see in the bill. The hardline conservatives have pushed over the past week for their priorities to be included. And in a letter to colleagues, Schumer said that it is his, quote, sincere hope that Speaker Johnson will step up to once again buck the extremists in his caucus and do the right thing. Now, Johnson quickly responded, placing the blame on Democrats for attempting to add brand new spending to the bill at the last minute. And Johnson went on to say in his statement that this is not the time for petty politics, and House Republicans will continue to work in good faith and hope to reach an outcome as soon as possible. Now, Schumer and Johnson, as well as Senate Minority Leader Mitch McConnell and House Minority Leader Hakeem Jeffries, are all going to be meeting with President Biden on Tuesday to try and hash this one out. Of course, there is the chance that they could once again kick that can down the road. But remember, kind of the big looming deadline is the end of April, where you're going to see some sort of 1% cut go into effect under the current framework. Andrew?
Emily, thank you for that. Joining us right now for more on the fight over the government funding, as well as this weekend's South Carolina primary win for former President Trump. Donna Edwards, former congressman from Maryland, and now an MSNBC political analyst. Also, Jeb Hensarling is here, former congressman from Texas, who served as chairman of the House Financial Services Committee. Jeb, I'm actually going to start with you. I'm curious as what your reaction was to what we saw in South Carolina over the weekend, what it portends for not the Republican Party per se, but for the general election, in fact.
Well, I think for the primary, it's game, set, match for President Trump. But if I was in his campaign, I think I'd be somewhat concerned. I mean, you've seen in several primaries now where significant portions of the Republican primary have voted against who is the de facto Republican incumbent president. Now, there's usually a lot of kissing and making up, as we know, once the putative nominee is decided. But in this case, you see a lot of polling data saying that a number of these Republicans are just going to stay home. And so, you know, when President Trump announces to everybody that if you give money to Nikki Haley, you're going to be on his permanent bad list, you're not building a political movement by subtraction. You have to build it by addition. So I think, again, there are some worrisome signs for the president, President Trump. Otherwise, I'd say right now there's about a 98-99% chance he's going to be the Republican nominee.
Donna, I want to get to the funding issues in Washington, but your reaction to what happened in South Carolina, and, you know, he just talked about some of the problems it portends for the former president. There's a lot of folks who think all of this portends a bigger problem for the current president.
Well, look, I do think Jeb is right about this. I mean, I listened to Donald Trump's speech on Saturday, and he didn't say anything that was about bringing his party together and sort of unifying now that he is pretty much going to seal up the nomination. And so I think it's going to make it very difficult for those voters to come on board. Look, I think this is still going to be a very competitive general election. We all know that. I think for President Biden, he has really, you know, pretty much consolidated the Democratic Party. He does have some challenges when it comes to response on the Israel-Hamas war, but I think that their goal is to try to wrap that up. And he's got some challenges communicating his economic success so that people are feeling that at home as they go into the voting booth in November.
Okay, so layer on top of that what may be a government shutdown between now and then. Who gets the credit? Who gets the blame if that were to happen, Donna?
Well, I think that Republicans will continue to get the blame. Keep in mind, there was a top-line spending deal that was made last spring that was abandoned by the House GOP, and I think that that is really challenging at this point. They also, on the supplemental, they had a deal on border security, and they've abandoned that. I think there's chaos in the Republican Party. It's hard to see how this gets pulled out by the end of the week. I mean, they've come off of a 2-week recess, and now we're facing a partial government shutdown at the end of the week. And so, you know, the challenge for Speaker Johnson is that he can't unify his caucus, his conference on this spending bill. And I think that that will continue to be a challenge no matter how much negotiation takes place between the Senate and the White House.
Hey, Jeb, what's the chance Speaker Mike Johnson is the speaker. I don't know if we were having this conversation 6 months from now.
Oh, I'd say a very high probability. He has a lot of credibility with people in the Freedom Caucus, I think also within the broader House Republican Conference. I think they're still somewhat in shell shock from what happened when Speaker McCarthy was relieved, shall we say, from the pitcher's mound. But if I could go back to an earlier point that Donna was making, and you asked about the shutdown, I think it's very noteworthy that 24 members of the Freedom Caucus have now publicly said they are willing to accept a continuing resolution for the rest of the fiscal year. I mean, let's face it, we're already 4 months into this fiscal year. So this is a change. And if they do that, they may miss out on what we call policy riders, and they would love to see policy riders, for example, dealing with just our porous border. But at the same time, under the deal that was struck previously, they'll see $100 billion in savings over the current baseline should they do that. So when you ask who's going to get the blame for a shutdown, well, if you end up with a continuing resolution that Democrats don't support, in that case, Democrats will have shutdown on their hands.
Jeb, though, before I want to go back to Donna separately, and we'll see whether these things get all connected up. When you start to think about issues around the border and some of the comments that we've heard from President Trump, or former President Trump and others, about not actually fixing some of those situations, who's going to get the blame there?
Well, look, it's really clear there was a negotiated deal in the Senate on border security. And President Biden actually made a lot of concessions that some Democrats, frankly, were not happy with, but would have gone along with. And Republicans, because of Donald Trump in the House, rejected that. And so even as they were demanding border security, they got border security, and then they walked away from border security. So I think it's hard to argue that, that this is real and that President Trump isn't playing a dirty hand here just so that he can have an election issue.
Hey, Jeb, would you have voted for that? Did President Trump say don't do it and everybody got in line, or was it a bad deal? It's compared to what was the number that were coming in, a lot of Republicans said, look, this is not a good deal. They're still allowing for way too many people to come in. And I know Langford put the deal together, but would you have voted yes for that deal?
Well, one, I actually reserve the right to read a bill before I vote on it. I think there are a number of good provisions in there, but I want to go back to something that Donna said. I mean, there's not a law that necessarily has to be passed here. It is night and day how the border was secured under President Trump versus President Biden. So much of this rests on executive authority. And it's clear that President Biden, up until he has seen his declining polls, has paid little to no attention of what's going on our southern border, where we have the United Nations basically coming across. These people aren't vetted. We don't know who they are. And so finally, the President Biden, was forced to act, but he could do this on his own. There doesn't have to be a new law for him to simply enforce. Day one, he repealed all the executive orders of President Trump on the border. So listen, there's no doubt in my mind, come election day, of who's going to get blamed for the crisis at the border. It's going to be President Biden.
Don and Jeb, we got to leave it there. I know the debate will continue, and I'm sure we will do it together again. Thank you very, very much.
Thank you.
Before we head to break, though, I do want to mention this. We have some breaking news because chipmaker Broadcom selling its remote access business to private equity firm KKR. The price tag, approximately $4 billion. It's a big number. The Broadcom division allowing users to access desktop and applications from any device. And the company's CEO, Hock Tan, has been working to streamline the company after completing its takeover of software maker VMware. That happened in November, Joe.
All right, coming up, that's the weirdest thing, isn't it? Broadcom, symbol AVGO. I don't know why, but still it's weird. Coming up, why the biggest sellers of EVs in the world is putting out a car that realistically has no chance of moving the needle on its top or bottom line. That story is next. Squawk Box. We'll be right back.
Out of the activist battle at Disney, in a presentation viewed by Reuters, Blackwell's Capital calling for Disney to come up with an artificial intelligence strategy, saying that could lift the stock price by as much as 129%. Blackwell's is also pushing for Disney to hire a chief technology officer. The activist campaigning for 3 board seats at Disney. And that battle is separate, we should mention, from the proxy battle taking place by Nelson Peltz's Trian Fund Management. Jeff.
The world's top EV maker, China's BYD, unveiling what it's calling a pure electric supercar. The model's priced at more than $233,000. Phil LeBeau calls it a conversation starter. Let's bring in Phil. Now, what do you make of this car? Sounds like right up your alley, Phil.
It is a conversation starter. Joe, are we going to see this car anytime soon here in the United States or outside of China? Probably not. And frankly, you're not going to see many in China. They've unveiled it. It's going to take some time to bring this to production. I do chuckle. Online, you hear people saying, oh, it's a Ferrari competitor. Let's be clear here. Ferrari is in a different category for a whole bunch of reasons in terms of desirability, the limited number of vehicles that are built, the fact that they have a built-in demand, if you will. This is a supercar in price only. Now, if it ultimately develops into a must-have among the world of supercar owners, then it's a different story. But at this point, it is a conversation starter. That's all it is at this point.
The news of the day, again, Wall Street Journal on the front page has that, I know you probably saw it, that bar chart. Then the story later in the paper, cooling demand puts electric car startups in a bind. I think everybody's in a bind, Phil. It used to be, and it points out, they couldn't build them fast enough. If we could build them fast enough, we could sell them. Right. Now they're building them just fine. They just can't sell them. And we're not going to be ready. All those fears that we keep talking about that all of us have, all the anxieties that come with an EV, is there enough money around for these startups to last until we get those problems solved in terms of infrastructure and battery life and all that stuff? I mean, you only have so much money before, and I don't even know if the big 3, right, do they have enough time to, with all the money they're blowing on this kind of stuff, they're eventually going to have a day of reckoning.
The big 3 are not going away. The big 3 are not going away.
But it's a lot of money they're making off of black hole.
You're absolutely right. Look, and that's the argument that you've heard in the last 6 months to 9 months. Why are you spending as much as you are spending on EVs when some of that should A, either be pared back, which they have now done, or B, bring that back to shareholders, which they have also done. And since they've made those decisions, you've seen the shares do a little bit better. Look, they're not off to the races, though the big 3 shares really haven't in some time. Though Stellantis did hit an all-time high, I think about a week and a half ago. And as for the startups, we'll find out, Joe, if they do have the money to make it to, let's say, 3 years from now. We talked with RJ Scaringe from Rivian. You heard that conversation, and he essentially said, look, we think that we have the means to get to the R2 production in 2026. They also have Amazon as a primary investor. So it's not like these guys have nobody who can back them up if they need to go to the capital markets again. But what happens with other companies like Fisker? We'll get their earnings report, or financials, I should say, for the fourth quarter later this week. Yeah. Lucid has the Saudi Arabian investment fund that is backing them. So we'll find out.
Yeah. Exactly. You couldn't even say it with a straight face. You had to qualify it when you said we'll get their earnings.
Hey, Joe.
Yeah.
Joe, don't forget, we're in Chile later this week. China's auto revolution. It's all about the exported Chinese vehicles, not just electric vehicles, all vehicles. And we will show you some things that will make you say, wow, now I see what's going on around the world when it comes to China exporting their vehicles.
I did forget that, so thank you for reminding me. We'll look forward to it, Phil. Thank you. Squawk Box, you bet.
download the app.
A little more than half an hour now till the opening bell on Wall Street. Joining us now, Sylvia Jablonski, Chief Investment Officer at Defiance ETFs. I think we're going to get some inflation data this week. Sylvia, do you need some cooler numbers to get really bullish right now, or are you okay with what we saw that kind of threw a wrench in the works a couple weeks ago?
Good morning, Joe. Well, I think the mood of the market is going to be dependent on some of the data that comes out this week. We know that, core PCE is one of the favored measurements by the Fed, and what we get there, that 0.4%, it's going to be hotter than the 0.2 reading, but you have some seasonality there. So I think investors understand that. If it's a lot hotter than that, I think it goes into risk-off sentiment for a little bit. We get some sell-offs, but if it's in line, I think the mood continues, and then you get some bullish sentiment into the market. I personally, remain bullish. I kind of don't care what happens. I care what happens over time. I don't really care what happens necessarily this week on that number.
Is there anything more important than that it's an election year? Is it that's a kind of an overriding factor? Is it not? It just historically seems to be.
Yeah, I think the fact that it's an election year, that often bodes well for markets. So I think that, you're going to get some volatility in the markets because of the fact that it is an election year. But what's more important than that is what we were just talking about. I think the Fed is kind of number one, whether or not we get rate cuts this year. I think geopolitics are a huge issue, right? We have to see sort of what happens between China and Taiwan. We have to see what happens in the Middle East, Russia, Ukraine, kind of the ongoing spending that goes into all of this too. So those are the potential black swans that could come out of nowhere. But overall, the economy is strong, the consumer is spending, there's a lot of cash on the sidelines, a lot of liquidity that could come back into the marketplace. So as long as we have, a kind of a reasonable election year and the data remains positive, the Fed gives us those 3 cuts, I think we're in a good spot.
Right, it's all kind of related. It's tough to stay really, really tight if you're the Fed during an election year. No one wants to be accused of political concerns, but more often than not, you don't want to err on the side of keeping rates too high. So maybe that portends well for some cuts later this year.
Yeah, I think so. And if we get those cuts, I think if we don't get the cuts, then all bets are off and you're going to start to see the market pull back a little bit. If we get those cuts, if we get those, kind of 3 cuts at this stage, I think that's great for the market. I think that helps small caps rally. It keeps up the growth rally too.
Okay, so good have you on the beginning of the week on a Monday. Maybe we'll check back. I know we'll see you again pretty soon. All right. Sorky.
It was fun, my friend.
It was good. Are you going to be...
Did you just call me Sorky?
Sorky.
Sorky.
You call me... Is that okay?
I've called you other things. So
yeah, you have.
There you go.
You have. That you can't say here. Make sure you're doing it tomorrow, Scott.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer. David Faber's back at post 9 of the New York Stock Exchange. Futures steady, coming off the 13th record close for the S&P this year, and the best week since mid-January. Packed schedule this week: PCE deflator, Fed speak, earnings in retail and software. Our roadmap begins with stocks in this AI-fueled rally. NVIDIA shares climbing once again ahead of the open, while Apollo calls the current AI bubble bigger than the 90s tech bubble.
Plus, we're on inflation watch. As you just heard Carl say, investors are awaiting key economic data this week. Potential big implications, of course, for rate policy. And Berkshire's cash pile hit a new record. Warren Buffett warning that the days of, quote, eye-popping gains, though, are over.
Let's begin, though, with NVIDIA extending that rally after reporting that blowout quarter last week, hitting a $2 trillion valuation during much of Friday's session. Jim, we were just talking off camera. Perfect timing for you to go into your investing club annual meeting over the weekend.
Thank you. A lot of people own NVIDIA. It's been our own don't trade position, and it's worked well. I think there's still a lot of skepticism about NVIDIA because I call it the nouveau riche stock. People just can't believe that it had this kind of level of revenue growth. That people think that maybe too many companies overordered. David, I have yet to find anyone who has said, you know what, I have too many of their cards, including Meta, which is a used buyer. And I think one of the reasons is because there's 20 to 1 improvement in return on investment versus current. And 2, really important, they run cooler. So what happens is that, as Jensen would say, look, It's just a replacement. We're replacing the entire system, but it's replacement.
But that goes to cost as well in the data center.
Yes.
Because if you do run somewhat cooler, you consume less electricity at least, and the buyer here is trying to figure out the overall cost.
Yes.
It's not just, all right, I know I get better compute power, even if there is a competing chip at some point from AMD.
Right.
It's the overall. So does it cost? Is it deliver more? Does it run at perhaps a more energy efficient level? I don't know. I'm just saying, Jim, that it's more than just saying at some point there are going to be competitors, because you have to consider the overall value proposition to the buyer.
Right, and I think that one of the things that is mystifying to people is they keep finding new customers. I mean, one of the things.
Well, he was. I mean, last time we saw Jensen, he was in the Mideast.
Right.
All these sovereigns potentially now are going to be buyers of the chips as well as they develop their own AI policies.
Right. If we don't, we're a cultural usurper, Carl. People just say, well, this cannot be an American or English product. Each country has to have its own. Now, they just can't nearly produce enough for each country. And when Amazon Web Services buys it, they use it for themselves and they use it for cloud. That's a fairly typical situation. At the same time, ServiceNow keeps coming up as an integrator of their product. Again, there was a good piece out this weekend that they thought was good. They're not promotional, but they do a lot of explaining about why this is occurring.
Meantime, Kathy Wood, for example, defending her taking some profits on the name, even though she says in a tweet that she was getting in at 5.
Well, look, I think that her decision to sell things or buy things is often good, but I was in front of a group of people this weekend who were right in front of, I was in front of them, and David, when you make a mistake or when you sell something too soon, you're not defending or liking how you did, you're regarding yourself as being...
That's like the audience for The Price is Right. They're so enthusiastic.
Well, there you go. Right, yeah. And I did.
Did they play that music?
No, but it was. This was brought to you by LaChoy, East meets West, Chinese food. But there is a sense when you. That's what LaChoy makes Chinese food. Don't you remember that?
Yes.
But I just say that there's a bit of humility that comes from meeting people, which would make you mortified if you do what Kathy Wood does, and it's. There's a humbling nature of getting things wrong that, look, not everyone has to be humble, okay? Humility is what I regard as a positive trait, but that doesn't necessarily mean you have to be.
No, it doesn't.
It's how you were brought up.
Listen, right. Meanwhile, why not, if you have a 150-fold gain, you may want to take some profits. That said, to come back to NVIDIA now, and just in this very moment, given what we know at least, and what we expect in terms of where we are and the evolution of this new wave.
Right.
I mean, you look at the earnings estimates and what people expect this company. I'm looking at a Goldman report.
Up 200.
But I mean, Goldman has them earning $62 billion next year. Net, that's pre-exceptionals, as they call it, to $73 billion in 26. I mean, back in a multiple, you're talking what, 28 times?
I'm so glad you mentioned that, because the best work on that is done by this guy Ben Reitzes at Melius. I mean, there's a possibility of saying that it's at 25 times earnings.
Yeah.
Well, I mean, Carl, 25 times earnings, that's darn inexpensive versus its growth. But no one wants to say this thing's going to last forever, and I think that Lisa Su is going to encroach eventually if she gets more teaching software. He talked about 40% as being inference, but people don't want to go over what he says. I don't know why, because the call's run by Colette Kress, who's fantastic CFO, but then he comes in and he answers questions. What we'll find when we go to this incredible conference that he talks about, you'll understand why you can get those kinds of numbers and why it may not be as ephemeral, and so therefore worthy of it. Again, like if you have it at 5 and you want to take a product, that's fine.
It's fine, but if
and,
you believe we're at the early stages of obviously an AI revolution, to lack of a better term,
I like that.
In the same way that the internet was, or that the move to mobile or cloud was, at least to a perhaps lesser extent.
Right.
This is still the name, Jim.
Yeah, look, I think that there are a lot of companies that are piggybacking off of it too. ARM,
There are
Micron.
plenty, and it doesn't appear at this point yet that you can buy companies that are benefiting from the end product in a real way.
No, I mean,
right?
it's just
the
super
use of
micro.
generative AI in the workplace by the enterprise. It's very, very
But
early
how often do
days.
you go to Copilot and get bids?
I don't use
You
it.
would try it.
Yeah,
I mean,
I just haven't incorporated
it's
any of these
low
things
period interest.
in my. But I'm not an early adopter.
Well, I'll tell you how it works. I mean, for instance, I have Huntington Bank shares on today, and I read all that I could find go over all the conference calls, and I'm looking for commercial real estate issues because that's what Barry Sterlick's alerted to us is in kind of the black hole of the economy. And I just do a commercial real estate, a Huntington, and it comes up with 2 reference points, and one of them that I guess I glossed over. So I think it's very good as a check to your homework.
AI.
AI, yeah.
Well, we're going to talk about it in the framework of media, given what Blackwell's saying about Disney, what Tyler Perry said about AI and his studio expansion on Friday, Jim. Jobs will be lost, I think, is the quote.
He's not spending right originally what was anticipated in Atlanta to expand because he doesn't have to, right?
After he didn't look at some of the capabilities.
But I'll tell you this, Mom said, look, if these people are really good, they've got more time to do what matters, less time to do what's proven. I mean, look, I
Jobs will be lost.
The CRE, the commercial real estate of Huntington Bank shares, because I had it from Copilot, which I regard as being a very good product.
And is that work that a producer would have done for you prior?
No, I don't do this. I look at it. I mean, I have a memo about it. I do the work.
So it's not replacing jobs, is Carl's question.
No, but we're better. I mean, I have Ben Stowe to look at it, and I will look at it.
Back to
I
the
don't wanna
200.
ask Mr. Steiner stuff that I don't know.
On the SPY today. Good morning, retail traders.
Waste their time.
I need to, when the computer can just, when I can
Oh,
just
hell,
talk to
I had
it
it on.
quickly.
Well, that's going to happen.
That's gonna
It's already
happen, right?
happening. Yeah, Jensen would tell you there's just a lot of people who just talk to the computer. That's the large language model. But remember, we have McDonald's.
Yeah, and they texted you during the show
Yeah,
on Friday?
just during the show, they've got 100. They're doing 100 McDonald's and testing where it's just you're speaking to AI. It speaks in 27 languages. The idea that Jensen liked was, isn't it great that you would know if you were someone who didn't speak English well that you could go to one of these fast foods and not be intimidated, and speaking with someone who actually speaks your language. Another thing Jensen constantly points out is that you don't have to get it right. You can ask and stuff and not really be as coherent. That's a little more critical than he is. But I just think that we're all waiting for this. But some people, like Mark Zuckerberg, have so figured this thing out. Ooh, he's really figured it out.
Well, as we broaden the discussion a bit, maybe those are good questions for the companies that report this week, like a Dell or an HP or an HPE.
Dell is really, HP's been featured, but Dell very much so featured. And I think that that's precisely what you keep expecting is your PC. Now, I don't think that HP has been as good a spokesman as it could be versus me about what your PC could do. But I believe there's big PC refresh, which makes me want to own Best Buy, which reports this week.
Okay, look at the performance of Dell, though.
Well, it's
just
Dell's.
just take that in. Michael Dell, quietly one of the world's wealthiest people, by the way.
By the way,
birthday boy last
one
week.
of the smartest.
Really? I'll
Yes.
say something really great about him periodically.
He's
and like
quite
his
something.
brother will text me, so that's nice.
Oh, well, yeah, he doesn't watch necessarily.
Look, Michael Dell is not
He's
sitting
busy.
here.
He's busy.
I said he's not listening to us. He's
No.
kind of like my wife.
You can't take offense at
My
that.
wife
Jeff.
said, "Hey, you still
Not
like that
everybody-
guy Jensen?" I
Not
said,
everybody
"Yeah."
watches. At least not at every moment.
Well, or as Lisa would say, you don't think I do anything? You think I just sit there and watch TV? Is that what you think I am? A housewife who watches TV? No, I'm like working. Not that a housewife isn't working. Just that she's saying that I am insulting her by saying, "What'd you think of the 9?" Which she also hates. The 9. Why don't you just call it a 9 o'clock show? Is it so like, who do you think you are?
You
The
take
9.
offense. Nobody in my family ever watched. Well, that's not
Is that
my
true?
mother.
Your dog?
Maybe Scoop watches.
Belle, his mom,
Yes, she
always
watches.
emails me whenever I say something nice about how much I love him and how much I missed you last week.
Yes, I missed you guys too. I missed you both.
Did you?
Now, yeah, I did. Sure.
You were
off in the morning.
I was actually at a conference Thursday and Friday. Saw Michael Dell speak.
You did?
Yeah, he's quite positive,
How was
as you
he?
might imagine.
Did he mention
He was
NVIDIA?
excellent. Not in so many words. No, he didn't. I don't remember him talking about that. We just got to remember, Michael Dell has an entire other business that BDT, MSD Capital run by Byron Trott and Greg Lemkow. That's advising and growing their
Byron
sort of
Trott does
huge business as well. So Dell's got his feet in so many different areas. Obviously,
Who else spoke at your conference?
There were many people at the conference.
Oh, there you
Barry
go.
Sternlicht, I got to listen to for a bit.
Commercial real estate.
Yes, he was, as
Did
you
it
might
drop in
imagine.
value while he was there?
He was not overly positive on the future in some
Is SPACs?
certain areas. He didn't talk about SPACs.
He didn't?
No, or Cano. Remember, did you see that one? Yeah.
Cano.
Cano, C-A-N-O. It went bankrupt, yeah.
No.
Yeah,
I know.
A couple weeks ago.
You had to bring that up. Couldn't you just be joyous? You have to
Isn't
bring
Carl's haircut like perfect? Look at that.
It is perfect.
Oh my!
I mean, I'm just looking at him today.
I'm going by the strong.
I wasn't going to say anything, but
Maybe it's that I haven't
Holy,
seen him
I'm
in a week.
overweight. I'm overweight. His haircut.
Look at that. He looks fat.
You only get one shot because I'm off the rest of the week doing my own shooting.
No,
Yes,
because
so-
I was going to make you a tactical buy.
He's a buy today. He's a hard buy today.
David's right. It's a busy week for conferences again this
In
week.
UBS Evidence Lab, what they've been saying about your hair.
Jamie Dimon, we're going to have on the half. Is
that
That's Leslie, yes.
Oh,
Looking
man,
forward to that.
that'd be so good.
We'll talk about that. We'll also get to Berkshire today, the messages that Buffett sent in his letter to shareholders over the weekend. And as Jim said, a lot of earnings to get to over the coming days, including CRM, Lowe's, TJX, Best Buy, Hormel, Autodesk, Zscaler, and more. Futures hanging in there as we're coming off of record closes. Don't go anywhere.
Walmart. What happened here? Oh, they got split? What the hell did I just see? What did I just see?
Or download the app.
Warren Buffett's Berkshire Hathaway up in the pre-market. The conglomerate reporting a 28% jump in Q4 OperaNet, helped in part by strength in insurance. Cash holdings expand to a record high, surpassing $167 billion. In his annual letter, Buffett says, quote, "There remain only a handful of companies in this country capable of truly moving the needle at Berkshire, and they have been endlessly picked over. by us and by others.
What
Outside
the
the U.S.,
fuck?
there are essentially no candidates that are meaningful options for capital deployment. At Jim also kind of rules out the idea of buying all of Oxy.
Right. Boy, those Japanese buys were sensational over time.
Amazing.
He was so early on that.
Amazing.
You got to credit him for that.
You
Wow.
totally have to. Like only in 2020, he started buying these trading
That was
businesses.
amazing.
They had what, 23, 24 billion. I made 8 billion in profit, far exceeding, obviously, the S&P. I mean, yeah.
But
There's
he
only
was-
one Buffett.
That's absolutely right. But there's several railroads.
Yes.
And his discussion of BNSF, Burlington Northern, was very downbeat.
Huh,
He
I don't
really
get
just
it.
basically said this has been not a great, called an acceptable return. But I thought it was interesting. He didn't like the numbers, so I went over the numbers of others. The operating revenue of Burlington Northern was minus 6.1. The operating revenue of CSX was minus 1.3. Union Pacific minus 3.0. Canadian Pacific plus 42, but that's not a good compare because they made that acquisition. Net earnings minus 14. The net earnings of CSX minus 10. Net earnings of Union Pacific minus 8. I could throw in Norfolk Southern, they had the Palestine issue, but their adjusted earnings, their net earnings was minus 44. But as among CSX and Union Pacific, can't really do Canadian Pacific, but I will tell you it will be. His was the most disappointing. So I completely understand why he is not all that in favor. But people don't talk about that. It's not mentioned, but Burlington Northern's net earnings were off very much versus the others. And Union Pacific, with the new CEO, seems like it's on a certain basis better run.
Although all-time highs for Berkshire, doubling the S&P gain this year.
Absolutely, but I think that one of the things that if you look at the CPI, you'll see that auto insurance is perhaps maybe one of the most out-of-control things that you have, and Geico is auto insurance. So that doesn't mean you don't have to asterisk and saying, hey, listen, our prices went up, but you can say, look, their prices went up and they stuck.
Right. What do you do with 167 billion in cash?
Let's ask Jensen, because he could be. Well, I mean, I'm just saying.
No, but I mean, what if you're Buffett and you have typically deployed it? I mean, he's been waiting and waiting and waiting. He's not done a large deal. I can't.
Okay,
I mean, Burlington obviously is one. I can remember Precision Castparts. You can go back, but it's a long time since he's deployed in a deal a significant amount of cash.
Right, but I think that we're thinking about him way too. If you wanted to, there are so many companies that actually are now 80, 90 billion that you might think might be worth it.
Yeah.
David, you were recently quoted in the Disney letter. I mean, let's think. If he were to buy Disney and amalgamate things at 197, but you could always borrow some money.
He could. I don't know that Warren is interested in any way, shape, or form in trying to take Disney private, but it's an idea.
Oh,
sure,
suddenly
Jim.
that matters. Okay.
Sure.
No, he hasn't particularly liked Paramount. That's why. I wanted to get to
Carl,
Paramount.
before we can get to it, but the key question, of course, is he says that his successor is ready to go, right? Buffett.
Right.
Bringing.
And also, kind of a shout out to Munger about his push to back off of sticking to Ben Graham.
Absolutely.
From the very beginning.
I mean, it's always the letter's great. I only put it out to Burlington Northern BNSF because he was so negative. I wasn't prepared. And the big focus is buying back Coca-Cola. He's happy with that return, which is meager versus some others.
I know.
But Amex had a great
Also conferencing this week.
Yes,
We'll get a little bit
great.
more on Disney, as David mentions, some incremental news regarding that proxy battle, and we're going to get Paramount results later in the week. Kramer's Mad Dash and the opening bell coming up in 10 minutes.
Google. Google's pulled back some at open here. This was on my watch list last week too. We had a little bounce off the 1, 2, 3. And then WBD had a knife. Off of earnings. And then Carvana's at $70. Ooh, damn. Earnings. It's highway robbery out there right now in the car sales. They really suck. I think it's the worst I've ever seen it in my lifetime. And I was complaining about the empty lots around here during COVID. Almost want to short this 50% pullback on Carvana. AMD, Apple, Amazon up. Meta down.
All right, first mad dash of the week. Of course, since we have 6 minutes before we get started with the first trading day of the week, you want to talk a little Salesforce?
Yeah, sure. Salesforce has got 2 upgrades ahead of the quarter.
CRM.
And the that is the 28th. The reason why I fear, I'm not 2 upgrades, 2 price target bumps, which is kind of like an upgrade in the sense that, wow, you know what, this is going to do better than expected. Now, David, my problem with that is that now it sets up a quarter that is going to be difficult, given the fact that the bar's been raised. But they are a big user of AI, of Jensen, and what they use it for are queries. You know, queries is basically the reference part, the inference part, okay? I should say inference. 40% of their business at NVIDIA is, can you infer? So I ask you a question, and they're asked trillions of questions, which would say, what would make it so that you would buy more Ducatis? That's a good customer. And the answer will come very quickly, and if you speak to it, you don't have to do a query, you don't have to go to a data scientist. So the head of Ducati can ask the question. The head of Brunello Cucinelli could ask the question. I think they understand Italian. So what happens is that you get the answer very quickly about what would make it so they would, or what color would they, or what sales pitch, and that's what Salesforce is doing. That's how they use AI, and I think it's pretty impressive.
So they're one of the companies that will show meaningful, you think, improvement in their overall metrics as a result of the use of generative AI?
I mean, I think that's going to be the theme
for their
of their
customer
conference
base.
call. Yeah. Now, it is interesting that they're not mentioned. It's always been ServiceNow that's mentioned, and yet I think that these guys are using it very well because Einstein, which is their artificial intelligence, in a lot of ways is powered by this kind of chip. So I just say that it's bars high, but it'll be the first company not really pushed by NVIDIA to talk about NVIDIA.
All right, we'll keep an eye on Salesforce shares, of course, and the broader market as well. Opening bell is just 4 minutes away. And by the way, don't forget, you can catch us anytime and anywhere. Please listen to and follow the Squawk on the Street Opening Bell podcast.
Three more minutes. SPY at the VWAP, below it, to the 200 SMA. It's got to hold that. China Commerce Ministry says Minister Wang expressed China's grave concern over U.S. tariffs in Taiwan. America, you suck. I do not want to live like a liberal. See what happens here at the opening bell.
Winning features of our checking account, plus cash met.
See what Schwab's like when they open up. I'm going to have to listen to a bunch of garbage. Smart thinking there. Ding, 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 ding.
For investors.
Well, I timed that perfect. Dear, dear, Dune. Right now we've opened up above the 200 on the SPX. IWM's pulling back to a double bottom. QQQ breaking out. Double topping on the SPY. $27th. Double top on the SPY. SPX double top. The 50/70s. It's starting off with a put right now. We got Zoom earnings coming out. Did you make a decision? Only calls.
Makers right now, especially on the EV side.
All right, let's switch gears and talk about CRM Salesforce. What are we seeing in terms of the analyst commentary ahead of its results, which are due this week?
Yeah, very different story for this company, which is up 79%, coming into today. We've got two analysts raising their price targets. Jefferies raised their price target to $350 from $325, kept a buy rating on the shares. They said that their survey
Everybody's got a buy rating on CRM.
Their checks indicated manufacturing and tech
Earnings this week.
rebounding while public sector demand remains strong. Jefferies expects sales.
SPX is at one. I mean,
Q4
yeah,
CRP,
$2 SPX.
guide conservatively for 2025.
On the put.
Further, they see estimates. They see estimate of a 10% top line growth for 2025, which is slightly below the 11% the street was looking for. About 31.5% margins, which is slightly below the 31.9%. Jefferies also sees Salesforce as a $10 plus earnings story in 2025. Citi raised the price target as well to $325 from $265, kept a neutral rating on the shares. They said as they head into that Q4 report, they see them as balanced. They said stabilizing demand signals are offset by some of the lagging seat-based downsell headwinds, limiting some of that reaccelerating growth potential. But Citi says partner checks were mixed, but lean modestly more towards positive versus last year, as some of these companies are seeing more green shoots, like front office budgets backing to growth initiatives. And that'll be really a big part of their story this year is whether or not we see that software spending pick up again in these companies. We know a lot of them have slowed down because of the macroeconomic environment. A lot of these software companies have been offering shorter-term deals, trying to entice some of these companies to invest in IT again, and that'll be the big question mark for a company like Salesforce this year.
Is there anything else that stood out to you in either the Jefferies or the Citi note in terms of where they're seeing Salesforce go?
Yeah, I mean, I think it'll be interesting to see in those notes. I think they're pretty cut and dry. They're seeing these surveys show a little bit of positivity. I think if we look at what Salesforce has done, they've expected deceleration throughout the year, right? They expect a 10% year-over-year revenue growth in Q4. Full fiscal year, they expect about 11%. Earnings per share growth of 34 to 35% year-over-year. Although we've seen that revenue slow, free cash flow and adjusted operating margin have been on the rise, and that's in part due to some of the cost cutting that Salesforce has done. We saw, they've laid off about 700 employees recently, and if you look back in 2023, their reduction was closer to about 8,000, right? So that has really started to impact operating margin, which they expect to rise from 22.5% to 30.5%. It's also raised that free cash flow, which they expect to be about 33 to 36% in 2024. So that's something that investors are going to be looking at, whether or not some of these cost reductions are really going to improve. And also, if we start seeing that spending from companies improve as well, then we could start to see that revenue ramp up a little bit. But right now, the expectation is to see a deceleration throughout the year.
All right, let's talk about another stock in another sector. Let's switch over to the retail sector. We've got Gap in focus this morning. That stock is up this after an upgrade. Talk to us about what's happening here.
Yeah, JP Morgan upgrading Gap to neutral from underweight. Price target now at $20, up from $16. The analyst said recent fieldwork points to Old Navy and Gap stability with inventory right-sized as of Q4 of 2022. The firm also sees the second half of 2024. They see Athleta having an opportunity to refocus on performance under their new leadership. This company also has earnings coming up March 7th after the market. We know the company, again, another company focusing on cost savings, right? They're really focused on this $550 million in cost savings they've got planned. If you look at the first 3 quarters of 2023, they generated about $832 million from their operations. That's a significant improvement from what we saw last year. Free cash flow at about $544 million. That was up from the negative $689 million we saw a year ago. All of those things are good. The cost-cutting part of it is certainly a big part of the story. But of course, we look at their individual brands. Old Navy, which makes up over half of their revenue as of last report, those sales fell about 1%. In the last report, comp sales fell about 1%. If you go down the line, Gap, Banana Republic, those have been a struggle for a while. The Athleta side, which the analyst had mentioned, this is an area where I think the company really had high hopes in the beginning. A lot of investors did as well. We saw some pretty good performance in the early days of Athleta. Since then, that's been one of the worst performing, at least last quarter, is one of the worst performing segments. Sales came in down 18% at just $279 million. Comp sales fell 19%, which was a big drop for that competitor to Lululemon, which is really what it's kind of been looked at by some investors out there.
Yeah, that's a good point. And when you think about Gap,
$195, $2.
It's hard to say compared to Abercrombie & Fitch because you've seen that
Take profit if you like.
huge growth. But Gap is up on a year-over-year basis. Year to date, not so much. Anything else that is coming up in the JP Morgan case note? I know there have been concerns about inventory with regard to Gap. Old Navy had
$2, baby.
speed bumps, and it's kind of coming back.
302.17 is my resistance on Salesforce. We're at 205.
From the note, but Old Navy, to your point, has
from 165 on the put.
The crown jewel of Gap, and when you look at the actual Gap segment, that store, that namesake store, that's really been one that struggled for a while. It's continued to struggle now as we've seen them to shut down certain brands. The gross margin side of it, that's improved again.
205, baby.
We saw layoffs, we saw less promotions, we saw lower material costs.
210.
Margins improved by about 3.9% to 41.3% in the last report. That was well ahead of what analysts were expecting. So continuing to see those steps in the right direction.
220.
Yes.
Oh yeah.
Focusing on really making sure that they're running an approved operation, right? That's cost savings. Seeing some of the clothing sales go out the door, see some less discounts. That's really going to be the focus of the company, and whether or not they're able to achieve that this year, it could depend a little bit on what we see with the economy, but that's also going to depend on some of the execution around some of their names. I think most importantly is probably going to be Athleta.
All right, and Jeff, one more stock we want to take a look at. Moderna, it's under some pressure this morning. Tell us why.
Yeah, the downgrade from HSBC reduced from hold with the price target at $86 up from $75, so they did raise that price target. They said Moderna's outlook for 2024 is underpinned by the prospect of their COVID-19 vaccine revenue and the RSV launch. However, they said they're skeptical.
Nice.
On the company's 2 phase 3
220 out.
for the personalized cancer vaccine program in the medium term, noting that the RSV vaccine efficiency has concerns as well. Efficacy, has concerns as well. Despite the pipeline de-risking, they said the recent RSV vaccine data update indicates further risks to near-term growth. This is an interesting story, an interesting view coming after that last earnings report where, we saw earnings per share beat, we saw revenue beat. Now, granted, those numbers were down significantly, and that was certainly in part due to that COVID-19 vaccine spike backs. But they netted about $800 million in U.S. sales, about $2 billion international markets with the COVID-19 vaccine. We know they plan to return to growth. That's their big expectation going into 2025 and even 2026. The RSV vaccine, we're waiting for some more decisions on that coming out regulatory-wise, and there's certainly some competition there. We know Pfizer, GSK, they already have those vaccines out there. Moderna is hopeful that theirs is going to have a competitive edge because it's their pre-filled syringe. But that's going to remain to be seen. In the meantime,
God darn it,
we've got a
there's
pipeline
40.
of about 45 products in development, 9 of which
Son of a
are late-stage
bitch.
trials. So there are some high expectations for Moderna, and hopefully they're getting away from just being known for the COVID vaccine
Oh my!
and being seen as for some of the other pipeline products they have coming in.
Shit.
Jeff Pierce, great roundup. Thank you.
Well, there it is.
Up next,
275.
We'll preview Monster Beverage ahead of its earnings.
280.
Dive into On Semi. That's coming
Woo!
on Morning Trade Live.
Man, I just sat there and watched that.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights.
Look at calls. We get down to the pyramid. To the megaphone.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device, for free. Schwab Network.
Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Morning Trade Live. Time now to go inside out on a pair of stock picks. Joining us now is Lamar Villery, Portfolio Manager of Villery & Co. All right, Lamar, let's dive right into this. We want to start with Monster Beverage. It reports earnings this week.
Monster Beverage.
Well, we're looking for another good number. These guys really have consistently delivered on their earnings. And even deeper, what we're really interested to hear is how the hard seltzer business is going. That's a new business that they've gotten into. We want to hear some details of how that's growing. We think that's
What the heck?
area for expansion. But generally speaking, Monster's been a fantastic performer, and we'd be surprised if we don't see another great quarter.
And then let's talk about the competitive landscape. How does it stack up to its competitors in that space?
Yeah.
Sure. I mean, it's with Red Bull, it's effectively a duopoly. There's no brands who've even been able to come close to their business. We really view their biggest competitor, or at least the most similar type of company, would be more Starbucks. This is not competing with a Gatorade. It's really the Red Bull, but it's what are you drinking in the morning? People are either going to go for a Monster Energy or they're going to go down to Starbucks or brew a pot of coffee at home. And Monster's done a fantastic job carving out that segment.
And then what are we looking for in terms of its product pipeline and any rollouts expected?
There's always new products on the horizon. These guys have been very successful with that. We'd expect to see, we're really looking at, like I said, is the details on how the hard seltzer is going to come out. We think that, in long term, it's not going to be a huge mover of the needle right away, but we think that's a big area for growth as these guys plan out their next 5 and 10 years of growth.
And Lamar, I want to ask you, when you think about the potential for this company as an acquisition target, Coca-Cola owns nearly a fifth of this company. Is the expectation that it would end up being acquired?
I think so. I mean, Coke would be probably the only natural acquirer. Unfortunately for Coke, they've kind of waited too long. I mean, Monster's really a huge operation, so it's going to be, if they do decide to do it, it will be a pretty pricey purchase for them. But definitely Coke, they're very, Coke, is very helpful on the distribution side. The two businesses are very intermingled, so it'd be difficult for somebody other than Coke, I think, to come in and take out Monster.
All right, Lamar, stay with us. We'll talk on Semi in just a minute. We want to bring in now Tom White to trade Monster. Tom, let's talk about what you're seeing in the options market. I do find it interesting that Lamar just mentioned seeing Monster as a competitor to Starbucks. I didn't think of it that way because I think of it as, say a Red Bull competitor. But how would you trade this, and what are you seeing in the options market for Monster?
It's volatile going into this report. You've got that event risk. The option market's pricing about a plus or minus 6% move in the shares, just over $3 either way. Now, this stock's consolidated quite a bit. It's down on the year, nearly 4%. So you got to take that into consideration. If you're more bullish on this name, I came up with a trade that takes advantage of upside while limiting anything to the downside in case we do see a bump in the road as far as earnings go. So I went out to the March monthly cycle, so just about 18 days till expiration. I'm going to do a customized trade where both sides of this position are bullish. So I looked at selling the 55 strike put and buying the 50 put. So you're creating a short $5 wide put vertical that collects a credit, and it's going to offset some of the cost on the purchase of the March 55 strike calls. You're paying roughly about a 60-cent debit as a package for this one. So by doing a put vertical on the downside, you're actually making it risk defined to the downside in case we do get a slip in earnings. But then you take advantage of all the upside on this. If you pay a 60-cent debit, that's going to be your risk from 55 and above, but you've got more risk to the downside because you have that short $5 wide put vertical. Your break even 55.60 over the next 18 days. Stock's basically right there right now, so you don't need that much of an upside. So this type of strategy, while there's still risk to the downside, you're limiting it by creating that risk-defined short put vertical to help finance the purchase of that bullish call. So this might be the way to play it if you're expecting over the next nearly 3 weeks that we're going to see a pop in Monster post-earnings.
All right, I want to bring Lamar back in to switch gears and look at another stock. We want to talk on Semi now. So, Lamar, tell us what you like about on Semi.
Sure. So, it's not an AI stock, and as a result, you're not paying nearly the multiples as you pay in the AI stocks. But the biggest things we'd like to see with on Semi is, number one, their huge exposure to the 5G build out. That still has a long way to go, even though we see it in the major cities. There's still a lot of spend there, and ON's a big part of that. There's also the fastest growing part of the business.
Spy back to the VWAP.
They've got, it's about a 30% grower.
SPX back to the 200.
That's really the most exciting part of it. And just in a big picture, Hassan,
on the 1 minute,
we've invested with him in the past, has done a really nice job of focusing this company on boosting margins and really growing in the more attractive areas. And he's transitioning. He's gotten them to about 45% gross margins. We think he's going to be able to get to 50%. So that's one of the things we, and I think investors will be looking at, is how that transition comes along.
Is Is it too late though for onsemi for investors?
Is it too late to participate? No, we think it's got the valuation still attractive. So no, we think it's.
Okay, and what about any speed bumps? Are there any potential speed bumps that you would watch out for?
Just slowdowns in
Fudge.
the other areas.
Man, them things are at 235 now.
Electric vehicles or just vehicle technology in general. Obviously, the headlines recently have been that the electric vehicle rollout has gone a little bumpier than a lot of people had hoped. So that could hurt their growth in that area a little bit.
That'd have been a good payday.
Just a slowdown to their work they've been doing to improve gross margins. I think investors would be pretty disappointed.
No, I already got out of these. Okay, never mind.
All right, Lamar Villery, Portfolio Manager of Villery & Co. Thank you, Lamar.
Thank you.
We want to bring. Thank you.
Still think we can come back down here for the third time
to take a look at this trade for onsemi
and buy him down here.
Heard from Lamar about the kind of how he views this and even potential risks. But how would you trade onsemi?
Well, it's been a couple volatile quarters over the last 6 months or so for onsemi. They reported earnings on the 5th of February. Their automotive segment saw blowout numbers, but as you mentioned before, some maybe bumps in the road for this company with maybe some consolidation in sales as far as EVs, and their automotive segment might create some headwinds. But I looked at this one a little bit differently
right there.
than
Perfect.
the last trade we looked at in Monster. I looked at something that gives myself some more duration in this one if you're bullish on semi. The all-time high is about $111 that we reached last July, so it's significantly lower than that. So I went out to the June monthly cycle, so about 116 days till expiration on this position. And I'm going to buy an at-the-money call, slightly in the money, the 75 strike call, and then against it because maybe I think it's going to go up, but maybe not explode up to $100 or so. But you'd still profit if it did. Sell the 90 strike call against it. So you're creating a $15 wide bullish call vertical to the upside. You're paying roughly about a $5.70 debit for that. That's going to be your risk, $570 on this. Your break even to the upside where you start to profit on this one at expiration is $80.70. That's about 5% above the current share price. So you don't need a monster move in on semi to get above that break even, but you take advantage of all the upside here with basically about 5 months in this position. Now, if you look at it, why do you sell the 90 strike call against your long 75 strike call? Well, if you expect it to go above that break even, just below $81 a share, how much percentage gain are you going to need to get above 90? And that's going to be about a 17% gain to reach that 90 strike. So while you're limiting your upside, if it does go above 90, at the same time, the expectations or probabilities that it goes above 90 over the next 116 days is lower. So offsetting some of the costs on that bullish 75 strike call by selling the 90 strike call creates this bullish call vertical.
All right, Tom White with how to play onsemi. We've got the second hour of Morning Trade Live coming up. Alex Coffey will have the latest housing data, and our morning trade is in Eversource Energy. The second hour of Morning Trade Live is up next.
Ameritrade is now part of Schwab, bringing you an elevated experience.
Not much going on today.
Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support
Meta,
from Schwab Trading,
double bottom.
our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Watching real close here.
Welcome to Schwab Network. Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up to the minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day. Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Carvana ripping.
Welcome back to Morning Trade Live. I'm Diane King Hall. I'm in for Oliver Rennick. We are about 30 minutes into the trading day. I want to get right to the market action to see how things are shaking out in the early part of this session. Let's take a look at the S&P 500 first this morning. It is pretty flat, as similar to how it opened.
Double top,
Dow,
Carvana.
Bigger advance at the moment, up 92 points, a 0.25%. NASDAQ has been flip-flopping. You're looking at it just flat at the moment. Russell 2000 has flipped positive, better by 13 points or a little more than 0.5%. So you're seeing more action in the small caps now. Ahead on this second hour of Morning Trade Live, we will preview Zoom Video's earnings. That'll come after the bell. Alan Nuckman will join us with his morning trade in EverSource Energy. Plus, the Chart Master previews earnings for Workday, Norwegian, and AutoZone. And the Dana Telsey joins us to look at some more retail earnings this week. First up, though, we've got some fresh housing data just out from the government. We want to welcome in Alex Coffey, co-host of Next Gen Investing, to dive right into these numbers. I saw these numbers. Let's get us set up into this. Take us through the numbers.
Yeah, January new home sales, 661,000, slightly below the expected 684. This also accompanied, this report was joined by a prior revision lower as well. It brought down the prior number from 664 to 651. Month over month on a percentage basis, it would have been an increase of 1.5% from that revised lower figure. And the prior revision would have been a 7.2% advance for this. So slightly worse than expected, not seeing much reaction at all in the overall market as big tech stocks are weighing on the market just slightly here today so far, but a little bit stronger market breadth. As you mentioned, the Russell's strong and about 60% of the S&P 500 names advancing. So not huge market reaction in the new home sales figures. Home builders as a group up small on the day, not reacting much to the figure either.
Well, you don't think?
It was interesting to see that revision because we know previously it was 664 for the prior month. What about other market reaction when you think about this latest housing data? What are we seeing in terms of, say, the yields on the 10-year, et cetera? What are you seeing, Alex?
Yeah, we're not seeing much in terms of reaction, but the general trend as of late, of course, has been rates moving higher, and it's been moving higher on the shorter term faster than the longer terms. What I mean by that is that short end of the curve, your 2-year Treasury has been moving faster to the upside than, let's say, the 10-year Treasury interest rate or even the 30-year, and this has, of course, brought that yield curve even further inverted. As we've started to see some steepening, that's sort of unwound as we've had somewhat of a bear flattening in the yield curve, prolonging this kind of uncertainty as we kind of head into the summer as the expectation for potential rate cuts.
Yeah, one other thing that I saw that stood out that was interesting to note is the median sales price has increased, and we know there's just been this challenge within the housing market because there's just not enough inventory. So I saw the median sales price ticked up to above $420,000. Last month it was $413. So it's interesting to note that there's this just really tightrope that the housing market is walking in, Alex.
Yeah, no, and that would, of course, have direct impacts down the line when you think about sort of the shelter impact on inflation, the cost of living for consumers, not only buyers of homes and new homes, but also renters of homes as well. If the properties you're renting are more expensive,
50850.
Those who are renting them to you are going to demand a higher return on that property. And so it has its kind of ripple effects through things, and you can see how it can impact the economy going forward. We don't see much reaction, like I said, in the market right now, but that doesn't mean that it's not important and it can't have a longer term impact. We have seen, of course, this trajectory of kind of slowing growth in new home sales, but so much of that is just inventory, to your point. If they're not available to be sold, it's hard to sell homes.
All right, Alex Coffey with the numbers on housing, new homes, 661,000. That's the latest number. Alex Coffey, thank you. All right, we've got some earnings coming up after the bell. Zoom will be reporting. For a preview, we want to welcome in Kevin Hinks. All right, Kevin, take us through, Zoom was one of those pandemic darlings. It has not been Zooming for a while, but what's the street expecting?
Yeah, hello, Dan. Moving from the economic data over to the earnings coming out this afternoon after the bell. Zoom video, you're right. It hit an October 2020 high of $588, now trading closer to 63 3/4. So what they're expecting is $1.15 earnings per share. That's versus $1.22 last year, $1.29 last quarter on revenue of $1.13 billion. That is compared to $1.12 billion a year ago and $1.14 last quarter. So pretty flat on the overall revenue. And what they're looking for here, can Zoom Video accelerate their sales growth, right? This is a company that, like you mentioned, hit the wall during last year and Wall Street punished them.
Symmetrical flag on the SPY.
6% in 2023 with the NASDAQ up 43%. Now, here's some good news on Zoom Video. What do they have?
Zoom.
They have cash. They're sitting on $7 billion in cash.
There you go.
Cash flow currently of 40% of sales. That is up 60% year over year.
Zoom has some cash.
Healthy,
That's good
balance
news.
sheet on a Zoom Video, but they've got to show a reinvigorated growth and more initiatives to grow, or Wall Street will continue to punish them, Diane.
Yeah, it's true. And when you think about who they're up against, I mean, their competitor, now they're going up against a Microsoft. Microsoft has Teams, but Microsoft really is that AI story now, and even Google and that landscape. So you wonder what we're going to hear from Zoom on the AI front.
Yeah, well, I mean, I'm sure that AI will come into that conference call. They'll address it and how that works through.
Okay, well, I'm going to go do something real fast.
Zoom Video has to show some initiatives to reignite growth in this company, bring more users in, both individuals and corporate. I think that's the key. They've got to show some improvement there, Diane.
And then I got to ask you, when you think about kind of the impact to Zoom from so much of the workforce being called back into the office.
Sure.
Yes, there is still this hybrid factor. What
Tesla
do you think
pushing?
we're going to hear from Zoom when it comes to the impact to their business?
Well, you're right. Obviously, they do better when more people are remote or not in the office, right? But you talked about some of the competition from Microsoft Teams and all these other video chatting groups that can compete with them. And that's what happens when someone becomes a Wall Street darling like they did during the pandemic. You're seeing it now play out in AI. Competition is going to
AI.
Remember, they don't have a Microsoft portfolio of services they can offer. They are a Zoom video company trying desperately to find other things, but they really are a one horse race here. Their expertise is in video conferencing.
That's right. I mean, yeah, it's hopefully they've got to come up with something else.
Yeah.
Like you said, their cash pile looks good, but they've got to be more than a one-trick pony. All right, Kevin Hinks, fantastic insight again. All right, time now for the morning trade. We want to bring in Alan Nuckman, Chief Market Strategist of BullseyeOption.com. All right, let's set the kind of stage here, though. Give us your take on the markets right now.
Well, go markets. You know, we've overextended a bit. I would like to see a bit of a pause, but everything remains strong, and we are holding, you know, above this 5,000 level in the S&P and continue to make new highs across the board. The one laggard has been the Russell. So the Russell's been within a range here. If it breaks up to the range, makes some new relative highs. That target's about an 8% move. I think the catalyst for the market could be a little bit of a downturn in the dollar. If we get below this 103 level, that could be the next catalyst and boost all stocks.
I like that. Go markets. You're taking
Go,
a
baby.
throwback there. Go gadget. All right, let's take a look at one individual play. You're trading Eversource Energy. Why is this on your radar?
Well, I trade what I see, and it's been a little bit more challenging, obviously, with a lot of stocks that have go and gone. That it's hard to chase. I'm not someone that's going to jump on a horse that's, you know, already lapped the field and taken off. And so I'm looking for stocks that maybe have been trading at a discount to where the market is. And so this stock is 40% off. It's 2022 top. It's trading about 59 right now. But if you look at it technically, for 5 years, we've traded within a range, a wide range, obviously, but we made a nice double bottom in the last 5 years. The last 6 months, we've traded between 55 and 65. So that's very important that we've got this extreme bottom at 55 for the last 5 years anyways. 60 is an important pivot. If we can get above the 60 level, what I'm seeing is leverage buying, leverage accumulation. That's a strong signal for me that somebody sees something. And I also saw bullish divergence, and the fact that when it made new lows, it did not make new highs, implied volatility. That's a sign of a sentiment shift in a stock.
All right, so you said that's a sign of a sentiment shift in the stock. If the sentiment shifts again, how would you trade it?
Well, what I'm looking for here is that I like this bottom base. I like this technical pattern. So I'm looking at a long-term option. I use a very, very basic stock substitution strategy. So I'm looking at buying the 55 call. The 55 call for July is trading for about 5 right now. It's only $50 more expensive than the April option. You're buying a significant amount of time in comparison. So this has 5 months. 55 calls trading at about 5. It's got a nice high delta of 70. And if we just get to that range top at 65, this recent range top at 65, the breakout target 75, but the recent range top at 65, this option will gain 100%.
All right, Alan, I want to ask you just final thoughts on either Eversource Energy or kind of what you're seeing in the broader market landscape.
Everything's positive. You know, it's not my job to try and pick the top. And that's been very dangerous for people for weeks now, going on months. So it's about having the rest of the stocks, 490 of the S&P stocks, you know, have a lot more upside potential than the Mag 7. So, you know, that's what I'm looking for. The laggards to play a little bit of catch up, and it's about risk reward. It's about positioning for success. And a July option has plenty of time for a stock that's trading at, you know, significantly off its highs to make some recovery rally here.
All right. Well, I heard one of our colleagues earlier mention that old adage, the trend is your friend. So
you got it.
We're not going to fight against that. All right. Alan Nuckman, great perspective. BullseyeOption.com. Thank you, Alan.
Thank you.
The Chart Master is up next. We will preview upcoming earnings for Workday, Norwegian, and AutoZone. Morning Trade Live. We'll be right back. Stay with us.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
All the need-to-know info from every trading day. I'm Renita Young. Earnings, data, the biggest headlines that move the market, all condensed into a few minutes. Download the Schwab Network app and join in on the latest market trends, available anytime, anywhere, on any device, for free. Recap your trading day with the wrap, right here on schwabnetwork.com.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Schwab Network's like no other financial media you've watched because it's all markets, all the time. It's 100% finance. We look at everything as traders and investors, and everything we say, everything we do is through that lens. There's no ulterior motive, and there's no subjectivity. There's no random guesswork about what we think. We are following the numbers all the time, relentlessly. We have the best CEO interviews, hands down. They're longer, more thorough, and tailored specifically to our audience. We never take our eye off the ball, which means we're always ahead of our peers.
Trading at Schwab is now powered by Ameritrade, unlocking the power of thinkorswim. With robust charting and analysis tools, nearly endless customization, and up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to Morning Trade Live. Time now for the Chart Master. Joining us now are Jenny Horn and Kevin Green. So Jenny, let's dive right into one of these companies that we're looking at, Workday. It's reporting this afternoon. What are analysts looking out for?
Well, it seems like analysts are expecting a lot of what we saw actually in their prior quarter. So not expecting like astronomical growth by any means, but definitely expecting an improvement here, as they are expecting revenue to rise about 16.5% year over year. That would be slowed down from the almost 20% year over year increase that we saw in revenue in the same quarter last year. However, still 16.5% growth, all things considered. Adjusted earnings are expected to come in around $1.47 per share. And the majority of the analysts that are covering this name have reconfirmed their estimates over the last 30 days, suggesting that we aren't necessarily seeing any crazy updates to their overall business model. But we do know that they have beaten revenue estimates every single time over the past 2 years on an average by about 1%. So looking at overall their peers, we have actually seen pretty strong earnings from some of their like most closely correlated names like Paycor, Bill.com. I mean, we've seen really nice top line growth from a lot of these companies. So for that reason, I do think there's the expectation that a lot of these companies that are exposed to various like HR and financial systems are relatively solid. Corporate spending has also been a point of strength for a lot of these companies now for several quarters, as we've seen companies shell out for this software, that it makes their overall processes a lot easier, and also helps streamlining, of course, those that are hybrid or working from home, because that is the new normal working world that we live in. So overall, this name has been a relatively strong performer. I mean, we're up 70% year over year, up about 12% since the start of this year. But it always makes me a little bit nervous, frankly, when we go into earnings and we're at these high levels. 309 is like the area to watch. 310, basically, for rounding purposes, that's the level to watch here. And we are just, I mean, like 50 cents away at these levels. So going into earnings at such peaks makes me a little bit nervous, frankly.
And then speaking of that, the numbers, the levels that we're seeing, Kevin, what are you seeing in the technicals?
Yeah, definitely, rightfully so, Jenny, to be a little bit skeptical about this price action, but it has been a nice chart to say the least here over the last year. Now, I have three different areas to really focus on, especially on the 1-year daily chart. The first one's going to be point A, which is going to show this upward trend line that is really connecting the highs that we've seen over the past year. Now, to start the year, we actually broke that trend line to the upside, which is really great. That's going to turn resistance into support. Key area here for the short term. Also, we have point B, which is a confluence of 3 different levels that are coming together. That 20-day SMA, which is in blue, and then also that upward trend line that we talked about on point A. And then last but not least, the $298 level, which used to be the previous all-time high that we saw back in November 2021. So this is going to be a key level of support in the near term. That 200-week or 200-day moving average at the bottom, that red line, is going to be your secondary support level, sitting at around $240.50 here, around $67 from its current level. And then last but not least, here is the area that I think Jenny is a little bit concerned about. We have a bearish divergence on the RSI, and that's actually been intact since December. So we have the RSI kind of moving lower, but the stock is moving higher when it comes to its price. That's a bearish indicator. We also have the MACD, which has crossed where the 12 EMA is actually below the 26 EMA, which is bearish, but we are still above the 0 line. So we have a bearish signal on the MACD. We have a bearish divergence on the RSI. Price action moving to the upside. A pullback would not be surprising to me post this earnings, but you have to respect this longer term trend to the upside here. Maybe we do see a little bit of a shakeout, a retest of some support, and then break higher.
All right, let's switch gears, Jenny. I want to bring you back into this, and let's take a look at another sector that will be the cruise industry. Let's talk about Norwegian Cruise Line. It's got its quarterly report card on tap. Now, look, it's not a leader in the sector, but what are the expectations?
Yeah, unfortunately, I was actually going to go as far as to characterize it as a laggard, just based on like the astronomical story of growth we've seen in Royal Caribbean as well as Carnival over the past year. I mean, Royal Caribbean was like one of the best performers in the S&P 500. So unfortunately, for Norwegian, just not necessarily seeing the same love as far as like price, but going into earnings, still expecting some pretty sizable growth. Like, for example, we are expecting now revenue to reach around $2 billion, just shy of $2 billion as far as forecast. That would be a 31% spike year over year. On bottom line, it's also expected to increase about 88% from last year. So I know we're lapping relatively easier comps, but hey, all things considered, that's pretty strong. We also have seen actually a revision downward about 1.5% as far as earnings estimates in the last 30 days. But overall, going into the report, there's so many different components of this business that also are expected to grow, like revenue that is on board as well as other revenue is up about expected to be up about 28% year over year. Revenue from passenger tickets is also expected to increase about 32%. Occupancy percentages are expected to reach about 98%, which actually does put it below Royal Caribbean. That was over 100% in the most recently reported quarter. But hey, 98% doesn't seem too shabby when you compare it to the 86.6% we saw last year. And overall, based on the assessment of all the analysts that cover this name, total passengers carried should arrive at around 707,000 for the period. That would be up significantly from the 551,000 roughly reported last year. So healthy growth for cruise lines. I mean, the recovery is definitely here, and we're in the midst of all things tourism still being in a boom cycle. But the question I think for a lot of these companies is like, what does 2025, 2026 look like? Because you already know the majority of the 2024 bookings, which have been strong. And the wave season has also been very strong.
Yeah, and then you hear some of the executives already talking about 2025, especially when you think about the leader in the space, that would be Royal Caribbean. But indeed, cruises certainly made a comeback last year, but can the momentum continue? Kevin, take us through the chart for Norwegian.
Yeah, very volatile chart to say the least here, and we have seen these boom-bust type of cycles when it comes to the cruise line. And when you're looking at a one-year daily chart, there's a couple of key areas to really focus on here. Point A, which is going to be on the left-hand side, just kind of shows this upward trend from the lows, and then we also have the downward trend from the highs, which is really forming a symmetrical triangle. We don't know the actual direction when you're looking at this particular chart pattern, but we do know that once it reaches the apex, we could see either a break to the upside or we can break to the downside here. Still a little bit away from that, but one thing to just kind of keep in mind here, we also have point B, which is the 20-day SMA actually crossed below the 200-day SMA. That is not a good sign for this stock. We usually do see a pretty strong downward reaction once that cross actually does occur. You want to look at the $17.35 level in the near term for resistance. That's going to be your point of control and your volume profile. And then looking at an area of support at around $13.80, which is going to be that lower channel line from point A. And then last but not least, we have the MACD, which is showing bearish formation, to say the least here. It is below the zero line. We have the 12 EMA below the 26 EMA, which is also bearish. And then we also have the stochastics, which does indicate maybe a short-term bounce is in play, where that K line or that faster moving average is above the slower moving average, which is the D line. But overall, this is a bearish chart. I would suspect that we might see a little bit more of a downside move, hitting that 1380 for support before trying to advance higher.
So is there cause for concern when you look at the Norwegian chart, Kevin?
Yeah, definitely, especially when you're looking at that cross, that 20-day moving average moving below that 200-day moving average. If we actually had a longer scale type of chart here, you can actually see that once that cross does occur, we typically see around a $4 to $6 pullback in the stock. That just actually occurred a couple of trading sessions ago. So I would, once again, kind of be prepared for that in the near term, and then also with that volatility fairly high, that could also create a catalyst to the downside if we do get some bad news here.
All right, and let's switch gears and take a look at the auto sector, really the auto parts and kind of the auto retail space, Jenny. AutoZone, it's coming up. What should we be looking out for? We know it's kind of the first among its group to report. What are you looking for?
Okay, and actually, amazingly enough, usually in these various like retail groups like AutoZone, O'Reilly, Advanced Auto Parts, you can find some correlation, but you really can't find any. I was looking to see if their charts were indicative at all of AutoZone's. I mean, find me 3 retailers that operate in the same world that look more different from a chart perspective. It's really actually kind of astounding. But as far as earnings goes, we are expecting customer shopping experience and overall foot traffic to help drive their overall profits. Their e-commerce efforts have also been notable and really applauded by analysts and that have helped to drive traffic to their website. That's also expected to positively impact their second quarter performance. Now, same-store sales projections are estimated at around $3.3 billion. That would imply an uptick of about 2% a year over year. The projection for sales from Mexico and Brazil specifically is also expected to lead to about 19% growth for the company for this quarter. Now, the only thing that has been discouraging and a trend we've discussed, actually not limited to the auto retailer space, we discussed this with Lowe's, I believe, last week, Diane, is that DIY sales during the second quarter are expected to continue to lag. So that would be expecting to lead to about a 1.5% decrease in traffic, partially mitigated by the 1.5% increase in ticket growth. So looking ahead, they do expect the modest decline in their overall transaction counts, and technology they also expect might limit, or there's innovation in technology specifically could limit some of their cash flows now in the near term. But I think it's really interesting we talk about DIY and how it plays out for like the home retailer like a Lowe's, Home Depot, but the same exact trend right now is pulling back in the overall auto world. There was a day when vehicles were so expensive where everyone was just fixing up their cars instead of buying new cars, which I can completely understand. Now with things hopefully starting to normalize in the used car and overall auto industry, people are buying cars again, at least per what the street is reading on AutoZone. So not exactly expecting to be the easiest quarter, but another name that, again, in its space, I know it's not like a leader per se, but it doesn't look nearly as bad as the chart of Advanced Auto Parts, just like from a bird's eye view. I mean, these are companies that, again, operate in the same world, completely different stock performance over the last year.
Speaking of charts, Kevin, take us through what the AutoZone chart, like what stands out to you?
Yeah, so this chart obviously has been in an uptrend, which is good. We are actually seeing at point A on a one-year daily chart this ascending, expanding channel, which does indicate some bullishness, but also some continued volatility. We can actually see that with the increase in the price range over the last couple of weeks here. The one thing to also kind of keep in mind, point B is going to be the 20-day SMA. It's going to act as a short-term area of resistance, sitting at around 27.60 at this point in time. And then also that volume profile, the highest price level on the value area is sitting at 26.77, which is going to be a short-term support area. The 200-day moving average is also converging with that lower trend line, something to just kind of keep in mind. That's going to act as a strong area of support. And then last but not least, we do have the MACD, which is actually somewhat bearish. That 12 EMA crossed below that 26 EMA, but it's still above that zero line, so we don't have that second signal in order to indicate a bearish market here. And the RSI did show a bearish divergence. We already completed that at this point, so we want to see the RSI kind of bottoming, trying to make higher highs at this point in time. Now, one thing to also kind of keep in mind, AutoZone has a very low beta to the S&P 500. It basically trades on its own. Its beta is around 0.6. So even though we might see some broader equity volatility in the near term, AutoZone is going to completely trade separate of that, trades more on the fundamentals, as Jenny was talking about here. I think this is still a bullish chart, even though we might see a little bit of a pullback, retest of some support areas.
All right, Kevin Green and Jenny Horn. Great coverage right there. Thank you both. Coming up, we'll talk retail with Dana Telsey, CEO and Chief Research Officer of Telsey Advisory Group. Morning Trade Live. We'll be right back. Stay with us.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Schwab.
Have a choice in how you invest with Schwab.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Available anytime, anywhere, on any device for free. Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Morning Trade Live. We want to get into the retail sector this morning. We've got some earnings coming out this week. Joining us now is Dana Telsey, CEO and Chief Research Officer, Telsey Advisory Group. Dana, thanks so much for joining us. Let's kind of set the stage here and talk about kind of the broader outlook for retail first. What is your outlook for the sector?
First of all, thank you for having me. My outlook for the sector is constructive. I think some of the things we've seen, we all know the knowns of the headwinds, whether it's the rising rates that you have consumers now incurring, whether it's the fact that there's the shift to essentials from discretionary, and a still challenged housing market. But you look at the way that companies are navigating the current environment, and frankly, even the wherewithal of consumers in terms of their spending, it's been more of a positive than not. We're going to see this week earnings from the off-prices like TJX. They should be a share gainer and a traffic gainer. We're anxious to hear what Macy's has to say about credit card delinquencies and what pressures they're seeing their consumers under, certainly in what we're seeing with discretionary spending out there. And then we've seen holiday sales from companies like Urban Outfitters, and they showed some improvement. So we're anxious to hear what they have to say. While we still think the housing market's challenged, as evidenced by Home Depot last week, let's see what Lowe's has to say this week.
All right, let's talk about Macy's specifically and what you're expecting to hear about the latest. I mean, they turned down a takeover bid. What are you looking for in terms of the latest information on that?
I think overall, Macy's has had many bids before, and they've turned all of them down. I want to hear about what's happening with the fundamentals of Macy's. They've said that 2024 would be a return to top-line growth. Where are they in that path? And will they achieve top-line growth in 2024 is something that's going to be looked at carefully. In addition to the fact that Tony Spring was elevated to CEO, and this will be his first call as the CEO of Macy's, talking about the messaging for 2024.
All right, what are we expecting to see about the consumer and the state of the consumer for Macy's? I mean, their last guidance, they had raised their the expectations. What are you looking for in terms of where the consumer is, the Macy's consumer?
I think they're still going to be challenged. I think they're going to continue to be very cautious. I think they're going to continue to be discerning. I think the expense reduction, the merchandise margin optimization, inventory being clean are all going to be part of the messaging with what profits can look like for Macy's in 2024. There's more clarity to margins. There's less clarity to sales.
All right, speaking of less clarity to sales for Macy's, what about its components, like say a Bloomingdale's? Do you expect the Bloomingdale's to be pretty buffered and safe in terms of its verticals?
Well, what we've seen when we've thought about higher end, even aspirational higher end, it's moderated also. So I think you're going to still see even a cautious consumer there too, not at the same headwinds that you're facing with the Macy's core customer, but I think there is a moderated pace of spending. Blue Mercury on the beauty side, we've seen strength in beauty, and they should be a beneficiary. But Bloomingdale should do better than Macy's, and Blue Mercury should also do well.
What's your target, your price target on Macy's?
I mean, right now it's in such flux. You look at the stock, which was under $14 when they reported the third quarter. It's trading at $19 or so now after the $21 bid. Price targets are catching up to where the stock is, and a lot of it's going to depend on...
See, I miss her. She's usually around Christmas time, and she didn't show up this year. She looked like she's aged quite a bit in the years, too. This chick right here.
And they're remodeling stores, and there's opportunity, I think, for upside in their guidance. They always guide cautiously. I expect them to guide cautiously.
We've got a double bottom with a lower low.
The winners for 2024.
And we got lower highs.
The off-price segment, I think, wins for 2024.
So we're creating a wedge.
The off-price segment wins for 2024.
Okay, and even, I mean, the stock is near its 50.
One more down, I think, if we're lucky.
You still see growth there.
Yes. You take a look at home goods, which frankly they're going up against easy comparisons. There's opportunity for growth. You look at the core TJ Maxx stores. When comp store sales at off-pricers are above 3%, they're getting the benefit of the trade-down customer. In the third quarter, the most recently reported by all off-pricers, their comps are at least 5 or 6%. There you go. They're winning market share because of the benefits they're getting from a trade-down customer.
And speaking of that, winning market share with TJX, do you see them as the leader in their space? Are they kind of far and away, say, above a Nordstrom Rack, etc.?
Yes, I do see them as the leader because of the strength of their relationships with vendors, because of the strength of their store base, and the diversified merchandise assortment that they have. But I think everyone, when they're talking about value apparel,
she's full of hogwash. She used to be cute. I don't know what happened to her. She looks like hell. I'm supposed to be in fashion, baby. You're supposed to look better than that. Megaphone. Right now we're at the pivot point, at the 200. We're waiting to see if we can get one more trap down here and get back in this thing. SPX. So I could tell that thing was going to come down one more time. Here we go. Get ready. Get ready. Who's with me on this one? Oh, damn, what did I do? Get puts? Oh, shit. What the heck? I gotta get out of these real fast. Damn it. Ah. Can't believe I did that. I wanted to buy 5,100 strike. Stupid idiot. Calls. $5,100 call. Stupid. That one mistake might have saved me some money too. How stupid, man. It's dead. I bought a put, what I did. I was wanting to buy calls. I had to get out of my put. We could come down one more time still. So I'm not completely sold on this trade yet. This should hold right here at 290. Could have added one more right there. Oh, I thought you caught that, Randy. I bought a put. Breakout.
For the full year of 2024, they're looking for revenue of at least $950 million for the full year 2024. That's above estimates. They're looking also for adjusted EBITDA of $110 million at the high end. That's versus that $100.3 million consensus estimates. And at least one analyst has been chiming in, Benchmark, saying that this marks yet another quarter.
I think this is the last time down, but we'll see.
Execute the playbook with strong sales growth. This analyst has currently a buy rating and a $100 price target on the stock, and from the looks of it, it's already past that. So we could probably see or look for some few updates on the stock price target.
All right. Anything else stood out to you, Renita, on Freshpet?
I think it's interesting because it's now gaining market share over Chewy, over even Petco, and so I feel like the biggest, most formidable competitors of this particular stock are not even the publicly traded companies. Farmer's Pet, which does the fresh pet food as well, I see just as many commercials on TV as I do for Freshpet, and they may be possibly one of their biggest competitors.
That's interesting to see. Great point to see where it is compared to Chewy. We know Chewy tends to be a leader in this space. So certainly we'll be watching Freshpet and seeing where that goes from there. Senior markets correspondent Renita Young. Thank you, Renita.
Thank you.
All right, joining us now for some analysis of kind of this week and week ahead, we've got Joe Mazzola, Director of Trading and Education for Charles Schwab. Joe, it's great to talk to you as usual. So let's take us through and kind of talk about kind of the focus for this week. Last week, obviously, the focus was earnings, and we seem to be pivoting, especially when you think about where the market is trading now. It's trading in this kind of narrow range this morning, flip-flopping a little bit, but really range-bound. What's the focus for this week?
The big one is PCE on Thursday. So you're going to have everybody looking at that as some clues into what the Fed is thinking and maybe changing the timetable on their rate cut expectations. We've already seen that, right? We've already seen the probabilities move out dramatically in terms of coming into the year, 5 to 6 rate cuts priced in. Now we're, somewhere around 3. And then, pushing back the start date on that from March until June. So, yeah, I think that PCE number on Thursday is important. But look, there's a lot of stuff coming out this week. We got consumer confidence, which I think, can kind of show where the consumer's at right now. We have, a lot of the retailers are going to be showing earnings. We have durable goods. We have jobless claims. So there's a lot of stuff to digest this week. And then, of course, GDP, the second rate. So, investors will be looking at these for some clues. Now, the one thing I will say, as we're coming out of the earnings, and I find this interesting, is that volatility is really kind of holding up. It's holding firm not only with what you're seeing at the VIX level for the indexes, but you're seeing it in the single stocks. And normally, when we're kind of moving out of an earnings cycle like we are right now, you see a lot of that volatility compressed, but it's still holding a little bit of a bit.
Joe, one other thing to note that I wanted to kind of chat about is the composition of the Dow. It changed today, right?
Yeah, absolutely. So, Amazon is now on
Okay,
the
I'm going to add one here.
Is out, and I think it's probably a little bit more indicative of what the overall economy is. And so, to have Amazon in there, it's made a move. Now, I do want to kind of look back historically, and just because you get included into another index doesn't mean that you necessarily see big moves in terms of the stock.
I got one at $3
going forward, so it's a little bit of a misnomer, but yeah, it's Amazon's in there now.
Yeah, and it's interesting to see kind of that change when you think about how this is a tech company.
Went below support.
Dow, historically, it's
I'm going to grab one here,
so
2 more here.
You see the strength of the tech sector continuing to increase and shift to the dynamic of these indices. I want to bring into our conversation as well this morning Nick Theodorakis. He is Financial Risk Management Director for Charles Schwab. So, Nick, when you think about kind of where this market is, what are we paying attention to this week? We just got Joe's thoughts.
235.
Yeah, listening in. Sorry, I couldn't join the conversation sooner here, but I think PCE this week is by far the biggest driver, as we know. The Fed pays the most close attention to that. But I think we got a little bit of an indicator on that, with both CPI and in particular PPI a couple weeks ago, coming in pretty hot. So I think expectations are definitely higher. And the question will be, if for some reason PCE misses, do these sort of rate cuts conversation pull back in the shorter term a little bit?
So I added 4. I got 4 more here. I got one at $3 and 2 at 235. Now I can go ahead and get out here. But I'm going to count this 1, 2, 3 and see if we hold this up. This is Monday. We always gauge Monday as my day of trying to figure out what's going on. I didn't feel too good about coming in here this morning anyway. I made that clear this morning. So we got to see if we hold this right here. It's important we hold this support right here. I don't want to go below it. And I don't want to say it after the thought either. 5086, 55, 5 minute, 5 day, 5 minute, 5 week. I mean, we got a long ways to go down too. We got a 1-2 triple bottom at 82. So we could drop another $4. Oh. What the hell was that? Oh yeah, we could hit 83.50. That'd be a 1, 2, 3 on the way down. So I don't think it's all over yet. The burp wasn't loud enough. Was it very professional? I can hear Vegas right now. Jim, what the hell are you doing? Private message. That was very unprofessional. Loo doo doo da, zippity day. Come on, man. You gotta hold it. I'm tempting just to take a big risk here, but buy 5 more.
Schwab Bank Investor Checking.
Schwab Bank Investors Checking. There's Bob.
Right now. Also, think about the AI
Or-
story here. There's not a lot of big AI stories. I
Renaissance.
highlighted one that was going to announce last week. I think
Oh,
you're going to
come
see a
on.
lot more of that, but you have to be able to get some kind of excitement about really big growth and revenue prospects. And the AI story is still very young. It's hard to, I think that that's going to really juice up the IPO market once we start seeing some companies like that.
Right, but the business model needs to be focused on generative AI and its use and what it's going to do. So it's new products that perhaps are in their early stages or don't
The
even
IPO
exist.
market is not going to be excited by Del Monte, which is, by the way, on there. Panera Bread, also on there. Those are perfectly legitimate companies. There's nothing
Panera was a
wrong with
public
them, but
company for a
if
long
there's
time.
a gigantic, business there that people think are going to suddenly explode. It's not happening. It's not in the valuation.
There are also some politicized ones like Shein, which are just
Yeah.
seemingly getting delayed because of
Dang it.
regulatory questions.
Yeah, you've got
That
a few,
sucks.
a few
Concerns.
potential tech companies that are out there. There's a lot of companies that are existing in the whole space around the service, around the high-end server industry that's out there. I did a story on that last week, but let's just see how, if they can just get out the door and stabilize, I think that's a good sign, just by itself. Let's just see, and then we'll get the AI business.
Which is the they here, sorry, that they can get out the door.
Reddit.
Okay.
If Reddit can just get
When
out
is-
the door.
Do we know when that's, are we?
Beginning April.
Beginning April. Bob, thank you.
Okay.
All right, Bob Pisani. After the break, don't miss the Chairman and CEO of Whirlpool, and of course our live market coverage continues right here after this.
Jimmy's down on his SPX. We got shanked. Yeah, I heard Washboardjim got shanked this morning. Yeah, it happened right around 9:58 Missouri time. Yes, that's where the phrase came from. Magnificent. Very unprofessional. it took me almost 4 years to break my habit of clipping my nails on. That was also very unprofessional. We got another flag here. We're going to see how bad this is. It says it wants to go lower.
Fox.
Fox. Did you say? I thought he said the F word. Fox.
Good Monday morning. Welcome to Money Movers. I'm Carl Kingston here with Sarah Eisen, live at Post 9 at the New York Stock Exchange. New addition to the Dow this morning and Amazon. What that says about market sentiment and the rally in tech stocks this hour.
Yeah, what does it say?
Whirlpool right here on set. Macro commentary and highlights from the company's Investor Day this hour.
Later on, JP Morgan's head of debt capital on what to expect from M&A this year and where to look for value in private credit.
First, though, take a look at stocks right now. Started with a mini rally this morning. S&P has lost some of its gains. The NASDAQ started out weaker and is now higher, thanks in part to Tesla, which is making a move higher, as well as NVIDIA and Palo Alto Networks continuing to come back. Alphabet, Apple, and Amazon, though, are Apple, Alphabet, and Microsoft, are under a little bit of pressure as far as what's working in the overall market. Energy is one of the better performing sectors with a rise in crude oil, consumer discretionary, technology, and industrials. Topping the tape for us this morning, the market's ability to handle these higher treasury yields and diminished rate cut expectations. Let's bring in CNBC senior markets commentator Mike Santoli. Market's ability to handle that has been very good as we have seen yields climb to highs of the year, right, Mike?
For sure, Sarah. I guess one way to explain that is that, in a bigger picture view, the 10-year Treasury yield is still range bound. It has been since about mid-December, so it's not exactly had some kind of, runaway move higher. So that's part of the explanation. The other is credit spreads are so tight. I mean, the investment grade corporate bond index yield right now is still 1 percentage point below where it was at the highs in October. So corporate credit, financial conditions in general, still very, very accommodating at this point. And the other piece of it is it's happening because growth has held up better. And the Fed feels the luxury to be data dependent on inflation because there's no emergency to respond to, far from it in the economy. And obviously that's helped that earnings have come in better than expected. So that's gotten us here. I guess the bigger question is, setting the AI panic buying aside in semiconductors and certain names like that, have we priced in a pretty good scenario at this point? You had one down week in the last 4 months in the S&P 500. It's kind of extreme. 3 to 5% pullbacks happen at any time, but they're kind of random, and you might have expected one to hit already from levels much lower than we've gotten to right now.
Yeah.
Two things, Mike. One is a couple of weeks ago we were talking about, be careful. We're in the seasonally weak period of the year. The other is that, as Tom Lee pointed out, gains in January and February give you pretty good probabilities on full year positivity. Yeah.
For sure. And, you can't completely look through this sort of seasonal air pocket that you sometimes get. Now, generally, it's late February. But those things are just kind of the broader climatic conditions, I would say, as opposed to, the weather here and now. And so a market's ability to do well, in contradiction to the seasonal patterns, is something actually that says this is an unusually strong and persistent rally that has more to it. But again, even the stuff that says January, February up means strong full year. November, December, January, February up, which we are looking at right now, also tends to have good forward implications, but none of them have much to say about the immediate next several weeks.
I was just going to say that semiconductors, NVIDIA, they steal the show.
Yeah.
No question about it. But I was looking at the S&P equal weight, which gives you a better sense of the overall market, not too far from its all-time high.
Yeah.
Mike, we've seen some strength in groups like healthcare and financials.
We've
and
dropped another
industrials.
notch.
And I wonder if that gives you or
on the
both more
SPX.
confidence that it's not just NVIDIA and a bunch of semis.
50,
Yeah, I do
83,
think
50.
people are finding some comfort in that. My case has been all along that the market was never quite as narrow as it was portrayed, just because the handful of stocks were contributing an outsized amount of the absolute market cap appreciation.
It's
Doesn't
dropped
mean that most
$2
stocks
now
were
since
weak
I mentioned
in
it
the,
last time.
objective sense. So I do think this confirms a lot of that. I also think there's something that has been interesting, which is the extreme outperformance of the Magnificent Seven type stocks and the inability of active managers to beat the S&P for that reason has caused people to withhold their trust from this market, and that's almost rebuilt its own wall of worry. That might have already been obliterated at this point. It feels like positioning is pretty aggressive at this point.
We can easily drop another notch.
Up until now, that has been the case. The people have not really gone fully all in believing in this rally because it had seemed so skewed.
Mike, thanks. Talking a little bit, Mike Santoli this morning. Let's stick with the markets today. Our first guest this hour says it's time to invest in the, quote, catch-up trade. Targets names in China, tech, industrials, and transports. Joining us here at Post 9 with her top picks, iCapital Chief Investment Strategist Anastasia Amoroso. Great to have you back.
Good to see you, Carl. Good to see you.
Your general point is that enthusiasm is just picking up across the board, right?
It is. It is.
And that drives your trade ideas?
Yeah, it is. And that's really interesting because on the one hand, we've priced out the rate cut expectations from the Fed, and yet you have this broader based participation in the market, and we continue to make new highs. And it's interesting what kind of new highs we're making. We've got the transport sector that's really participating. Like you pointed out, the equal weight, the small caps, they're all sort of participating. And when you sit back and you think about why that is because we're not so much concerned about rate cuts when we have economic strength. And to me, this story of economic enthusiasm picking up is really real. Because, Carl, you look at, for example, the manufacturing indices and the new orders component, it's back above 50 at 52. That was the last number reported. If you look globally, we've seen some economic momentum in terms of manufacturing as well. And then consumer confidence, you look at it, and we had the largest pop in consumer confidence since December of 2005. So there's something good going on, and I would say for different in all parts of the economy right now.
So we're in the sweet spot of better growth and looking forward to rate cuts. I do wonder how much better growth, though, could lead the Fed to potentially raise interest rates again, and whether that would be a big headwind for the market.
Yeah.
I don't think raise is on the table at this point, given where inflation is. But of course, cut may not be imminent either.
And the market's not there, but there are folks out there like Larry.
Yeah.
Who are talking about it. 15%, it's not zero.
Yeah, no, there's some probability of that because, there are people talking about maybe the second leg higher in inflation. But if we look at the core PC inflation that's expected this week, we're looking for 2.8% or 2.4% on the headline. So given that differential between where the Fed funds rate is and where inflation is, I think the Fed would be hard-pressed to hike rates at this point. But they certainly are not in any rush to cut rates given how strong and resilient the economy is.
There are some desk notes today saying we think this rally can go on next month, in part because there's a lot of Mag 7 catalysts, the NVIDIA conference in March and so forth.
Yeah.
So you would end up with higher headline indices, but maybe still more concentrated. That's not exactly what you're calling for, right?
No,
that time we knifed way below what I thought we would.
By the way, case in point, semiconductors, after as much as they rallied, they're still leading the way today. And I think the reason for that is there's a very tangible story there. And it's not, by the way, just the AI trade, which I think is alive and well will continue. But I think there's this cyclical uptick in semiconductors. If you think about semiconductor revenue growth, it is very highly correlated with the manufacturing indices and specifically the new orders component. So if we are in the cyclical upswing, that means more shipments of memory chips, more shipments of automotive chips and so forth. So I do think we stick with the semiconductor strength, but Carl, on the other side, if we do have that same manufacturing uptick, then things like transports should do well. And Sarah, one thing that we're looking at this week in terms of retail, I do think this is a story of a broadening out of the U.S. consumer. The high-end consumer, the high-income consumer has done particularly well in the last couple of years, but the lower-income consumer has not. Now, I think there's a room for convergence there, and I think the lower-income consumer should be in a better spot because real wages should actually start to rise for that cohort. Gas prices are lower, and they are making use of things like buy now, pay later to smooth out consumption.
And yet there's this consensus that the consumer is weakening and that the job market is going to weaken just because of all the tightening that's been done in the system. Delinquency rates are back on the rise. People are paying off student loan payments again. Yeah, we're starting to see some of the special impact of what helped the consumer wear off. But you think the opposite. There's an acceleration.
I think the opposite. I think the opposite because that is a story that I think has been well telegraphed. There's this divergence between the high-income cohort and the low-income cohort. Yes, on the surface, if you look at, for example, the delinquency rate that were reported last week, they were a little bit higher. If you look at the real-time, real-world retail sales, they were lower. But Sarah, my point is the reason why the lower-income cohort was suffering is because the real wage growth has been negative. And for the low-income cohort, cohort. For the higher income cohort, the real wage growth has been
What is she
positive.
saying?
And actually, the real disposable income growth has been positive because they're also benefiting from higher interest payments. But now, when we look at the projections for 2024, 1.4% is what we're expecting in terms of real disposable income growth for the low-income consumer.
This is like 10th percentile, something like that?
Yeah, that's
bottom
right.
10th?
That's right. And relative to 2.8% disposable income growth that we're expecting for the high-income consumer. So that is a much more narrow spread than we have seen in the past. And so that's why I think the story is a broader consumer participation, which bodes well for discretionary spending. And, we see some of those stocks reporting, retail stocks reporting this week. I think they should be better positioned.
Yeah, we're going to get Dollar Tree and TJX tomorrow. So we'll see if we can get some commentary on that. It's great to see you.
Good to see you, Carl.
Very bullish.
Yeah.
As well.
Still to come this morning, JP Morgan's head of debt capital on his outlook for M&A and some of the top trends in private credit.
Plus, speaking of retail, watch Walmart shares near an all-time high after that 3-for-1 stock split. Money movers back in a moment.
Well, I thought I saw something. I should be long in Walmart. Man, it was a good buy today. No, it wasn't. Yeah, I might would have took it off the 63. Okay, baby. We got a little yin yang to break right here. The 21 EMA on the 1 minute. Plus it has a confirmation of a tweezer bottom right there. 5084.62. Break it. I could get out right here and be almost even. Well, I'll be even. No, almost. Let's see if we squeeze between the 9 and the 21 right now. No. God, hold, please. Nancy, do we have any more of that chocolate fudge ice cream left? Break it. Good job, franchise. Mr. up 16%.
I need insurance.
He needs
Wall
insurance.
Street's out with some initiations of Amer Sports today. Overwhelmingly positive. Goldman, UBS, JP Morgan, and others all going overweight or buy rated on the stock. The common theme, bullishness on the Arc'teryx brand, with multiple firms calling it the key driver for growth. Average target for Amer Sports around $20. Of course, we had the CEO on the day of the IPO, talked a lot about this market, which is obviously fierce competition regarding a lot of
Stock's
makers.
done well.
Yeah.
You know, Bob was talking about how lack of IPOs. We need to see some good ones out of the gate. It's well above its pricing. Remember, it was a little shaky of where it was going to get priced, but has done well and is now $16 per share, up another 3% today. A lot of the analysts, as Carl said, liking the name. Our Leslie Picker is in Miami Beach today at JP Morgan's Global High Yield and Leveraged Finance Conference. She joins us now with the JP Morgan Head of Debt Capital, Kevin Foley. Leslie, good morning.
Hi, good morning, Sarah and Kevin. Thank you very much for being here. This is your conference. You are running the show here. I want to start on rates because there's been a whiplash around when the Fed will cut rates, the magnitude by which they will cut rates. And given that this conference brings together investors and finance chiefs, I'm curious how all of that is impacting their decision making in terms of when to tap the capital markets and when to really fuel demand to buy some of these bonds, these bond issuances.
So, well, first, Leslie, thank you for joining us. It's our 29th annual conference, and as I said, with record attendance, we're tremendously excited about the next few days. Yeah, we came into the year with the market thinking that the forecasting 150 basis points of rate cuts. We've now dialed that back. It's got pushed out as Fed. The optimism around the economy, the willingness for the market to deploy capital has definitely, we've come into the year with activity levels elevated. When you look at, we've issued $240 billion across high yield and leveraged loans year to date. That's up 90% in the high yield market, over 300% in the leveraged loan market. So we're up dramatically year over year. A lot of that is around that optimism, refinancing activity. The one negative on it, all of it, from an investor and a lender's perspective is most of it's from recycling capital. 90% of this activity has been refinancing driven. So we're not bringing a whole lot of new demand. From an issuer and a borrower's perspective, it's a positive environment because it's creating an environment where there's a lack of supply, a lack of ability to put new money into work. You're just recycling capital, and it's creating a very favorable environment for them.
What ultimately needs to happen to be a catalyst for that new supply? Why is there so much pent-up demand, given, as you said, the economy has done remarkably well, and we're looking at maybe fewer rate cuts in the near future?
So key is M&A. Right, so we have come through the greatest refinancing wave in the history of our markets. We have
we're at 210, go
out.
Baby.
You have a very manageable maturity wall that doesn't really start to pick up to 25, 26.
Now I could get out of here and be a very happy customer.
Pick up. That's going to come in with new supply. What's going to take to have M&A pick up?
I think I will.
Confidence around the economy. A little bit of the uncertainty that's hanging out there with whether it's elections, geopolitical concerns. And buyers and sellers come to agreement on pricing, right? Where they're going to transact on things. We're making progress in that. We are optimistic that the second half of the year we can see a pickup in M&A activity. But right now, that's going to be the key for where we see real and net new supply for our market.
Yeah, it's interesting. We've actually seen a surge in financing, $50 billion in the last 2 weeks alone to finance acquisitions and spinoffs, and that's according to Bloomberg data. And of course, this is a big reversal after 2023 saw the slowest activity of this type of financing in over a decade. So in terms of the second half of the year and that outlook there, what needs to change in terms of getting that gap between the spread between what companies are willing to sell for on valuation and what buyers are willing to buy, especially as you look
Jimmy's
at
out.
all the dry powder that, say, the private equity community is sitting on?
Yeah, so you've got $2 trillion dry powder.
SMCI pop.
You've had a lack of activity, which will create a pent-up demand. What's going to happen? I think it's time. I think it's a matter of just more time, more healing out there in terms of psyche. Continued confidence that the rebound that we're seeing in the markets is here to stay in terms of valuations. And then, yeah, there is a debate about the economy, right? The optimism is there, but there are still things that hang in the balance whether to declare that we're going to avoid a recession, right? We're still debating soft landing, no landing, hard landing. Most are in the soft landing.
Who's debating it? Not me, buddy.
Talk about no landing. But I think it's increased confidence around that and seeing some more trends and seeing how the rate hikes are continuing to
speak for yourself.
What's the inflation data going to do? Is the Fed going to have to take more actions around trying to control inflation? So I think I continue to be optimistic that we will see that settle off in the next 4 to 5 months. That remains our base case, and we'll see how that plays.
And when it does settle out, I'm curious who's there to capture the share from a financing standpoint, because there's been this narrative out there. We've seen the movement and the flows toward the non-bank financial sector, in terms terms of private credit and direct lending. I know that JP Morgan also has a $10 billion dedicated fund for this type of lending from the balance sheet. You've been doing it over the course of 3 years. So based on your vantage point, do you see kind of when this activity picks up, do you see
Would
things
you open
revert
up the
back
calls on
to the traditional
BANW?
banking sector in terms of banks being the ones to finance it, or do you think it truly is this shadow banking community, these non-bank private?
Nancy, did you go ahead and suggest Congress about pawn? Hint, hint.
The market is evolving. Our clients are evolving with it. We're evolving with it. I think we will be product agnostic. That's what we've always been. Whether that's a direct loan, a syndicated loan, a high yield bond, all we care about is giving our clients a menu of options, objective financing advice, and let them make the decision. I expect we're going to see some more convergence.
What sucks, organic? From here on out, I want you, are you good at using instincts, bodily instincts? Like, let's say you're driving down the street and all of a sudden the cops decide to pull you over. Are you going to turn pale white like Jimmy would?
Published recently by the Fed, $1 trillion in terms of how much U.S. banks are providing to the shadow banking environment for this type of financing.
I'll be right back. I'm going to go get my coffee.
Focused on this interconnectivity. Are you concerned?
God, shut up.
Green shoots potentially pop up, and when you're looking, seeing a symmetrical triangle actually taking place here based on a 1 year basis. It's making lower highs but also making higher lows if you're looking at it on this particular time frame. And once we see that meet the apex, we could actually see a significant break either.
I truly believe you don't have to be that bright to work on Wall Street.
Going to be in December and January. Now, usually when we see three waves that could potentially complete the potential.
Now look at this guy's chart.
We can start seeing buyers coming in here. I would actually look at support at 160 cents. The primary trend is still downward, but you have to respect some of these key levels as well as the historical nature of Elliott wave theory. And then last but not least, here's the bullish divergence within the RSI moving to the upside as price has really not complemented that particular setup. And then the MACD actually did cross. The 12 EMA is above the 26 EMA. That's a bullish signal, the first bullish signal. You want to see it go above that zero line that would complete the bullish trend. I would say, Nicole, this has a little bit more of a bullish tint to it than a bearish tint. The stock has never stayed below its 200-week moving average for more than 8 weeks. So we are kind of getting to that particular time frame here. Let's see if it's going to break that trend.
Jimmy called a double top.
So watching that
look at this.
At the same time, you know, there was an article in
Honey?
the Post talking about the EVs, just that European automakers in particular.
Oh, you're back. I hate to put you on mute. But here's a good example of a double top. Mister, we had it like a double top. So she pulls back. Now you can do two things, Fibonacci on the breakout, or you can see if it starts to reverse here off the 63. I've been using these moving averages for what, 2 weeks now? This is week number 3. Just seems like it's too high up. I need something in here. Another moving average of some sort. 63, I got the 200, so maybe the 100 or the 50. No, what was that on? That was on the, come on, you idiot, daily. Daily 1 minute. So the 50 is below it. So it'd have to be a... A 125 maybe, or a 100 EMA. Square. That's another one I forgot I was going to be watching today. I don't think I got it. Square and Zoom. Square. Yeah, Square had earnings last Thursday and had a big pop. So 50% retracement on when you have a big breakout like this and go to the bottom. So somewhere right around here, sudden alert. We hit the first support. One more would be real nice on Square. 50% retracement on the pullback. And then Zoom. There it is right there. And Zoom's had pop already. Still got chance on the daily if we break the 21. Missed this one. $60. And then he was talking about Tesla. Now, last time I charted this, I had 199.77. That reminds me of something. So 7:59, I'm going to set my alert. $760.55. 760.55. Alert set for Mister. With a possible stronger buy at the 200 SMA on the 1 minute time premise. So let's talk about this trade that I got stuck in. I mean, I was down quite a bit on this trade. Almost $550, $600. I was down more than I should be. I went to 135. So I just got back in it and added on, and then boom, once we hit that resistance line, I got straight out of the trade. Now, I wasn't watching it. I moved on. But I stuck with it. Someone asked me the other day, said, did you set a stop loss? And he put SL, and I said, what the heck's an SL? And this is what got that one chick with that Bitcoin dude, that dude that got busted. Freed. They asked her, what do you do? Do you set any stop losses? And she didn't know what a stop loss was. At least I know what one is. And she lost a lot of money by not doing it. But I don't think she was a stock trader. Many times that I've sold a loss, I end up regretting it almost every time. So I just sat there, this thing happened so fast, I just sat there and watched it drop a buck on me. I'm going, oh shoot. Now what am I going to do? So we got down there, I just went ahead and loaded up. Took a big risk.
Year over year. So they do have some good news. They do have a good balance sheet. But if they want this stock to move higher, they've got to show re-accelerating.
We heard you once already.
To re-accelerate growth, Nicole.
Yeah, especially during the pandemic.
I bet you they do.
There was so much excitement about Zoom video.
If they got $7 billion in cash, that's huge. If they got $7 billion in cash, that's a big deal. For Zoom.
As you noted, that big stock pullback from those highs. Thank you so much.
I don't think it really matters.
All these numbers after the bell today. Kevin Hinks, thanks. Time to spotlight AT&T's big outage last week. I'd like to welcome in our guest, Hugh Autumn, cellular industry veteran, former AT&T attorney, founder and president of Vertical Consultants. Thank you so much. Good to see you. Tell us a little bit, I mean, I read, they call it a massive network outage. The CEO saying we fell short. Is it fair to call it a massive network outage? Tell me what happened.
Yes, it was very massive.
LTC, Verizon and T-Mobile had some sort of outage as well, but it looks like it's really an AT&T problem.
Sure. Well, this was a nationwide outage. It started late in the middle of the night, and AT&T is saying it's a software update that was a criminal that caused all the issues there, which is somewhat suspect. Those software updates usually happen at night because there's less people on the network, but it took them almost 12 hours to identify the issue and solve it. So we just had an outage, which you usually see is maybe an outage that's local or regional. This was nationwide, and that raised a lot of red flags. It could be a cyber attack.
Can you hear me now?
Culprits out there. And what this did
Can you hear me now?
Accumulate over and over. And they were talking about tens of thousands. We think it was hundreds of thousands, if not more, of AT&T customers that were impacted. Some other carriers, which were piggybacking off the AT&T network, also had issues. Verizon and T-Mobile reported some issues, but not as much as AT&T.
So it was really an AT&T problem, and there are now suspicions, but in this day and age, it would be a
booking your all-inclusive vacation with a budget beach finder, and you can be a little extra, like the
Want to take your minutes further? Good. Well, now you can. Good. Introducing America's Choice, the plan where all of your minutes are national minutes. Sign up on a plan starting at $35 monthly access and get an extra 3,000 national night and weekend minutes per month for life on the America's Choice Network. Good. And now save $50 to $100 on select Motorola phones. So make the smart choice and sign up for America's Choice. Can you hear me now? Good.
Verizon Wireless. We never stop working for you.
Can you hear me now? You see what I'm saying? Okay, we have a 1, 2, 3 on the SPX. This is it, folks. Get ready. Get ready. SPX. Jimmy's going for it. The 5100 strike at 150. Has a 1, 2, 3. The strategy's been talked about many times. It's all over national television. It's called the 1, 2, 3. If you can trade with me. If you can trade with me, if you can count to 3. Exactly. If you can't count to 3, you might not want to trade with me. Who's that snooty guy on the microphone? Damn it, Jim. $1.50. Okay. What we're looking for now is a 1, 2, 3 breakout. Randy? Break it. Once you learn how to trade these patterns and know when the sequence of the importance of the breakout, we have 1, 2, 3 with a higher low. Then we have, I didn't really want to count this one, but then I said, what the heck? We've already had the 1, 2, 3. We came back with a higher low, which gives it more power to break is 63. Now we hit 63 once before. So there's my 3. And if you wait and count to 4, you might get a little bit more. Now we want to use this number 4 as a support. If that holds, we'll go a lot higher. That'll you get out of the trade right now. If you got a little bit of chicken broth in you. I think that's the first time I've ever used that term. Chicken broth. I think it was clever. Don't you, Randy? We're at 190 now. If we have to, uh-oh, watch out. Here it comes. Ocean, did you catch it? How in the heck does he do it? I just don't understand. It's not over until the fat man sings. Belch. Break it. Come on, break it. Exit idea will be the third band. Or is that that's the 200 SMA? Damn. Sam? Simple moving average. Take profit there. Oh. Oh. One, two, three. We just went back to support right here. Okay, now we're retesting the old resistance, which landed on the 21 EMA on the 1 minute time frame. Then we got to come back up and break the 63, and we'll run up to the 200 SMA. Do you understand? Say yes. Somebody got to say yes. Say yes, Yoko. I need somebody new in here to say yes. Very good. Thank you. Because I need it to break. Nancy? Slip of volume in that coffee. I'll be right back. This is a long oak. Oh. Come on. Break it. Now we're talking. Little by little. Okay. I like little by little more than I like a lot, but sometimes I like a lot. Jimmy just noticed 3 black crows right here that created that second support. Get ready to break resistance to the 200 SMA. May I have a grade, please? I will take it now. Thank you very much. Now we're going to see what this long-legged doji has to say about it. I'm trying to educate you. Break it. Come on, man. I could make a business decision right now and get out at 190. But I don't want to. Unless someone talks me into it.
Jim? You want to sleep on the couch tonight? You better sell it.
Sorry, Nancy. I'm holding on. I've held on to you this long. I'm going to hold on to this a little bit longer. Break it. So we're going to go over the watch list here. Once I break resistance of 5086.55. Not a penny short, not a penny over. There it is. Uh-oh. 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 Something's happening. I got lucky when I traded you. Let's see if it's not moving very fast. Now, anybody take this trade with Washboardjim? If you did, I would like someone to make a business decision. Ricky's selling now. Someone made a business decision. Very good job. Oh God, look what happened. I'm making a business decision. $210 and give me a little more. Come on. Mike has been mentioning sound. It's a new pronoun. Sound. S-O-U-N. It is a crossbreed between a bullish and a bearish crocodile. It's a new pronoun. Sound. S-O-U-N. Okie dokie. I think we made a business decision on SPX. $225, come on. There it is, resistance. Now this is where I want to get out. Okay. Very good trade. Very good trade. The 200 SMA. So let's talk about this. What made it so easy? So we had the snake. Let's clean it all up. We're going to save this right here. So let's talk about this trade. What to look for. Good morning, retail traders. Well, actually, it's this afternoon. This is a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. And right now, we're going to talk about a trade we just called out in the room, and I'm going to kind of show you the strategy that could help you maybe identify the next trade. So we had a megaphone pattern that I alerted the room this morning, and we traded the put down to the bottom part of the here to the flag. This is called a megaphone. So once we broke below that megaphone, it became a different story. All of a sudden we became bearish. And I just got through calling out these calls right here, and we're going to go ahead and erase this all up and clean this up. So we had what you call a megaphone pattern. And once we broke support of that megaphone, it became a whole different trade. Then we alerted the room at a 1, 2, 3 right down here, and this created another flag. This is called a symmetrical flag or a wedge. So we have a snake. We have the sell-off. Once we broke out of this here megaphone, we had to start all over, start fresh. It told us that to become bearish in the trade. And then we created a whole new snake. So we wait until it decides to go ahead and break out of that channel. Then finally she starts to break out, but she pulled back. They always wait for them to pull back and retest. And then she retests again and fell back down here to the bottom and broke out again. So now we've broke out of the snake. We're right in here. We broke out of the snake and we're starting to pull back. But we don't have nothing to go off of. We have an inverse head and shoulders maybe. And that's what. So we got the breakout, then we got the pullback. Now we're starting to create some kind of flag. We have the first top, the second bottom, the first bottom, and the second bottom. So now we're starting to create a symmetrical flag. So it runs up. You got your one top right here. So now we broke out of the snake. And we're starting to see a pattern. So we run back up here for the third time now. This has got my attention. I know we're either going to break out here or we're going to pull back. And this is where we get really important to pay real close attention to this trade. Because if you can count to 3, you can learn how to trade with me. So we got 1, 2, 3. 1, 2, and we expect it to pull back one more time, and it did. I told the room, I said, wait for it to pull back. So we pulled back and we created a tweezer bottom down here. There's 2 good things about this. We got a tweezer bottom on the 1 minute time frame, and we got a higher low. So that stopped at that higher low, which gives that stock a lot more bullishness for the next breakout. So now we've counted to 3 with a higher low. Boom! The 4th time, if you can count to 4, you might get a little bit more. She goes ahead and breaks out of that flag. Pulls back and retests it. They always retest, always. So, Jimmy, I missed it. Don't worry about it. Let it retest and then ran it and take it up to the 200. Now we hit the 200 and I got out of the trade. I didn't wait. Fell shy a little bit, but I went ahead and got out of the trade. Why'd you get out of the trade? Because we have some resistance right here. And we have the 200 SMA. So now we pulled back to support. There's your 1, 2, 3 right here. We'll see if we hold this support right here and run back up and try to break on out. So I'm going to get back in this trade. The 5100 strike. We'll go in 5. So we got out at the 200 right here, and look at it knifed on us. So we were out before everybody else was even thinking about getting out of this trade. And we're going to get back in it here in a second. But that just wanted to show you this trade that we took and how to take it. Snake, breakout, pull back, created a symmetrical flag, high or low, 4th time, take it to the 200 and get out of the trade. And that's it. Retail traders, sneaky snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. And damn it, Jim, you didn't record it. God. I ain't doing that again. Son of a bitch. Okay, here we go. I'll record this. Retail traders, this is Washboardjim with a sneaky snake trading strategy. We're going to show you a 1, 2, 3 right here. We pulled back. We got a snake breakout. We just called this trade out to the 200 SMA. Now I've just called this one here at 135. This is the, what is it? The 5100 strike at 135. So we need to go ahead and break this resistance level. But we had a symmetrical flag right here, and we just got through calling this high or low. And then she came back and had the 1, 2, 3 right here. So we're going to come up and try to double top the 200 SMA. It's right around there. And Jim, did you push the record button this time? Yes. So your resistance will be the double top with a confirmation of the 200 SMA. Break it. Can't believe I didn't record that. Stop that one too. Jimmy does not like to wait. If there's anybody in this room that gets offended sometimes of what I say or how I say it, please private message me and let me know, and I'll fix it. Because we have people with different kind of religions, and now if you're a local member of the KKK, you might as well go ahead and leave. Break it. Looks to me like we could pull back down here and retest this bottom again, and I don't really want to do that. Now that we've broke the 1, 2, 3 and we've come back down here, it really needs to go up. Better I get out and wait. Oh, I'm going to go in there and warm up my coffee. What little I have in here. Break it. Everything's flat. Everything's at a pivot point. Everything. Everything. Google's not. Google's at support. Google's at support. Washboardjim just eyewitnessed Boeing at $200.51. I want my baba. Nile was low this morning. And then we got Microsoft. Triple bottom. And then we got IBM. Jimmy, why haven't you looked at Chewy in a while? Oh, God. I can't believe Chewy. Does anybody order from Chewy? Just a yes or no answer. Say yes. Okay, that's good enough. So, Ocean, I think we need to work on the psychology part of trading when it comes to you. Do you think the economy's in great shape? Do you wear extra pair of socks when it is colder than 0 below outside? And do you wear panties? Do you wear panties? No, you don't. Okay, that means you got big balls. Okay, we're in a bull market. No matter what, all the lies, what got us here in the first place. Does anybody know what the bounce? 6 imaginary rate cuts. Speculation. What got us here today is the Fed not cutting rates. So we're AI just happened to jump into the scene. They decided to go ahead and take that hook, line, and sinker. We already knew about it. So we're in a bullish market. You got to think, okay, any kind of dip. I mean, we come in here and I didn't feel good about today anyway. I figured we were going to have one of them caca days. So you don't want to be too aggressive. You can't be going 100 miles an hour every day. You got to take a few curves and slow down a little bit, and then see, right now it's trying to tell us, are we going to break this 63 and come up to the 200 and do the double top, or are we going to pull back down and start a whole new flag? Right now it needs to break out. I didn't take the trade. Could have. 135. We're at 165 now. A lot of these people that are trading that I've heard on CNBC, we've not seen times like this. And Joe came out and said it today. We're really not that much higher than we were when we started this whole shebang. Had a couple rough years. So if we do have any kind of correction, no lower than that previous peak, 48.16. I'll be right back. I'll go get my lunch ready.
Solely the case, we would expect interest rates to be screaming higher. No one's buying the bonds. They're plummeting in price, and there's so much supply. That hasn't necessarily happened. Now, there are auctions in the next few weeks, if not the next month, that I will be watching, and those are the shorter dated ones, the 4 and 8 week bills. And the reason being is we're going to have a liquidity facility in the BTFP that is wound down in this next period of time. Is there going to be more collateral demand, which oftentimes 4 and 8 week bills sort of serve as US dollars for many that don't have access to the actual physical dollars in the ledger system. So that'll be something to watch. I don't know if that's going to have an impact or not. To your guys' conversation around GDP and PCE, if I were to lean, GDP
I'll be
maybe
right back.
gets revised lower, and then the expectation generally because of CPI and PPI has been warmer PCE. I think that leads to surprise in either one of those the other way, because if retail sales have been revised lower and the trend of that has been more disappointing, that should lead to lower GDP, all things equal.
Right.
And then PCE, because in the back of our mind CPI and PPI have been hotter, that's where the market's going to be leaning. There actually that in turn could lead to downward surprise because we're so anxious about it. Right now the whisper numbers are a little bit warm.
Right.
2-year yield 4.68.
4.68, yeah, on that. 6-month bill sale was actually today too. 70 billion of that. That was well received. A lot of foreign accounts taking some of that. So that shorter term, as Alex is mentioning there. Okay, guys, let's take a quick break. When we come back, we're going to take a look at some earnings names. We're going to kick it off with Lowe's, the home improvement retail giant, has extended last year's gains by another 4% so far this year, and they report earnings tomorrow ahead of the open. Fast Market's coming right back.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus.
Mister's bouncing off my support level that I had. I had a low support off the 200 on the 1 minute. But we did hit that first one. Lowe's.
The mainstay of their business, about 75%. Is that what they should be focused on, or is this going to be a story that, hey, if they're taking market share in the pro business from Home Depot, that could be a benefit?
Well, it's the do-it-yourself versus the pro, and their stock is rallying because Home Depot stock rallied after their earnings. So that's the first look. Now the second look is, are they making any headway with pros? Right, that's the one that Home Depot dominates. That's what puts them solidly ahead. I think it's interesting. First half of 2023, they bought back 20.7 million shares, 4.3 billion. They are buying back stock at a
Wait, 20.7 billion, not million.
No, 20.7 million shares, $4.3 billion.
Oh, okay.
So, but solid numbers. Yeah. That they're buying back. So they're aggressive. Remember, Marvin Ellison their CEO is a Home Depot alum, and so that's the competitive though. You gotta watch. If they're gonna make room on, they're big in do-it-yourself, but they've got to compete on pros.
Yep, definitely. Alex, when you look at this company, expected that revenue is supposed to decelerate 5.2% year over year. The company recorded in the same quarter last year adjusted earnings supposed to come in just below $1.70 a share, but this might be about cost cutting moving forward, or what's your take here on Lowe's? Because it seems like, hey, maybe some of the moves already built into maybe some of these results.
I think they got to hope for better than feared at this point, given the run-up. Sales are expected, same-store sales, that is, which is a key metric for retailers, is expected to fall about 7%. Their guidance was for about a decline of 5% on the full year. You guys talked about do-it-yourself. You talked about 75% of sales. That's been a drag industry-wide, so they're going to be more exposed to that weaker segment. 14% of sales in big-ticket items like appliances. In the discretionary space, that has not been where consumers have been putting their dollars. Probably not going to be helpful either. Margins expected to fall to 9%
Who is this
on
guy
an operating margin standpoint. So you have slower sales, lower margins, and you're kind of in the mix that isn't exactly friendly right now. Retail sales at home centers fell 2% in November, 6% in December, and 6% in January.
Google's
A lot
so
of
cheap.
trending data that is not supportive of the recent rally. So looking at this, maybe it has run its course, especially given the Home Depot pop. I would look for upside volatility.
And watch for consumer spending numbers.
At Washboardjim, technical analysis says take a good look at Google. Right now we are sitting at a support level of 138.38. Now if I use my technical analysis side crossbar of the price average, I would say support would be right here at 138 to the penny. So I'll be making a business decision shortly. What the hell? What did I just do? What was I looking at? Google. Ten of them. Google. Google. The 140 strike. This could be a possible swing. Google. I made a business decision. Do we have any swingers in here? If you are, this might not be your kind of room. Is it true, Jim? Do you have a swingers room? Yes. It is true. I knew you'd like that. Let's see if we can swing these babies overnight. No, you don't. Don't drop. Whatever you do. We're back to 99 cents. Okay. It'd probably be a good idea to keep a good eye on this just in case. I have 138 support. Oh. Almost forgot about my sandwich. That'd have been horrifying. Jim, why'd you take that trade? Well, it looks to me like it's a little bit oversold. And I've been watching it, I've been waiting for this. I had what's risk level? 7 out of 10. Oh, that's not the tough guy. Where is it? They put, look at that, they spike your hair up. Don't look like they're tough no more.
Consumer happiness, 4 points is not a big difference here, 66 to 70. Teams is falling back quite a bit here. People are not nearly as happy with it as the others. But Zoom is losing out to Slack. Even when you look at web visits, the number of people checking out the website, potentially signing up using Slack is up on a year-over-year basis slightly, while Zoom and Teams are both down, I think 10 and 13% respectively. So everything that we've got just kind of shows a little bit of weakness in Zoom. Not terrible. It's a high-margin business. It's it's a solid business. It's a fantastic thing just to sell access to software. Trust me, I know, but it's just not doing great when it comes to growth. And obviously investors want growth. Now they do have a lot of potential positives. Investors are really looking forward to seeing how introducing AI into their platform is going to increase stickiness and increase in new customers. So, they've got a lot of different things where you can go in and get a meeting recap and the next steps to a meeting. You can use it to draft chats or summarize chats. You can even have it suggest images for their whiteboard feature. So there's a lot of cool things that they're using AI for. Their AI companion is what it's called. But I just, so far we're not seeing tremendous enthusiasm around the product. I will say they're doing a good job when it comes to, becoming more efficient. And last quarter, their sales were only up 3%, but their earnings were up 21%. They cut a lot of costs. I know that they cut staff about 2% just recently, and that's coming off of cutting them 15% last year. So, they're looking to get more, more efficient, which obviously we like. But overall, there's just not a ton of excitement around this company when it comes from consumers, and just a little bit of apathy. And I think that Slack from Salesforce CRM, they're taking a lot of the new interested customers and they're holding on to them a little bit better. So, between the two, I think that's the more attractive investment, and then Microsoft is the kind of the loser of the group, as we've alluded to.
Wow.
Before. So again, slightly negative going into this earnings report. So I do like the move from 60 to 64 heading into this.
Landon, from a stock that was $588 in October of 2020 to where it is now, just under $64. Their earnings are expected to be slightly lower than last quarter, slightly lower than last year, on about flat overall revenue. What are they? I mean, their balance sheet, we've been reporting all morning, pretty healthy. $7 billion in cash, free cash flow, about 40% of sales.
That's a good deal.
So they're healthy. They're not going anywhere. But what are they doing to energize the stock? Is there any growth initiative? Are you seeing any uptick in their prospects for growing, or is this just on a glide path doing a whole bunch of nothing, Landon?
I think that they've got an exciting story around the AI stuff. I mean, everyone that is using it is being, blown away by AI just in general, not specific to Zoom. But when you start introducing that to your clients, if that's their first taste of AI, they're going to be very impressed. It's not going to be unique. Slack is going to have that. Microsoft Teams is going to have that. But it will make them more sticky as a product. Zoom will be for sure. So they're attempting to continue to entice customers to come in, but frankly, it's a pretty simple service. They've expanded on it. They've got a lot of different offerings now. But when they started, when the stock was whatever he said it was, $400 or $500, it was you get online with your webcam and you get a mic and you talk, and that was revolutionary and right place, right time when it came to the COVID lockdown. So that was awesome. And of course, they've been adding to it to continue to improve the product. So I think they're doing the right thing. It's just, how excited can people get about this product? There are alternatives out there. I can tell you I use both. I personally like Slack a lot more. I think it's just a more useful product. But I like Zoom as well. Teams, not so much. But it's just not. If you're going to talk about like a growth stock where you're going to justify really high PE ratios and you're going to aim for the stock getting back to 400 or 500, it's not there yet. It's not. There's nothing in the data that says that consumers are going to be flocking towards this over the next year or two. So we've got to see some improvement out of them. They're attempting to make improvements. They're making their products more efficient, their company more efficient. So they're not doing anything wrong. It's just not great data coming out of Lifefolio for them. Slightly bearish going into this earnings report. I will say, we respect Kathy Woods and the ARK fund, and this is, I think, their 7th largest holding, behind some names that that we love: Coinbase, Tesla, Square, Roku, a lot of those. So this is a big holding for them. It is a decreasing position for them though as well. So they're getting a little bit out of it more over time. So again, good company, solid fundamentals. Just not really exciting, and I don't see a huge beat coming out of them on this earnings report.
Yeah, their new artificial intelligence chatbot, Zoom ZI, 220,000 accounts have enabled it. I don't know if they're using it, but this is all about that high enterprise customer that pays over $100,000 annually. They added 59 of them last quarter. But Landon, if I have products in a company that like Microsoft, and I'm using Teams and Salesforce's Slack, if I'm already subscribed to those products, why would I use Zoom, or as a company, why would you use that? Because I'm guaranteeing you probably about 80-90% of the companies that use Zoom probably have accounts with Microsoft and have accounts with CRM. Is that the thorn in their side where they can't have that growth that they had during the early stages of the pandemic?
Yeah, it's a little bit of a land rush. I mean, you have to grab the customer and then hold on to them. I think what you can say about each one of these products is that they're sticky. Like once you get into using them, you're probably, and you go, company wide, everybody gets used to using them. It's going to be tough to switch. It's going to be tough to switch from Teams to Slack or Slack to Zoom. But once you get them, you're good. But yeah, I think a lot of the growth was from that initial land grab. I mean, they were right place, right time, and all of a sudden everyone needed to connect remotely. And Zoom was a really easy way to do that. They had the free 45 minutes, they got you hooked, and then you're paying, and then all of a sudden your company subscribes. So they executed really well when the time was right. But now it's so sticky as a service, and as are their competitors, that it's tough to go back and forth. You're not going to get that movement from one to the other. You're just going to attract new companies or companies that are new into this space, and then
I've not seen it.
them. So I think that's a big part of the challenge in that exponential growth that maybe investors are hoping for. I don't see it coming because of that whole land grab, and most of the land has been grabbed already.
No, it hasn't.
Competition coming into play here. And real quick, Lynn, your earnings score going into the results?
Sure, -21 on this one.
God. 21, so just outside of neutral to the downside. All right, great stuff. Great data as always, Landon. Have a great day.
Horrible data.
All right, that's Landon Swan, co-founder at Likefolio, breaking down Zoom video. Kev, expectations are low. You mentioned the free cash flow. Cost-saving measures with, Landon mentioned it, the workforce reduction in late 2023 added another 2% earlier this month. How do you want to look at this from an example trade?
Here's the things I see looking at Zoom. Number one, about a $5.80 move, stock trading right around 60, just under 64. That takes you to about $58. But look at the chart. If you guys should throw up a 1-year chart in Zoom, if you can do that, look at all the support. 3 different times around $59, $60 that the stock has held there.
Yeah, that low of $58 over the last year, almost 59 has been an area of support 3 or 4 times. Yeah.
So there combined, that is some of the genesis for this trade, which is I sold the 59.56 put vertical this week, right? And then I bought the 64.
69.
69, sorry, call calendar. It was behind the tab there. The 69 1-week call calendar. That package, the short put vertical, long call calendar, is trading about a 35-cent credit. So as long as it doesn't break 59, 58, 65, you're okay on that because you did it for credit. Now, that was targeting that. That put vertical is one trade that you can do if you're, if you see that as a level of support. If you want to add the bullish play on the 69, you can as well. That's about the $5 move on the upside. The probability of out of the money for that 59 put is about 74%. So that's a high probability trade if you just did the put vertical. A little more complex trade is to use that credit to pay for the 1-week calendar. So it's the put vertical financing the long call calendar. You can do one, the other, or both.
Yep. Let's break this one down that Kevin brought us. Buying the 69 1-week wide call calendar. So you're buying the March 8th weekly 69 calls, selling the March 1st weekly 69 strike calls that expires in just 4 days. And then on top of that, to help finance the purchase, because that's going to be a debit on that call calendar, not an expensive one, you sell the 59 strike put in the March 1st weekly options that expires in 4 days, buy the 56, so a short neutral to bullish $3 wide put vertical. Now, as a package, it's 35-cent debit on this, but your risk below that 56 strike is going to be the width of that $3 wide short put vertical, but you take away the 35-cent credit that you collect on it. So it's going to be about $265 in risk below that 56 strike on this. Now, the apex profitability on Kevin's example trade here, at or near that 69 strike to the upside here. And that's only, as Kevin mentioned, about $5, which is about the 1 standard deviation move that the option market's priced in. That's where it is. Now, you don't really get hurt until just below the $59 level on this one where that short put vertical is. So you got to keep that in mind also. And keep in mind that you've got some assignment risk on that near-term short March 1st weekly 69 call, and then also on the short 59 strike put on that one over the next 4 days into expiration. So keep that in mind also. But this is using that short put vertical to help finance the bullish call calendar on this one. If you think this stock's going to move about a 1 standard deviation move above it, but everything above that break even, just below 59,
what
is
did
going to be
Jimmy say
on this type of trade. So keep that in mind. So a good look at that customized, a little bit more complex.
Jimmy said we were going to pull back and hit this here trend line. That's what Jimmy said. So he said he didn't want to see it happen, but it happened. So we're going to find out how bullish we are here. Now or never. Did you hear me, Mike? Battle stations. Everybody, battle stations. We got a hammer? Jim, what is that you see there? You know, I just now realized what we have here is a falling wedge. Now we're retesting. I really would rather buy it at a, yeah, Jimmy, wait. Jimmy, wait. Jimmy's got Google. Oh, look here. Perfect. Lotto, the 50.95 at 195. Okay, I got my first double bottom here. You know, that's always been a good question. Why doesn't it show? It doesn't show the VWAP either. Come on. We could have waited a second or two and got it at 185. It's kind of risky right now because you have 3 other support levels here to hit. This is just the first one, the double bottom, which is the pivot point inside of this triangle. I talked about that Friday. Every pattern has a pivot point. And that's where we are right now. We're at, it stopped. Pivot point's a little bit higher, not much. 5083. Yeah, I think we could easily drop back down here. I don't know how I got that line there. I don't know how I got it. I have no clue. Oh, I know. Tweezer bottom. God darn it, I knew it. I'll jump the gun. And I'm debating if I wanted to sell it or not. I keep thinking, just hold on. Just see if it holds. So far, it's respected support level, the double bottom. How do I say respect? This candle right here showed some disrespect. But it didn't go below it, so I'm still going to. Should have grabbed a couple more down there at 185, 180. I don't think it's going to be a big winner. So I might just get out of it. We do have a higher high, which means we could end up at 58.80.
Workday is a data gathering machine, and they have the ability to actually enhance productivity. It's a productivity tool. So integrating that, which again, you can actually see looking at expenses last year, they have deployed quite a bit of money to expand those offerings, which they'll continue to roll out with updates over time. And it becomes more of a marketing tool as well. I think as enterprise-based businesses, the large ones with that matter, are considering Workday's options and technologies. They want to see what's the next gen AI integration tools that they provide. And I think they're doing that quite well. And what's nice about the stock too, from a performance standpoint, I mean, the company is profitable from a net income standpoint, the profit growth isn't nearly a company, let's say like NVIDIA or even a small cap like Supermicro. Those two stocks have gone parabolic, but Workday's been consistent. And I think that's important to consider here when you look at the trend in the stock, but also, you know, when you look at a trade or trade placement going into earnings, it's a company that really has been a solid performer from an execution standpoint. And it's not going to perhaps be a full-out surprise, or perhaps even, you know, a situation where we saw NVIDIA where all of Wall Street really got it wrong in terms of the forward estimates. I think the forward estimates for Workday are pretty much in line, right around where they should be. But if they got a little bit higher, we could certainly see a continuation.
Yeah, we've definitely seen a continuation of improvement in gross margins. They're expecting 6.4% revenue growth this quarter also. All right, great stuff. Great backdrop for us here, George, on Workday. That's George Tillis, Senior Markets Correspondent. Kevin, if you look at this one, Workday, for an example trade perspective, the option market's pricing about a $26.50 move either way in the shares. So implied volatility levels, current IV percentile rank, 100%. So implied volatility is at the highest levels that we've seen over the past 52 weeks. So you have to take that into consideration, what type of strategies work in that type of environment. An example trade, selling an upside call vertical, which is neutral to bearish. I'm going the flip-flop in the other way, so we give examples of both here. I'm looking at selling an out-of-the-money put
she had a better way of showing it.
Short-term positioning in the March 1st weekly cycle, selling the 290 strike put, and then buying the 280 strike put, short, neutral to bullish, $10 wide put vertical, collecting roughly about $2 and it's about $2.70 now, but I looked earlier, it was trading $2.80.
Oh man, here you go.
Price stock, the price discovery might be warranted. But if you collected $2.80 credit, that's what you can make on that trade.
You're ready on SPX.
You've got $7.20 in risk on this one, $720 per spread with that break even, Kev, at $287.20 to the downside. So this is a flip-flop of what Alex looked like, but it's still taking advantage of higher implied volatility with that event risk, right?
290 put probability out of the money, 69.5%. So you're inside the expected move, right? You're still at right around 70%. That inside the expected move. Bigger premium, right? That short put is closer to at the money, inside that one standard deviation move. So you've got a nice set of, you've got a nice premium on the trade, $2.70, $2.80 based on where it's trading. Looks like it's trading right now, but right just under $2.70. So it's a high probability trade. It could be higher, but that trade-off is always there. So yeah, this is one that this is a passively long about 9.5 deltas.
Right. Yeah, and the opposite here, Kevin, where I'm selling a put vertical that's neutral to bullish. With that higher implied volatility to take advantage of that. But because it continues to move higher, you still have quite a bit of risk on this type of trade. You want to try to collect a third the width of the strikes as a rough guideline. But if you increase that probability out of money, that'll give you less credit, right? And that's what that trade-off has to be, right?
Yeah, remember, there's always, the closer you get at the money, the trade-off is the bigger the premium, but the lower the probability on the trade. So if you're trading high probabilities, line those up to fit your risk tolerance.
Yep, and as I mentioned, $26.50 move. Kev, real quick here, we're just kind of gyrating around the flat line. What are you looking forward to tomorrow for markets?
Yeah. Finish the day today is obviously going to be important. The data comes later in the week.
Okay, I'm about even.
One is Thursday. But durable goods, GDP, those will probably be
now I'm up.
Slight market movers, but a lot of earnings, a lot of data.
Yep, and also watch that 5-year note auction that kicks off here in about 5 minutes. All right, that's going to do it for us today here on Fast Market. But stick around right here on the Schwab Network. Next Gen Investing is coming up.
Nail it.
Knock, knock. Number one
broker here for the #1 hitmaker.
Thanks for swinging by, Carl.
No problem.
Knock, knock. Who's there? Washboard Jim. Washboard Jim who? Washboard Jim, leave me alone. I'm in an SPX trade right now.
We
and
do
we
full
need
service
to...
wealth management, advice.
I said don't bother me. We need to break the 21. And I'm tired of your knock knock jokes. Knock knock, who's there? Washboard Jim. Break it. If we get any kind of movement past that 21, we got it made. Okay. There we go. So we got kind of an expansion going on here in a way. SPY has a flag on the minute. Last 5. Get ready to squeeze. It didn't squeeze to the upside. Where am I? 165. That didn't work. Oh. Gosh. New low. New day low. I'm gonna have to get out of this sooner or later. 508119. Have to break that. It don't look too good. Oh, okay. Let's see. Now break it. Now we're above the 9 and we're above the flag on the, we got to hold this number to stay bullish on the SPX. 508243. No lower, not a penny lower. Breakout. Think about Zoom. I think you're right about the run already. It's already got one more day of breakout up to 66 and then a pullback to the 200. And we're outside the flag right now. We're still bearish, but we're more bullish than we've ever been here for the last 5-6 minutes. 10. This will be right there. That's the pivot point. Right there.
Well, Quarry analysts downgraded shares to sell from neutral, basically saying they're only worth about $20 a share here, and we're trading just under $33. Also thinking that overall, right now, given its PE, I mean, we're currently trading at a forward PE of around 35.6 times. So for that reason, they said this name is expensive. It's more expensive than the industry average, and its growth hasn't valued that, or hasn't justified the current levels of which it's trading at. So,
well, yeah.
Mistake, but interesting as we head into earnings.
This is like a pure play in like kind of metaverse, like virtual reality space, but also something that's associated.
This is my resistance channel.
Strongly or tightly with mobile content. So
if we can break the 63,
kind of what I put this company as, and not an area of the market when it comes to metaverse that's been as strong in the last year and a half as things like AI have kind of taken the mantle from that. But we'll see how this company can kind of fare because it has uses beyond just metaverse. Next one on the list, though, is Alphabet. Shares of Alphabet today, Jenny, are like very, very weak. You could argue that as much as NVIDIA has driven the market, Alphabet is driving things today. You don't have companies the size of Alphabet move 4% lower on kind of quiet days all that frequently. It's pretty heavy and probably a pretty big reason why you have the S&P is a little bit weaker today and the NASDAQ not stronger than it appears.
Yeah, and I don't know if I can necessarily pinpoint it on the back of like this one analyst's more negative note, but we do know that Malleus Research is saying they're facing this increasing competition in the AI space and that the stock is cheap for a reason. So in this note Monday, the analyst did say that while Alphabet does have a moat or a competitive advantage in search that is about to be disrupted, they highlighted that Google's search generative experience is in use with partners and has renamed, of course, Baird as Gemini with a $20 a month version. Now, they said that they'd like to see more evidence that SGE is the preferred method of search in AI, and that would, we see this be a consistent winner in the overall search world. Now, overall, they do still have a hold rating. It's not like they're saying, outright sell your shares. $164 price target. That still does imply some upside. We're trading just below 140 here. But this isn't just one analyst thought. And there is the thinking that
this ain't going to do much.
It trades at a discount to its peers. If you look at the overall Magnificent Seven, Alphabet does currently trade at about 20.7 times its per share earnings expected for the coming year, compared to its 5-year average around 23.4 times. Also, that puts its valuation as PE below Microsoft, Amazon, and Meta. So that is something, or excuse me, not Meta. Meta is the one that's the least of the three. But overall, still, this name valued relatively on a low bar compared to the Mag 7.
Yeah, it's one of those situations we talk about these kind of situations with George Tillis a lot, where it's like, hey, on the surface, it appears more like it's more of a value situation because of some of those valuation ratios, but there can be reasons behind that. So at the moment, it's their kind of indestructible fortress that is their search assets, seeing a little bit of a siege from things like Bing at Microsoft and others. Look, I don't know what's going to happen with that. To me, I haven't gone as far as even considering using something like Bing in replace of Google. But
there we go.
Becomes dominating.
Now I drew you the little resistance channel. Yeah. Oh, there it is. There it is.
Those who are willing to make
there it is.
Wager one way or another, an investment one way or another, may see the fruits of that investment.
I'll take it.
Bing is going to make a big impact on Google, potentially, an opportunity to bet against this one in a bearish fashion.
Thank you very much.
Google is going to be what it has been for the last 20 years. You do see the stock $15 off its highs.
Thank you very much.
You look at that and. It, to me, seems quite binary. It's either going to be a major problem for Google, or it's not going to be a problem at all, like many of the threats have been.
I think that's an absolutely good point. I think that it's always important to keep in mind this is just one.
Okay, Washboardjim. We have a falling wedge, an expansion pattern. If you can count to 3, 1, 2, 3, you can trade with me. God darn you. We'll put you down there, get you out of the way. And we'll remove that. We'll come up here to my little circles. There's your 1. Oh, you stupid. I know what a circle is. And I know how to count to 3. 1, 2, 3, come down the 3rd time. Now watch. This is the exact point that you really need to pay attention when you're in this trade, or you're looking at it to get in, or you want to get in at the right time. So we've got the snake, and it broke out and created a new snake here, created a flag, an expansion flag. We've got lower lows and then lower highs, but they're not as drastic as your lower lows. So you got 1 that creates and it goes out of the flag. Or you could use this one here, I guess, as an example. I had the big breakout, breakdown, and she comes up, creates the channel, and then she breaks out of the channel, pulls back and hits the top of the trend line of that snake. And she breaks out again, and then you got your 1, 2, 3. So you're counting yourself, you're telling yourself, okay, it's going to come down one more time because we've only came down twice. So it has to come down one more time, and I want to prepare myself when it does come down for the 3rd time, knowing that this is the last chance it's got. Because we've already had a 1, 2, 3 up here, and we've got a 1, 2, 3 down here. So it has to break out of here. If not, then I got to get out of the trade once we come up to the top of that channel, if it does not break out. 1, 2, 3, pulls back, 1, 2, 3, boom, baby, to the 200. And I already had the channel already drawn out where I wanted to get out of the trade. So 175 to 205. One, two, three. It comes down for the 3rd time, and it has to break out. And if it doesn't break out from here, then you got to get out of the trade, because it'll come back down the 4th time and bury your ass. It's that 3rd time. Tells you everything. Snake breakout, pull back, boom. Did I get a grade? B-, but A+ for sticking to it. Very good. I'll take that. Sometimes it's not the win that matters. It's the teamwork. One of these days, I'll tell you about Coach Clark. Best snaker catcher in country. Say what? Hell yeah, man. Catch some snake. Has anybody ever ate snake? Anybody ever ate a worm? How about a crawdad? No, we do have a rattlesnake eater in here. Okay, we're back ready for a knife. Look at this setup. So this is, here we go again, folks. Are you ready? The 5095 1010. Okay, just trying to get in here. The crowd's going crazy. How does he do it? It's impossible. Snake, breakout, pull back, higher. Oh, oh no. Oh. Oh. Okay. Crowd's going quiet. Let's have a breakout. I just sit here and trade this all day long and make a real good living. I think I can do it. Did we blow anybody up? It's got to be able to monitor news somehow. Dashing through the snow. See, I was out. Once we went through this resistance channel, I got out of the trade. 8 minutes later, uh-oh. What's going on here? Retail traders, may I help you? This is Washboardjim. Hey, I just saw you take that snake trade. Double bottom pullback. Boom. And make sure I get my 10% when the day's over with. If not, I'll send my son over to kick your ass.
Debit, going to capture an earnings event in here that could be your catalyst. It's about a little bit over a 10% move required to get to $100. And as we talk about every time with these calendar spreads, Jenny, you can see the risk profile, that mountain-like peak that takes place at the strike. So you want to move higher, but you do have risk to the upside as well as to the downside. A move right to 100.
Sometimes I feel like I'm pushing my luck when you hang out with the Bidens.
Best case scenario, $230 in risk. Very customizable for someone looking to trade a name like Micron.
Yeah, and also, mind you, this name
new low.
March 20th. So even though that's not like obviously tomorrow, it is something to keep in mind. And we do have, of course, in NVIDIA's GTC conference that is in late March, I believe. So a lot of near-term catalysts to also consider here when, of course, trading that name. But we will leave it there for all things our Chartmaster segment. After we have next, it's time for FOMO. So we're talking Li Auto. Finally, we get to talk about the EVs on a day of
Chartmaster segment.
17% pacing for their best day in almost 2 years.
We ain't got time for that today.
My dad was a hard worker.
Oh,
he used
God.
to do side jobs installing.
Your dad. You know what your dad did? I caught him one time sneaking in the back of the garage, and he stole one of my rabbits. Okay, expansion. Dadgummit. Look what your dad caused. Oh. Uh-oh. So I get 10 here. Oh gosh, what happened? Oh. Darn. White House suit to block Albertsons Kroger's merger. Huh. Well, I'm gonna... Okay. Didn't see that coming. I'm not freaking out, but I'd hate to overreact and sell it for $300 loss here. 350, 400, I mean. I think if we break this trend line, we'll be okay. So I don't want to get rid of it yet. And if we do come back down here, I'll buy 20 of them. Maybe. Yeah, that'd be a good add-on right there. Do-do-do-do-do-do-do.
From 180 to 10.
I know, kidding. So yeah, I mean, Li Auto really like resounding technicals here from like two people that are not the chart master. But hey, all things considered, this stock has fared quite well. Now they did guide for somewhat lower first quarter results, but overall, I mean, shares obviously raced higher today, pacing for one of their best days in almost 2 years. They did earn about 60 cents per ADS, up from 4 cents a year ago, just to signal the improvement we've seen in the company. Also saw revenue jump 130% year over year. Now they did already disclose on January 1st, they delivered a record 132,000 vehicles, with their cheapest being the L7 accounting for about 40% of that. Now, when we look at revenue for the first quarter, they are guiding for about 66 to 71% growth versus a year ago in local currency terms, although that was still below forecast. Deliveries are expected to be up 90 to 96% from a year ago, and that was also under what the street had been expecting. But I think you have to consider, at right now, delivering a record fourth quarter, basically 132,000 vehicles. That was also, I mean, like that is a considerable number, and also they continue to expect these pretty strong levels of growth. I know, again, 90 to 96% growth is below what the street had been expecting, but it's still 90 to 96% growth. They also did say that sales do tend to peak at year end, while the extended China New Year holiday had a big impact on their production as well as sales. So that's something considerable. But also, when we talk about these names, I always care about like what's next. So obviously markets are forward looking. March 1st, that's this Friday, we do get some of these February sales figures from the Chinese EVs like NIO, XPeng, Li Auto, of course. BYD is also expected to release, I believe it is March 1st or 2nd, it hasn't been confirmed yet, but they will also, Li specifically will be launching their Mega MPV, or the minivan, their first fully electric vehicle, and it's the BEV vehicle, so that's huge. That's been pushed back from early this year, but it's apparently expected to begin formally launching on Friday. So Friday is like a major day also for Li Auto.
Couple things. We use the term resilience probably too much at times. This is the actual name that I think that term applies to. This has been a space that's been battered. You look at pretty much every key competitor in this space, even the champion of the space in Tesla, their performance has been dismal going back to the beginning of 2022. This name has done quite nicely in a tough period. It's hard to discount that. It's a name that's higher from the beginning of 2022 and really higher going back to the beginning of 2021 as well, which is pretty good, all things considered. Now, it can still be the best house on a block that isn't looking so great at the moment. I think there's still risk to the space in terms of it's fallen out of favor nature, but not to be overshadowed in how impressive these results were, despite the fact that a lot of it driven by the one-time recalibration of warranty reserves. nonetheless, really nice volume, and they're looking for all the slower pace of the deliveries. Over 100,000 is pretty good.
I mean, it is pretty good, and the fact that I also appreciate the fact that like they're releasing their 2024 versions of their L7, 8, and 9 on March 1st. So like we will have all of these new vehicles to look forward to. I mean, I'm not discounting that we haven't seen growth from names like Tesla. I mean, like they're obviously working pretty hard on their North American charging standard and the various iterations of their vehicles. But I like the fact that this name, when we talk about EVs, there's a lot of speculation. It's like, where will this be? We're betting on basically the fact that this becomes mainstream. But there's a lot of these companies that don't have the pipeline of like a Ford, a GM. And so I think that that's something to consider when you're looking at reaching and targeting a mass audience. You have to have more vehicles. So I appreciate that they're releasing 2024 versions of their vehicles. I feel like that just gives us this next catalyst to look forward to here. So yeah, I think this is a really phenomenal move and signals that it's not like the fourth quarter for all EVs was super disappointing, because it frankly wasn't.
One thing to be maybe concerned about, but possibly light at the end of the tunnel, the China economy has been the black eye on the global economy for the better part of the last few years. It has real problems when it comes to sort of real estate bubbles and things of that nature. The stock market in Hong Kong, Shanghai, everything way down. GDP slowing. There are concerns in terms of the trajectory. We've heard all about the stimulus. Time will tell if that works.
More drama.
As a big ticket item for the consumer, you wonder what kind of how that weakness will play into things going forward. But also a ginormous market potential when you think about how many people are in China and in that region for Li to potentially meet that market. And if they're the strongest in that group, have the best chance of survival in that group, potentially positioned for a really, really nice point in the market when and if things recover in China.
Yeah, and that's also a really good point. As I do feel like we don't underestimate how massive the China market is, but it just hasn't been an area of resiliency. It really hasn't. So
it's been the weakness.
It's been. I think the black eye is a good way to put it, frankly. So I think that has discounted how massive this total addressable market is, because I know we talk about the increased competition. You have BYD is another major competitor there as well, but still, it's a massive, massive market. And so Li clearly capitalizing pretty well on that here. But so now, when we trade this name, Alex, walk us through the thinking of, hey, difficult to look at a name that's up 16.7%, but I actually will say from a longer term perspective, their chart actually, you can find a lot of areas of support and resistance just because they've been more reliable compared to some of the EVs that have like crashed.
Yeah,
more drama
here today. We're reaching, on the chart some levels that it's failed at before. But if you're a believer in this name and you see it as, again, the best house on a bad block and there's more upside to go, I looked at a strategy in buying a call vertical, one strike in the money, one strike out of the money going out to April, the 38.42 for $2. Break even would be exactly 40. You risk 200 to make 200. Break even near the current share price, 1-to-1 risk reward ratio. Meeting our kind of loose guidelines for that strategy, it's one that would benefit from a 5% move higher, and it's one that would, of course, reach max loss at a 5% or thereabouts move lower. Jenny, this is a strategy that is risk defined. So even if there is a rapid repricing, which some of these EV names, some of these Chinese stock names that are listed here in the U.S. have been known to do, you're protected from that massive whiplash. And limited to the risk associated with this trade each time, which is $200.
Yeah, and I think that's also a good way to play into some of the strength today, while also being mindful of the downside volatility that naturally can encompass a name that makes a 17% move to the upside, frankly. But that'll do it for FOMO today. Appreciative of this nice move to the upside, though, in a lot of these EVs. I have missed the EV discussion for our FOMO conversation, Alex, but now looking at a developing story with Renita Young, senior markets correspondent for the network. So, Renita, we are revisiting all things lunar. I'm refusing to call it that it's actual company names. I like the ticker so much. But so this device, you send this thing to the moon, you spend millions and millions, more money than I can comprehend, and it falls over.
Listen, I knew there was more to the story because when Odysseus landed last week, there were some communications issues, right? And so we learned today that apparently the CEO says that the rocker might have caught a foot on the moon's surface, which caused it to possibly snap a leg, and it leaned over on a rock. Other renditions of this say that some of its landing equipment might have gotten caught and it caused it to tip over. But either way, as a result, there are communication issues because it caused some of the antennas to be pointed in the wrong direction. And the company does believe that Odysseus is positioned still a few miles away from its target also as a result. But Intuitive Machines says that Odysseus still has several other operational capabilities. They're still able to accomplish some of the goals that they set out to accomplish. And the lander actually beamed home some new photos from the surface, its very first photos from the surface over the weekend. Now we know, of course, this was the first U.S. lunar landing since 1972, since the Apollo era. But unfortunately, shares taking a huge dive today on news that Odysseus has tipped over.
So really, like, the selling is just because, like, there's the lack of faith in this, it's like basically full capabilities, correct? Because it's still functional. It's not fully functional, but it's still functional. So right now, like, if it's not as bad as, like, perhaps what the headlines make you think, why are shares down 30? I guess I'm asking the million-dollar question. Why are shares down 35%? It's still operational. So that's, like, really the key takeaway, correct?
They're down because the same reason that they were up really high last week. Honestly, I think that just in general, people get excited about space things because it's one of the things that we can't touch yet, right? So I think it's just the excitement that was poured into this ahead of this landing has now gotten some of the air out of the tires of it, and people are just, going in the opposite direction because of it.
You're right, and I think that anytime you see shares surge as much as we saw last week, I think that we run the risk of seeing what we're seeing today. And
exactly.
Not saying that's necessarily always going to happen, right? But it just doesn't feel like it's specifically tied to the thing falling over. I appreciate the pictures though, because I also am a huge fan of the moon travel.
See?
So I appreciate.
Me too, by the way.
Yeah, I can at least respect that we have some great footage, but we will leave it there. Great breakdown on all things lunar, continuing to make our coverage as it has been all over the place. But we'll leave it there. Now coming up next, time to talk all things Bitcoin. Now Bitcoin futures are up almost 5% here, about 4.75%. Still a point of strength in the overall markets, and some of these names like Riot, Marathon also rallying on the session. We'll discuss that more with Jeff Pierce coming up next.
Ding. Oh, I didn't get to hear about his mama. My mama was a streetwalker, but she managed to put me through college. One hour time frame, the SPY has now touched the 63 EMA. See, me. Okie dokie. Hear 'em. Symbols. Watch list. Iron Condor. Duo at 95. Sneaky Snake. Spy. La 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 la. Boom. Spy, what else? Tesla. March 15. There's 10,000 contracts for 210. Ouch. The 220 has 12,000. Anybody here been to Negril Beach in Jamaica? DraftKings looking for bounce. How you doing, Percy? Hello, Zona. DraftKings, huh? Oh yeah, look at it. We could see some more downward trend. I want you to follow this trend line right here. Not much. I mean, it ain't much. It's 15 cents. And that would be your lowest. Maybe. I see another possibility. This is your first support. The one that has to hold. Right there. 40.50. Resistance to break 40.83. Right there. Yep, 40.83. Here's your head and shoulders. Yep, we just went down through it. I was going to see if we're going to hold 50.74.91, but we didn't. Jim's making coffee. Hey, Jack. Do you make, yeah. Watch that steamer. Now there's a bottom trend line right here. That's your second support, and then your third. That comes off these 1, 2, 3 that we called out earlier. I'll be in there in a second. Once I quit trading, I'll stop drinking coffee. That's right. So that's two things that if I go out to a resort, I have to have good coffee. I mean, if I don't have it, I have to get it somehow ordered to the resort I'm going to, but I gotta have perfect, good coffee. The best. Then I gotta have the Dallas Cowboy cheerleaders. If I can't get them, the Kansas City Chiefs will do, I guess. Break the 21. I have to have good food. It's good coffee, Dallas Cowboy cheerleaders, and good food.
For sure. But I do know about Royal Caribbean being the better performer out of the three names, Carnival being the other one, is larger, and their debt position is quite a bit more favorable
NCLH.
in the region. So, I think the size of their fleet is underwhelming relative to demand, and I also think that the balance sheet issue is weighing on them because operationally they seem to be executing well. Just looking at positive operating income over $500 million, then you just add in the interest on the debt, and then it completely flips the operating income to a net loss of over $200 million. And so you got to find this.
See, this is what they're working on. And I'm going to say the same thing he is. It's like anything else. The people that have been doing it for years, 5, 10, 15 years, going on cruise trips like this, are seeing the price gouging. They're seeing the prices go up. They're seeing things being cut back, and they're seeing new ships, and they know that they're in debt. That COVID put a strain to them. And then you got the new people coming on, the newer generation, which didn't go through the price increases or the can't hit the golf balls off the ships anymore. Or, free lobster all night long. Them nights, they're not used to them because they never had them. So I guess what I'm saying, per capita, people are changing. They're not going to miss it, so they're not losing anything. I mean, full capacity. People are paying the higher prices.
Cruise liners, but we will leave it there. Really great insight, of course, for Norwegian ahead of its earnings, which are due out tomorrow, I believe. Now, that'll also do it for
tomorrow.
Myself for Next Gen Investing for
Norwegian.
Monday. Now, coming up
NCLH.
Nicole Petalides.
Now it's time for my analysis. You already got the verbal part of it, the fundamental part, which I think they're cost cutting, and COVID had changed a lot of businesses. COVID, it changed mine. I thought I've had my business 20 years, and I thought I would never have to have a government shutdown affect my job, but it did. So I had a government job, and they had this lawn mowing company that did the lawn. They were still in business because they still had to go out there and cut the lawn every week. So I didn't have none of this stuff. I didn't have a lawnmower or a weed eater or a hedge trimmer. But I had this friend that had lost his job, and I told him, I said, hey, I'll buy you a lawnmower, and I'll buy you a hedge trimmer, and I'll give you $50 a week to come out and mow this grass. It's a small patch, not much at all, but you got to do it all summer, 3 or 4 months till the end of the year. And he looked at me and said, oh, yeah, man, I'll take that up. And yeah. So he went out and he cut the grass, and he got a free lawnmower, a free weed eater, and a free hedge trimmer. And he made $200 a month. and I didn't have to do nothing. I made $1,400 a month off of it. Well, about 14, doing nothing. I just sat back, took the check, and gave him a couple $100, and I got paid the same as I always did. But it was nice enough for the building to keep me working, you know, let me do the yard and pay me the same wage I was making, or it would have been a tough one. But who knows, you know, one door closes, another one opens. So we have the Head and Shoulders. Now we broke resistance past the 63 EMA. Yeah. That's how you do it.
Right now. US dollar 103.76 and Bitcoin 54,460, and taking a lot of the crypto products up along with it as it gains 5% today. Big move.
Damn,
For some of the
Bitcoin.
biggest stories in the markets, we welcome in Kevin Hinks, senior equities contributor here on Schwab Network. So we'll start off with Kroger Albertsons and the FTC stepping in, working to block this. I don't think it comes as a surprise.
No.
They haven't really been very supportive of mergers in the first place. What are you learning today?
Hey, Nicole, yeah, no one is really surprised by the FTC trying to block this merger. It was the $24.6 billion merger between Kroger and Albertsons. Now, the FTC came out with their statement and said blocking this merger would lead to additional grocery price hikes for everyday goods, further exacerbating the financial strain on consumers. It would stifle competition, it would raise grocery prices, and it would harm workers and product quality. Now,
It would.
Kroger came out with a statement saying, contrary to the FTC statement,
Exactly.
blocking the merger would harm the exact people that the FTC purports to serve, consumers and workers. Now, 9 other states and municipalities blocked this. It was Arizona, California, Illinois, Maryland, Nevada, New Mexico, Oregon, Wyoming, and the District of Columbia. So a back and forth on who exactly would be hurt and who would gain by this merger. But you're right, Nicole, not shocking at all. And think about this, Nicole.
This guy's
with
something
this
else.
merger being blocked, with the other mergers being blocked, as you know, and now
He's fun to listen to, but he has that kind of persuasion kind of thing about him where you don't really want to listen to him. Then excitement, a certain excitement.
And ACI up just fractionally, let's say, and I saw the White House saying that President...
Reminds me of somebody that I'd see at the dog track. And here comes Crispy around the 5th turn. She's speeding up.
As you noted, we'll have to wait for the latest developments. In the meantime, you're taking a look at another name, and that's Berkshire Hathaway. Some thoughts there after we heard from them.
Berkshire Hathaway had put earnings out over the weekend. They normally come out, as you know, over the weekend. And Warren Buffett started his presentation with a tribute to Charlie Munger, who he described as the architect, the true architect of Berkshire Hathaway. You know, he also talked about their $167 billion cash pile and saying that he's having difficulty picking new investments. He said he has no interest in buying all of Occidental Petroleum, increasing their 23% stake. He mentioned they have big successes in insurance. He talked about Coca-Cola and American Express. He talked about 5 Japanese trading companies. He also talked about trouble in energy and freight rail businesses. But yes, $167 billion in cash. And Nicole, he's having trouble finding what to do with it. Finally, there is a supposed rumors of a mystery investment that they have. No mention of the investment in either their statement or their filings. No mention yet, of course. And everyone thinks it's something financial, but no mention from Warren Buffett on that mystery investment, Nicole.
Yeah, that makes you wonder, what is it, right? I mean, of course, eventually when they do their...
He could add a stake to Bank of America.
That certainly leaves us...
He could add a stake to Bank of America, I bet. I'll give him a call.
Look at the big picture of the economy. How are you feeling we're doing?
I think we're doing pretty well right now. The labor market is still quite strong. In our own data, which we'll give you a preview of, we're going to publish it next week.
Bolts.
Labor market report.
Uh-oh.
We've seen the second consecutive
Ladies and
month
gentlemen,
the workers on our platform
SPX.
easier to get a full-time or part-time
Exit
job.
idea coming up.
That's pretty good. You know, I had expected that unemployment rates would
200 SMA.
But we just really haven't seen a very significant move in that direction. The labor market is still doing well. Stock market's up.
There you go.
Pretty decent investment levels. I think we're waiting to see what happens on Thursday with the core personal consumption expenditures price index. That's the one that the Fed really likes to follow. Inflation still really isn't where
beautiful world today.
Now we're going to hear from a bunch of Fed governors, and they've been.
Where are you, Jim? What are you doing?
Cuts may not come till the second half of this year, but you know I don't see a lot of people waiting with bated breath.
Hey, watch your mouth.
Pretty confident in the overall.
Who is this guy?
Power of the economy to grow.
You will be muted.
And so they're not really.
How long did you suck your bottle? Until you what, 6? Don't ever speak for me. Do you understand? You will be muted. Sorry, folks, I had to take that a little personal between me and him. He called me a couch potato. So we got an inverse head and shoulders. Jimmy said it had to fall one more time, and she did. Boom, baby. And then she came back up, created a neckline. And you got the 1-ups, 2-bits, and a freebie. Boom, to the 200 SMA. Exit idea. Oh, I don't go there. Please, get rid of that. Come on. Oh, you're really starting to make me mad. This is getting too easy. Show the inverse head and shoulders. All you got to do, I think this is what a lot of them people, when you see back there behind the scene, they're stuck to the computer. They watch the same stock every day. When they see a pattern, like the inverse head and shoulders, boom, you get snake, breakout, pull back, inverse head and shoulders, boom. Here, let's do this. Jim decided to do this. I tried to show it to him. One, two, three. Had to wait for three. 1, 2, 3. 1, 2, 3. Boom, 1, 2, 3. Up. See, the exit idea of 200. There's not too many people that are going to see that. Look here, we hit the 2, so you're out. You're out on this engulfing candle. You're one of the first people that are out of that trade. And all these other ones are sitting on the lump on the log, just going, damn, man. Back to entry again. Now, see, this is support. What was resistance now becomes support. Might get back down to this other shoulder. Looks like the reversal candle. Nope, not yet. It tried. You really did.
Should just toss out the window. And I think the economy is doing very, very well.
I like that. That's crazy talk, that recession stuff. It's the recession that everybody's been waiting
Coffee
for.
time.
Every 6 months they say 6
Everybody
months,
thinks the
6 months,
economy is doing very, very, very well.
investors pull back. But that being said, you talk about picking quality and dividends and such like that. Tell me about some of the advice you're giving to investors and how do they find those things that are the quality versus those growth or high flyers or things like that?
Well, if you look at more of the established companies, a dividend is extra cash, and for a company to establish extra cash, they have to have a number of quarters, could be years and years of having extra cash built up, so they don't just pay a dividend out and then they have to stretch to go find money for a dividend. So these are usually really well-established businesses like Philip Morris and Abbey and AT&T. These are some of my favorite dividend-paying companies. But at the same time, I love utilities. And utilities, have a built-in dividend for the most part. Almost every utility pays a dividend. If you don't pay a dividend, then you're in a growth phase. So there's two different stages. You have growth and you have established. And if you're established, you're called a value company. And you're always looking for value companies to be selling at a little bit below what their price earnings ratio is. So you can always, be establishing a nice dividend series going forward on those companies. And growth companies, I would probably stay away from right now, just for a variety of reasons.
Why?
But utilities are going to be paying you about 4 or 5% dividends.
Yeah.
And that's really attractive. And then I also like the emerging markets quite a bit.
Yeah, and I know you have some names for us as well. As a matter of fact, since you brought that up, let's do those. I know NextEra Energy
was the first one. When you take a look.
Honey, I'm going to interrupt you for a second. But Washboardjim's getting ready to make an announcement for a business decision. So, if we break this resistance of 5077.25, did I say 25? There it is. 5077.25. If we break that, I think we're going to go ahead and pass the 63. That'll be a shoulder line of a Head and Shoulders. If not, we're going to pull back to the other shoulder, which is below 5074. 5073.41. Yep, that's what I said. Damn, Jim. So if we pull back to the shoulder line of this inverse Head and Shoulders, I'm going to be calling that an entry. Do you understand? Oh, yes, I understand. I know exactly what you're saying. Okay. The crowd's getting ready to go wild here at the sports arena. I'll have to move his calls up to the 50-85 or the 50-90. That would work. Oh, it's too late now. Ooh. Well, Jimmy was a little too late. It pisses me off. Yep. 190 to 220. Oh, we missed AMD. Jimmy mentioned AMD this morning, right to the 200. So here you go. Snake. Breakout. It created a Head and Shoulders. Oh my God. Jim. I went to 235. Okay. Right there would have been a nice trade. $190 to 235, 240. But I wouldn't have called it there. watching it. I would have called it here for sure. Okay, Fat Cats are back. Well, they've been here for an hour. Golly. How did I miss that? So they got here. Oh, my God. How did I miss that? 12:25. So they got here right here. So when they got in. That's real bad. Heck, by the time they got back to their desk, we had 3 black crows and a hammer. Jimmy said if we broke that he wasn't too concerned about these. That's what he said. Boom.
Each other, the way really we do anything is going to be transformed in a way that we haven't seen since the dawn of the internet, and that's really where the NVIDIA story comes in.
Yeah, I mean, people are naming their kids Jensen, and I was actually showing, that we had the weekly, the New York Post on Sundays does the weekly winners and losers in business, and Jensen Huang, his picture was right there at the top of the winners, and Google's Gemini and the AI miss was in the losers. But your thoughts on how NVIDIA is really leading this revolution?
We were involved with NVIDIA since 2016, and back then it was simply a story about gaming and GPUs and so forth. And the way that transformed is that these GPUs are really the best thing for all these very massive computational needs that NVIDIA really has mastered over the last 20 years or so. So I think what's going on is we're seeing now that Gen AI is out of the box, basically, we're seeing a lot of these big name companies, big consumer companies like Facebook or Meta or Google investing tremendous amount of money into these computer clusters to have these capabilities, and NVIDIA is really benefiting tremendously from that.
And so also about how AI is moving to mobile, people were talking about Qualcomm, for example, and just how it's evolving, right? And I guess everything we're doing will have some sort of AI that'll be gathering our information, and I guess will be helping us as well.
Yeah, I think it's going to be pervasive, and that's really why the NVIDIA stock has almost doubled over the last 3 months, is because people are seeing how pervasive these tools are going to be in really any vertical of the economy. So from mobile to software to healthcare to really anything that we do, you're going to have some kind of AI component, and who's going to provide that to you, basically?
So in the meantime, NVIDIA, which is a $795 today. I mean, Loop Capital put a $1,200 target. Does that have room to the upside in your opinion?
You know, it's hard to chase stocks.
Because it certainly has run up, to your point.
Yeah, the valuations are real, you know, and you know, I think right now everyone is excited. We're in that excitement phase.
Right.
But you have to look at valuations. You have to understand, hey, I know earnings are growing quite a bit, cash flow is growing, all that. But however, you got to look at valuations long term and see if that makes sense for you.
Yeah, and you said that they're pegging the market opportunity as all these upgrades of the GPU infrastructure is happening, right? And that's another part that just sort of fans their flame, right? And it helps them along. In the meantime, you do have a few names that you're focusing on as potential winners. A name like Oracle, why?
So when you think of the Gen AI, obviously the infrastructure is all about NVIDIA, it's all about H100 and chips. But if you're looking, if you're any other company out there and looking to have access to some of these
Right
chips,
to the
and
200.
have a relationship with NVIDIA, you will go to a company like Oracle, who's going to provide you the access to that infrastructure and being able to run these AI application within your own system. So I think what we're going to see is we're going to see the move to the application phase where companies will use Oracle or other companies to be able to have access to these AI capabilities.
Yeah, you had Adobe in there. We're showing these cloud stocks. You have Adobe in there too, right?
Yeah, Adobe is also another company that has been doing a lot of great work in technology. And now, besides their relationship with NVIDIA, has really the tools and the ability to really help companies master these AI tools and become very proficient in increasing productivity and really being much better at managing their AI infrastructure.
And where does ServiceNow fit into this story?
So ServiceNow is a company that helps the enterprise better, be more efficient, and help with productivity. So what happens with companies like ServiceNow is, and NVIDIA talked about their partnership there, is really if you are needing to set up some kind of AI structures within your enterprise, you have to go to ServiceNow, and ServiceNow will help provide those tools and really help optimize your operations.
Yeah, I see we had Palo Alto Networks on there, CrowdStrike. I mean, there's so many names. We're going to be talking about CRM, so Salesforce, so we'll have a lot of names that we're focusing on. Before I move away from this group overall, I mean, the upside potential, some of them could be frothy, but what kind of upside are we seeing for this group?
I mean, again, it's a new cycle that's starting, right? If you think about technological strides,
But 3 to 5 years, something's got to happen, probably.
Right, even longer than that. I think these once in a generation type of cycles
Bitcoin.
and it could take 5 to 10 years. We're basically at the tip of the iceberg here because, again, we're only seeing the infrastructure spend right now. We don't know what's going to be the next Netflix or the next Uber. If you remember, after cloud, we've seen all these companies come up and really create a massive amount of shareholder value. So I think that's what's going to happen with the AI revolution.
I mean, if people don't invest in tech, maybe they'll be missing out on some moves or innovation, I guess, in the next decade.
I don't think you can't not spend on tech. It's 40% of the S&P, right? Yeah. So I think you have to be in it, and you have to think about these tools as a way that's going to help every business. I don't care what you do. You have to have some kind of AI component in your operations.
Yeah, we've had a lot of conversations about EVs, and I just wanted to circle back. I don't know if you're just sort of taking a step back from Tesla, like everybody seems to be doing. Over 1 year, Tesla's down 1%. Thoughts on EVs and Tesla, which has been a real 6 months down 13%. Oh, look, we know that Tesla went from 300 to 200. Yeah. There was hopes for it to go higher. I mean, any thoughts there?
Yeah, it's been a rough time for Tesla. I think we haven't made money in that stock for the last 3 years, basically. But I think a lot of the issues are self-inflicted.
Who is this guy?
Tesla has reduced the price of their cars many times over. Created doubt about their margins or their growth rates.
Show your face.
The other EV companies, so the whole sector is struggling as a result. And Elon is frankly doing a lot of things that are not very pleasing to the consumer. I think there is a lot of negativity that he's been building out.
Who is this guy?
Right. Right. Yeah. And look, I mean, you know, a lot of folks saying he's distracted, but Tesla has been.
Hell no, he's he's in his prime.
Li Auto, for example, doing great.
Yeah.
Hey, you.
Did not do so well. I would always enjoy our
Meet you
conversations,
outside.
especially in person when you're here on the East Coast. Hatem Diab, thank you so much for being with us of Gerber
And wipe that smile off your face.
Coming up next, we're going to take a closer look at Li Auto and why it has an up arrow as well.
I
as
protest.
Salesforce. And, how about why Berkshire?
I don't want to hear about it. Not until that guy's kicked off the set. What does he think? This guy think he's a straight shooter or something?
Bringing you an elevated...
Oh, God. How dare you? If you can count to 3, I think you're able to trade with me. Except for that guy. He's not allowed to. Retail traders may help you. Yeah, Jim. I heard you standing up for me there. I'm Elon, and I'd like to see if you'd like to come work for me, be my chartist artist. Yeah, I've got Dogecoin, and I need someone to be charting my Bitcoin up. I think you're the man to do it. Your honesty and your integrity is overwhelming, and I'd love to have you as part of the board members of Tesla if you have the time. Well, Elon, I am a busy man, but I think I can find time.
I want to continue to follow some of the top stories. Tom White, senior options contributor of Schwab Network, is with us. We did see the numbers out of Li Auto, a big surge for the stock. Your thoughts on that report that we got from this company?
Yeah, getting a big pop, 17-18% today. It's up about 48% so far this month also. So this has been the outperformer in the EV space, Nicole, as
Tom
Tesla,
White is
Neo,
now on.
Xpeng,
Tom
all been
White.
under pressure, but those are getting a lift today, all in the back of these results. Some of the data on the results, the ADSs, and that's American Depository Shares, 60 cents from sales of $5.8 billion.
Whoa,
Wall
that
Street
ain't
was looking
bad.
for about 44 cents and 5.5 billion, so a beat on both the top and bottom lines.
That's
A
real
year
good.
ago, ADSs were 4 cents on sales of only 2.5 billion, so you saw a big jump there. Vehicle sales increased 133% to about 5.7 billion. Mainly attributable to the increase in vehicle deliveries. Margin grew by 270 basis points year over year.
LI.
Gross margins expanded about 330 basis points, or about 23.5% year over year. And their fourth quarter operating margin was in line with last year's results at about 7.3%. The CEO did come out and he said he's undeterred by the fierce competition in the NEV market in China and their 3 series models all grew by about 182%, reaching
Very nice.
76,000 vehicles last year. Now, looking ahead, they expect to deliver about 100 to 103,000 vehicles in the first quarter. That's up from about 53,000 in the same period last year. So they continue to see growth there. Investors have been concerned about rising EV competition, BYD being the leader over in China, and slowing demand growth for a lot of the automakers in the EV space. But this quarter kind of showed there might that the fears are overtaxed here a little bit, and that Li Auto, basically blew out numbers on the top and bottom lines, and they continue to see more demand for their EVs.
Yeah, and we're showing the rest of the names, Rivian, Tesla, NIO. I mean, the whole group is higher on this news, such a different picture than last week when we heard from Rivian and Lucid, and the pressure was on the group. That being said, it was interesting to hear from Hatem Diab, too, a little less love for Tesla.
Yeah.
Thought that was very poignant, because they've been pounding the table on Tesla for many years. That being said, can I turn your attention over to Salesforce, and we're starting to see some 3 handles on those price target bumps, right?
Yeah, a lot of price target hikes over the last week and a half, 2 weeks, but we typically see that going into reports out of some of these tech names. They report earnings on Wednesday after the close. Expectations are for about EPS of about 226, $9.2 billion in revenue. That's about a 10% climb from year earlier. That would represent the slowest revenue growth for Salesforce public in
Anybody know how to read Chinese? You studied Arabic? Well, that's pretty good. Ooh, that's an ugly looking car. I don't know, man. I think these things are ugly. The Mega is real ugly. No, I might get this one. Oh. Let's see. Dun dun. A little dun dun shuffle in.
Starting with the bottom line, earnings were strong. I mean, considering the number of challenges, revenue was almost 21% revenue growth for the year, which for a company the size of Berkshire is very impressive. the insurance franchise and the reinsurance franchise continues to be a growth vehicle. The shares are down this morning. I mean, I think part of the pullback, the stock has been strong year to date. The S&P is down a little, but I also think investors are sort of mulling and weighing the impact that Pacific
We have a triple top.
Wildfire liabilities may have
On
on
LI.
it was, it's a pretty significant liability. It's not a material adverse impact on Berkshire, but I think that may be weighing on the shares this morning, which kind of masks an otherwise decent year for the company.
Broke it on the weekly.
Yeah, and I know he began this with a tribute to his longtime partner, confidant, friend, Charlie Munger, and obviously a good point there. And may he rest in peace. Buffett is 93 years old, and his $900 billion company, Plus, is a fortress, he said. Berkshire is built to last. But try to giving investors sort of this hold off, don't think that this stock is going to be a high flyer. I mean, if someone were to buy into Berk, would you have a buy rating, right? What should their expectations be? Yeah, tell me their expectations, because, I mean, this is not going to be a high flyer, but it is built to last, in his words.
It's not going to be a high flyer, but my sense is revenue growth is going to be 12 to 18% next year. It could be higher if they do an acquisition. I think part of the letter was Buffett's way of sort of, telling investors, curb your enthusiasm. We're a huge company. We're not a growth vehicle, but we've got a strong balance sheet. We've got plenty of cash. He also tamped down a number of expectations that are, or speculation that were sort of, kind of playing out in the media, whether or not they were going to acquire Oxy. He sort of emphatically said, we're not acquiring Oxy, nor are we outright acquiring the Japanese trading houses. They're just good investment vehicles. I think there is a source of frustration that the M&A environment is very competitive. Nothing's cheap. But I also think that they will find deals. They're not going to be needle-moving deals. Given the size of the company, it's really hard to move the needle. But that doesn't mean they're not going to still be out there doing, selective bolt-on acquisitions, as well as selectively buying back their shares. Again, they don't pay a dividend. That is kind of a big knock on the company, but that's their capital allocation model.
Right. Also, the succession plan, something you have in your notes, and of course, when people are up in their years with a lot of wisdom in their 90s. People want some more clarity, and you had talked about Charlie Munger making that slip about Greg Abel, and do you think people would be happy with that kind of transition? Is there anything more pertaining to the succession plan that you'd like to add here today?
I think that come May 4th, when they have the annual meeting, I think investors are going to be really attuned to see who's visible and who's speaking. And one of the points that Buffett made in the letter was, come join us in Omaha, where Ajit, Greg, and I will be on the dais taking your questions. Berkshire actually has a pretty deep management bench, a couple of layers or levels down from this team. I think it would behoove them to sort of amplify how deep the bench is.
Yeah, and just the final thoughts here. I mean, I saw your pie chart that you had there, and you mentioned insurance and reinsurance in one area that has done well. Is there any allocation that, and not doing Oxy all the way? I mean, he made that pretty clear. Is there anything that you think that they maybe should change, or you generally like how they have this? You could have, economic sensitivity throughout this year if you also have the Fed cutting rates. I mean, I don't know. Let's see do we get the soft landing? Do we get a recession? Big picture, final thought?
Yeah, there's a lot of puts and takes at Berkshire, but I think at the end of the day, the core insurance franchise has some really positive secular growth trends. I think GEICO is at a strategic inflection point, so we should be mindful of, the direction that takes. Investment income may not be as high, but I think some of the economically sensitive businesses where margins have been hurt by higher input costs could see wider margins if inflation continues to ease. Overall, I think the shares are poised to outperform.
Yeah, it's great to see you. Thank you so much. Kathy Seifert of CFRA.
Take care.
Still ahead, we'll bring in our panel to discuss Domino's Pizza and the stock setting some new highs, 52-week highs on that strong earnings report. Let's talk about all those restaurant stocks, make you a little hungry, but truly looking at which ones are the buys in the group. We'll be right back.
What the heck? Tesla back under 2. Right back.
The macro environment for Domino's is very favorable, and they're doing a lot of Domino-specific things that increase visibility into the comp, including
Domino's
transaction growth. Both in the near term and through the medium to longer term too. So number one is the Uber Eats rollout. Next year we'll have DoorDash rollout. An incremental focus on value. The new loyalty rollout, which you can get stuff for less points, which is driving transactions, and then you can focus on operational initiatives to drive speed of service. Now that they're the delivery drivers are actually full. So previously they had issues with having enough delivery drivers. Now they have all the delivery drivers they need so they can drive speed, et cetera, et cetera. Yeah. So a lot of good things happening at the same time.
Yeah, and Dan Aarons, you have this one in your Eats portfolio. It's in the top 10. I'd love to know if it's in the top 5, top 3. The dividend, the buyback, there's a lot going on, and it seems to have been, and shows that it's a winner, at least for right now, up over 6%. Your thoughts on this name? You'll continue to hold this in a top slot?
Certainly. It's in our top 10 holdings. Last month in January, it was one of the top 5 contributors to the fund's positive performance. And when I say the fund, I mean our Advisor Shares Restaurants ETF, EATS. So Domino's is doing a lot of things right. We like it. They have, compared to a number of their competitors, direct competitors, they have better technology. They're more efficient. They're more streamlined. I even have one fairly close to my house, and we get it every once in a while. I'm impressed by their quality and their efficiency. And in this quarter, as you alluded to, they announced a new stock buyback of about $1 billion, and they're increasing their dividend by about 25%. So they're doing an awful lot of things right. And one last piece that we've talked about inflation a lot in the restaurant category. Domino's hasn't raised their prices much. I think they still have a lot of good discounts, a lot of good bargains.
Oh, really?
They had a general beat on most of their earnings metrics this past quarter. They're hitting on all cylinders. We like them.
Yeah, and just quickly, Nick, you have Cake, Cava outperform. You're pulling back on Chipotle and Wendy's. Why?
Well, Cava is a name that everybody has to own right now. If you're a small or mid cap portfolio manager, they're one of a handful of names that structurally are going to are positioned to have positive transaction growth in the near to medium term. Cheesecake, much of it's a margin story, but it's still working, so I like those guys. Chipotle, I pulled back a few months ago, mainly because after Q1, they have to start to anniversary this carne asada. And so, I think people are underestimating how much of a comp driver the carne asada by itself was. It's also going to coincide with the big California price increases, with the FAST Act starting on April 1 in California. So there's some issues there that I'd rather not be in front of around Chipotle.
Yeah, understood. Thank you both so very much. Exciting always to take a look at this group. Dan Aarons of Advisor Shares, Nick Setian of Wedbush Securities. Thank you. That's going to do it for us here on the Watch List, friends. Thanks for being with me. I'm Nicole Petalides. Every single day, live 11 a.m. and 2 p.m. from the New York Stock Exchange here on Schwab Network. But keep it right here. The Dow's down 19. Market on close next.
Yeah. Come on, get on down here.
Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
Carl is the only...
Oh man, new commercial. What time is it? We have 3 more minutes to power hour. Less than 3 minutes. Tesla's about to pull back to the VWAP. Tesla.
idea when everybody's cell phone service was going to come back, but guess what? It's back now all of a sudden. A solar flare is not going to knock out.
Oh, we pulled back to support. I think we did here. Yep. Ladies and gentlemen, we just pulled back to 1, 2, 3. Are we ready to dance with me? Oh yeah. I think we are. Well, would rather be a star. Bam. One bits, two bits. And the freebie. Up 10 cents right now. Uh-oh. I was. Might have to get out of this one fast. Come on. Retreat. Oh. They can easily drop if it doesn't hold. Some kind of noise. Oh, I know what's on. Oh, I'm looking at the wrong one there. Okay. Right now, I wouldn't be in this trade, but I'm in it. Huh. Ought to get out. I'm ahead here. Okay, 115, baby. Feeling a little bit more bearishness this week than I usually feel. Might just be feeling weekend and getting the chickens out of the hen house. See who's going to stick around for the feast this week. Break it. But now we're bearish. Oh, you think I'm joking? You dirty rat. Break it. Boom, baby. That's what I wanted to see. See? That's it. Come to Papa now. Let's go ahead and get on up at 200. I don't ask for much. Uh-oh. Uh-oh. Anybody want to say anything? That's what I thought. I know. How does he do it? How does he do it? 135. 140. Come on, give it to me. Does anybody see the 3? I'm serious. 1, 2 bits, freebie. Any businessman would make a business decision as we approach the 200 SMA. Am I correct? Say yes. That guy, he's psycho. Affirmative. I was waiting for someone to say he's a psycho. The 200 SMA would be an exit idea. Dang, this is the only one I have to trade all day. A lot less homework, a lot easier on the head. $145. Oh my God. Now we're talking money. Okay. The crowd doesn't know what to do here. Jimmy knows what to do. Jimmy did it. Ladies and gentlemen, I just exited my SPX on the 123 off the 200 SMA. Any questions? Leave them at the front door. If you can count to 3, you can learn to trade with me. And if you can count to 4, you might just get a little bit more. Come on, baby. So here's your 1. 1, 2, 3. Let me repeat. 1-ups, 2-bus, 3B. Damn, 190. This is really getting out of hand. One, 2 bits, and a freebie. Did anybody say all out at 190? Nailed it. Good job. Yabba dabba doo. Man, it's so nice. 85 to 140. Then we went to 190. I know. Jim, that's $500. That's a lot of money, Jim. It's going to go to 3, and it's going to be much higher. So 1, 2, 3, and if you can count to 4, you might just get a little bit more.
Count to 3 and trade with me, but count to 4 to make much more.
Much more.
China.
It's now 317. I'm trying to figure out the best way to find a vacation all-inclusive special for the 4th of July weekend. How would I do it? Okay, we're pulling back. Jimmy got out at 140. We're now at 80 cents. Okay, here it is. Get ready. Again. Damn, how do you do that, Jim? Well, you got to know when to hold him and know when to fold him. Should I grab some at 80? I think you ought to wait. Jimmy's going to wait. Just too much down here for me to think we're satisfied. Maybe we get down here to that first support level. I grab 3. We'll start off with 3. Come on. Let's just be patient. Might pick these up for 60 cents. Okay, here we go. Okay. Something going down here.
$50 off instead of
Ellie.
Check. I got it all set up for you. Go ahead. Hello, retail traders. May I help you? Yeah, Jack. You checking out the SPX? I got the market makers all set it up for you. So once you get to know Brandon, he's not that bad of a guy. He'll let you in a lot of good deals. But you got to give 10% to the man. That's the only thing we ask. Come on, give it to me for 60. We're looking at the 50-85 strike for 60 cents. That's what the order is in for. She's trying her best. Come on, get in there. We're trying. Might not be a good. Oh, that's Tesla. Oh, no, it ain't. Whew. God, Jim. Well, I didn't get it. Do. Well, here we go. Bam. Jimmy didn't like that sell-off, but we're at 60. Jimmy crack corn, and I don't care. Crack corn, I don't care. A lot of volatility, Jimmy. I don't care. Getting what? Getting another shot to get into Lily? Okay, let me check it out. Lily. Weight loss. 5 minutes. Oh, Jimmy sees a first support at 262. I'll wait. I will wait. I like this spot right here a lot. $65. Then we got a shoulder line right here. Right there. Yeah, that spot right there. Get that one right there. Right now we're at 70 cents. If we break past the 63, I think it's a clear shot to this area right up in here by the 200 SMA. Right now we're getting ready to squeeze. You think I'm joking? Break it. God. No. It's cold. Oh, no. Wow. Jimmy's not looking too good. Easily get a flat tire and get down here to 20 cents. It looks more bullish than it does bearish right now. Almost an ascending triangle here, but not quite. But the higher lows are a little bit steeper than the lower high. So either get out right now. Jimmy says no. Go. What the heck? They ain't doing it. This could look real nasty here for me real soon. "28 more minutes left." We'll get closer later into the day. I don't know if 1-2-3 is going to be that much helpful here now. Because I have another option. That's way down here. Big old couple fat knives. Yep, see? Yep. Bye-bye. Three black crows. There it is, right to my support. I don't know where that goes to, but we're going to find out. I can't erase that. I don't remember what it goes to. I don't know if it's the 21. Could have been the 21. I don't remember now. Good spot. Amazon's at a bottom on the intraday. $238. Okay, Amazon pulled back and hit the 63. I'm not saying it's a buy, I'm just saying we're at a support.
Of the S&P, it's average. That's hardly narrow. I also think that's fair. When we look at the equal weight S&P, right? The equal weight S&P is always the benchmark people use to gauge whether a move is broad or a move is narrow. Equal weight S&P price-wise is making 2.5-year highs here. So those stocks might not be leading. They might not be doing better than Microsoft or better than Nvidia. But to say that the move is narrow, I think is a little misleading.
Okay, no, that's fair. As we discussed at the outset, in some respects too, the idea that the Russell is the place to look. Maybe is misleading or a misnomer.
The Russell.
But how would you view small caps as their relevance and importance to the overall story?
Well, I think they're important from a couple perspectives. Number one, we know what the biggest weights are. Banks and biotech. One of those groups is really in gear right here. You look at the small cap biotechs, they're breaking out across the board. And I go back to kind of what we said at the top. If bond yields were really going to run away, I'm not sure small cap biotech would be behaving so persistently. We went back and looked at all the groups that have the highest sensitivity to bond yields. Small cap biotech comes up at the top of that list. So if yields were going to run from us here, I don't think we'd see that. Secondly, when you look at groups like industrials within small caps, I mean, this has been persistent leadership for 2 years. Industrials broadly have been persistent leadership for 2 years. So I recognize the largest weight, the financials in Russell 2 isn't as probably robust as we'd like, but industrials and biotech pretty good.
Is the story here too theoretically good to pay any mind to what's happening in other global, markets? How do you view that?
I mean, absolutely. There is affirmation globally. When you look at new highs in Europe, CAC,
Japan,
DAX, Japan, China perhaps waking up here after a very capitulative start to the year. When we look at the signals that we use to gauge capitulation, what we saw in China in late January, early February reminded us of late 08, early 09 here. A very, very capitulative message there. Then you have Kospi breaking out. You have Australia breaking out. So, again, this narrative of it's just 5 or 7 or 10 tech stocks in the U.S., I think negates how much global affirmation there is.
Okay, so what you're telling me then is that the house view now at Strategas, we are in the early stages of a broad global bull market?
I think we're in the middle stages of a pretty broad advance. Certainly began in late 22, kind of on shaky terms. Really, the game changed for us in October of last year when you started to see the breadth surges, the momentum surges, the new high expansions. That is much more characteristic of what's a durable advance. You can get a pullback or a consolidation at any moment. We know that. Watch last week's low, 49.50. If you're a tactical player, I think that's a big level in the short term. Very long-term support, call it 4,700, 4,750. I would be surprised if we saw anything worse than that on a pullback.
All right, good stuff. Really interesting. I appreciate it, Chris. Thanks. Chris Verone, Strategas. All right, up next, we're tracking the biggest movers as we head into the close. Christina Partsinevelos is back standing by with that. Christina.
Well, the U.S. government wants to block the biggest supermarket merger in history, or U.S. history, and Domino's promising to give back to investors. I'll explain all of that next.
Wow, it's so confusing. She's going to explain it to us, though. Well, it didn't hold up, did it? Jimmy got out. The Magnificent Seven setting up for disappointment. They're giving you forewarning. They're giving everybody forewarning. And I did that, we're in the third week now. I already told you that 2 weeks ago. You gotta be on your toes. Be right back.
com.
We're almost exactly 15 from the bell. Let's get back to Christina Partsenevelos now for the stock she's watching. Christina.
Well, the Federal Trade Commission wants to block a $25 billion merger between Kroger and Albertsons, arguing the largest supermarket chain merger would lead to higher prices, store closures, and job losses. Albertsons says federal regulators are ignoring the dominance of Walmart, Amazon, and Costco, and said the block would only strengthen them. Switching gears, everyone wants a piece of the pie. Domino's shares are up, almost 6% right now after the restaurant chain increased its buyback program by an additional $1 billion and also said it would raise its dividend by 25%. Domino's also posted stronger than expected sales in the United States. And the big reason was its delivery rollout program using Uber drivers. Uber becoming a critical one-stop delivery platform for customers. Scott.
All right, Christina, thank you. Christina Partsenevelos up next. We're getting you set for Zoom earnings in overtime. We'll have a rundown of the key metrics to look out for and what we'll be listening for on that company's conference call. That's just ahead when closing bell comes right back.
Yabba-dabba-doo. Give you prices that week and pop up locations. Okay, Percy, I'll check it out. Google flights. There's my trip. Oh man, that's perfect time. Oh hell, I love that time right there. That there could be the confirmation of the trip right there. $625 to get me to Belize. Jimmy likes. I remember that next time. I've been searching for years.
Don't miss the free virtual CNBC Women in Wealth event on March 5th, 1 p.m. Eastern, that brings together top financial experts to help you build a better platform and save for the future. You can scan the QR code to register or visit cnbcevents.com/women and wealth. Up next, your big earnings setup, Workday and Zoom among the names reporting in overtime. We'll tell you what to watch for when those numbers hit the tape at the top of the hour when we take you inside the market zone.
You got a double bottom here on SPY. And a 1, 2, 3 setups. Yeah, we could drop a little bit more. The SPX. I'm gonna wait.
We're down the closing bell market zone. CNBC senior markets commentator Mike Santoli here to break down the crucial moments of this trading day. Plus, we're watching 2 earnings out in overtime today. Kate Rooney monitoring Workday, Pippa Stevens on what to expect from Zoom. I'll begin with you, Mike, and I want to zero in on Alphabet. Sure. I want to talk about the tale of 2 mega caps as it relates to the biggest story in the market. The best performing mega cap stock over the last month is NVIDIA. The worst, 10%, 30%, excuse me. The worst performing mega cap stock over the last month, Alphabet, down 10%. Sure. The differences are front and center yet again today.
They are. On the first observation would be, and this goes back to even late last year, said you want to see differentiation in this group. So obviously it's not great that, you know, Tesla has fallen away and Alphabet is lagging seriously and is trading like it's sort of value trappy on some level. On the other hand, I think you also have to go to the fact that earnings momentum is behind all the parabolic moves in things like NVIDIA and Meta. So those have been the ones setting the pace, and Alphabet is conspicuous in not really participating there because there's questions about longer-term earnings momentum and cost discipline and all the elements of the story that are in there. Now, whether it has broader implications in terms of hurting the position of the aggregate index and the market as a whole, it's not clear that it does just yet. It's massive, it's widely held, but it's sort of being eclipsed by the other better fundamental stories. It could change. You can't have too many of these really buckle. But for now, it seems as if you have a market that probably should cool off on some level. Semis are running on tilt. They're up again 1.5% as a group today. But I don't think that Alphabet soils the overall picture.
You make a great point. The Mag 7 is what you're saying can become the Mag 5.
Yeah.
It just can't necessarily become the Mag 3 or 2.
Right, exactly. Well, and certainly in the absence of other parts of the market doing better. And we've seen that. Right now you have Berkshire Hathaway is actually having some sell the news response today, but it's bigger than a couple of the mags at this point. And
man, I would love to take these 3 more minutes.
But if you have too many of them, it's
double
be
bottom.
Like, okay, we get
but it's just too early, too late.
Type of instinct kicking in, and that might cause some actual selling, which we're really not seeing here.
Yeah. Kay Rooney, workday after the bell. What are we expecting here?
Hey, Scott. Yeah, so the stock hitting an all-time high today at about
You have to be
fourth
fast.
quarter result and multiple results after the close. Analysts
Right
here
now.
looking for an adjusted earnings per share (EPS) of $1.47.
See,
That's on
paper
revenue
trade.
of $1.9 billion. Subscription revenue is really the key metric to watch for the workforce platform. Guidance is most likely going to come on the analyst
No,
call. That's what we
not even that.
typically get with this name. Workday has a pretty solid track record of beating expectations. Its revenue has beaten consensus
Right here would be the
all
spot.
of the past 20 quarters, while EPS has beaten consensus in 18 of the last 20. Analysts over at Morgan Stanley have a pretty positive view on Workday heading into the print
50.75 at 25 cents.
And when they talk about
Paper
muted
trade.
investor sentiment, the stock is up 12% year to date, nearly 70% in the past year. Scott, back to you.
Not that far.
Paper trade. 50.75 at 25 cents. Now it's at 15. And the bell's getting ready to ring.
Things to watch include enterprise numbers.
I just
paid
lost
Zoom phone users,
$500,000.
As well as contact center, since all three are key drivers of the company's growth. Online churn also important. BTIG estimates that it's at roughly 3% per month. Now, the company has never missed on earnings and only once on revenue since going public in 2019. Shares down, Scott, about 0.5%. Back to you.
Yep.
Appreciate that very much. Good to Stevens. I turn back to Mike Santoli. Wondering what you make of sentiment and maybe the technicals turning a little bit. Chris Verone, earlier, Strategas House View, positive. Bank
They say 2 minutes to go. I say 1 minute to go.
Suggests this could last longer than 24. Even Wolf, which has been more negative than most for a while, this can go at least till spring.
Yeah, I mean, if you defer to the trend and what the trend is telling you, then you say, this market is certainly innocent until proven otherwise. And so you can kind of go with that and say all pullbacks are probably kind of random and probably not that damaging at this point. Now, sentiment has gone, certainly in positioning, has gone from being an asset to the bull case, I would say 5-6 months ago, to being neutral at best at this point. The Goldman Sachs positioning indicator got to the stretched level recently. That combines retail and other things. If you look at a chart of the CBOE, the stock of the options exchange, it's taken another leg kind of vertical
Ding, ding, ding.
to the upside at this point. That's because...
There you go. It was kind of a fun day to trade today. It was bearish. Went sideways for a long time, kind of. Little ups and downs, but nothing to really catch a hold of. And I could feel that. I felt that when I come in this morning. One, we had too good of a run pre-market. So you got to kind of, okay, Jimmy called irrational exuberance a couple weeks ago, and we've been up and down ever since. And we could get a surprise correction of a little bit more while we're waiting for something. While we're waiting for the Fed. Everybody's got their answer on the earnings almost. I hear gibberish that earnings were good and better, and I wasn't hearing that when they were coming out. I was hearing disappointment on earnings and things like that, so I don't know. I think they're just so many mixed messages. You got to learn how you trade your own strategy. And I like how Mike trades. I mean, SOUN, he's been watching that for more than just a day. And that's what you got to do. You got to get in there and bury your eyes. Have a top list of 20, 10. If you're new, make it no more than 12. Stocks that is mentioned every single day. And I can name them off to you right now. They're every single day. You know what they are. Meta, Microsoft, Tesla, Apple, NVIDIA, MSCI, AMD, JP Morgan. Lilly. Walmart. That split today. Walmart's a long-term investment. Walmart's up. I mean, you get a pullback like that today, and it was because, it's split. Damn, I'd have jumped on that. I knew a guy that did it with General Electric. He 3 splits, and he ends up third split, and it didn't take a month or two to get back to the original price. He was retired. He said, I'm done. I said, yeah, I got split to $80, 86, and we're at 150 right now. I'm getting out. I'm retiring. And all he had was GE. He held it for 20 some years, and then there for about a 5-year period, it just kept splitting. Split. It was number one, GE. And that's kind of like Amazon. I mean, not Amazon, but AutoZone. Amazon will be back up there one of these days. Now, one guy got in here and said it today. He said, just if you're new to trading, get in here and just watch the ones that have money. That won't get hurt paying out dividends. And I was impressed with Zoom. $7 billion cash. God. I mean, that's a catalyst for this thing to start bouncing. That alone. $7 billion? You gotta be kidding me. Workday, Doom, not enough work going on here.
Your EPS was a beat by 10 cents. This is the adjusted number, $1.57. That was on revenues of $1.92 billion. A beat as well for Workday. But again, the big headline here, some M&A for Workday acquiring HiredScore. They talk about some of the AI assistants with this HR software firm. Again, but a solid beat for Workday. No guidance, though, in the release here. Quite
no guidance.
But we'll keep an eye out for that, guys.
There's guidance right here.
Okay, Kate Rooney, thank you. Adam Christofouli, I'm going to go there with you right now because we got shares of Workday down about 7% after hours. We know it's been a mixed picture.
There's nothing mixed about this at all.
Enterprise tech. But the fact that we do have an M&A
a company I know nothing about, and look at bringing in $7.7 billion. Earnings per share beat by 10 cents.
Assets. I'm not sure the size of this acquisition that they're making, but this is definitely an area where they have exposure already. It makes sense for them to
right to the 200, boy.
The HR aspect of the market. I think For the stock, the key will really be kind of guidance. Like you said, we've had mixed signals on enterprise tech. You had Cisco and Palo Alto Networks, both of which were somewhat disappointing. Unclear if that's impacting Workday's outlook. We get Salesforce later in the week as well. So I think commentary around guidance, both quantitative and qualitative guidance, that's really going to be key, I think, for the market. But all tech companies are ramping.
Get off the speakerphone. That sounds very unprofessional. Well, I see a tweezer bottom right here, and that's where we're going to put alert. 10-4. 286.75 on Workday. 286.75. I should have typed in tweezer bottom, and I'm going to do it. You can't stop me. Tweezer bottom, boom. Yeah, we'll get back down there again. You watch. That's a no-brainer. We might even get down a little bit lower. It's a lot of money.
Small cap earnings as we go forward.
Adam, it seems like there's a couple different ways looking at post NVIDIA earnings. One is, hey, the AI trade is still alive, and that helps smaller companies that are trying to innovate in that space. But the other way of looking at it is maybe bigger is still better, right? Because even though they're already big, they're still managing to grow significantly. Which do you think is having the bigger impact on stocks right here?
So I don't appreciate sexual intertones when we're talking stocks. For I am going to report you to the SEC.
From these dominant companies, the earnings numbers from all of them pretty much. Meta has spectacular results, NVIDIA was spectacular. They've been really great, but I think if we're going to see a rotation back into small caps, it's really going to come down to more macro factors, specifically disinflation. There was a great article in the New York Times this morning talking about the real estate component of the CPI and the PC, which is probably the single biggest question mark for this market. If we are going to see further disinflation, you have to see those rent, owner-occupied components of it really start to move lower. They haven't yet. They're likely to, given how rents have been progressing over the last several months. But if you do see that happen, you're going to start to
see you later, YouTubers.
More similar to what we saw in November or December.
I'm going to go ahead and get on out of here. We did pull back to my support right here to hold, but I didn't. I'll wait until tomorrow. We'll do the 3-day rule on Workday. They'll probably go through this and talk, and they were pumping this up. This will probably bounce back pretty fast. Workday. Catch you later.